morning all. So we'll be revising costing, full syllabus in the sense, of course, few things will not be covered. I will tell which are those. So target is to complete it by tomorrow. Most probably it will get over by tomorrow around 16-17 hours. If time permits and if syllabus won't get complete, then we can see it in the third day also. Generally it won't go, but still. So what are the things will be covered in this basically? So first chapter, introduction to cost accounting. In that basic, that theoretical stuff, that won't be taken care in this revision session, that you have to read on your own, that one. And of course, element and classification of cost, those things will be seen, no doubt in that. And important cost accounting term, few things we will see. And preparation of cost sheet and ascertainment of profit, that will be taken. And of course, module 2 completely we will be discussing. Module 3, cost accounting standards. If time permits, we will see it. Otherwise, read it on your own. Not much things to revise in that. Module 4 we will be seeing. Module 5 will be seeing. Module 6 will be seeing. Sir, are we going order wise? Need not be. Depending upon the time slots remaining on that particular time, before that particular break and all, based on that, I will decide which chapter to go for. And it's not something like you guys don't have any idea about the subject at all, right? So no need to go like exactly in the same order. Accordingly, we'll see. Okay. So, sir, what are the things will be covered in this? Of course, what are the topic we will be taking? Of that 100% conceptual clarity, so that we will be taking. Along with that, last 5 past year papers discussion again, and around 9 MTP discussions will be there. Okay, model test papers. Sir, are we going to get any additional materials here? The answer is you will get this particular thing. PYP and MTP merged one. This thing will get question paper. And which question is of which chapter, sir? When we are solving, you will get to know. And I think you already marked it, right? Okay. So first I have attached the question paper. Below that only, relating to that particular question paper, what is the answer key for that? That I have attached. Okay. Sir, short notes etc. will be given, sir. The answer is no. If you want, you have to prepare your own short notes or a running notes. Okay. Can you ask the department to send it now, sir? We can use it while marathon run. I think I can only share it. Give me a second. Okay. That they will share in a while. Now, so what are the materials you are going to use, sir? The basic material, study material, which I have shared it to you guys already. That thing. Along with that, some revision kind of stuff we might see. Okay, chart book kind of stuff. Now, if you guys are ready, shall we start? Okay, done. Before starting, if at all anyone seeing me for the first time in YouTube or so, myself Rastrith, I will be handling your costing as well as management accounting paper. Okay. Overall, don't be scared. But oh sir, you are only coming for management accounting also. I don't know. Now listen. So basically guys, what do you mean by cost? Cost, any expenditure what we incur to get any goods or service, or in exchange of any goods or service, that particular expenditure we call it as cost. And ascertaining how much is the cost for a particular product, ascertaining how much is the cost for particular product, that process we call it as costing. Okay, keeping the record of these costs, keeping the record of these costs, that thing we call it as cost accounting. That thing we call it as what? Cost accounting. How does this, costing came, all those things you go through it once. Sir, why we want to keep cost accounting, or why we want to do that cost accounting? Why we want to keep the records of cost? What are the objectives of cost accounting? Guys, it helps you in ascertaining the cost per production, ascertaining the cost of the particular product or service. When you ascertain the cost, if at all your selling price process is cost plus profit, automatically that will give you selling price also. And when you keep the track of cost, you will be able to control the cost. You will be able to reduce the cost. That is, it helps in cost control, cost reduction. Sir, what is the difference between cost control and cost reduction? What do you mean by cost control, guys? Trying to keep the cost under the standard, what we determined earlier. Correct? That is what? Cost control. And once your cost meets that standard, then the cost control will end there. If at all your cost is well within that limit, there your cost control ends. But cost reduction is continuous process. There is no end to cost reduction. You will be revising your target again and again and again. You will be trying to improve yourself again and again and again, trying to reduce the cost as much as possible. There is no end to it at all. That is your cost reduction. And also, it will help you in analyzing division wise, activity wise and unit wise profitability, and locate wastages and inefficiencies if any, and present relevant data to management for decision making. And all you have seen in marginal costing. So this is going to give that information to management. Got it? So what are the different types of cost accounting systems are there? That is different way of maintaining the cost. One is historical cost. That is whatever happened, that numbers we are going to take. Okay. Just like any other accounts. Absorption costing is basically actual numbers you might not take. You will take the budgeted number, and based on the actual result, you are going to charge some amount and all. That is absorption costing, which majorly we will use. Correct? Majorly we will use in our costing. You have seen that. Direct costing is only direct expenses will be considered, and fixed expenses are treated as a periodic cost. Basically, your marginal costing. And standard cost is basically, first only will determine how much should be my cost, predetermined cost, and applying that to determine the cost and all. That is standard costing. Uniform costing is basically whoever is there in that particular industry, whichever the firm is there in that particular industry, everyone following the same kind of accounting, cost accounting. That we call it as uniform costing. Okay. All these things you go through once. And this is important from the examination point of view. Difference between financial accounting, cost accounting, management accounting, these things. Sir, yeah. So, types of cost, you can divide it into two. Historical cost, economic cost. Historical cost means what you actually incurred already. That is your historical cost. But coming to economic cost, try to understand. It is nothing but your opportunity cost, notional item. You didn't incur actually. You didn't incur. But remember, in cost accounting, we will even consider the opportunity cost as the cost. Keep that thing in mind. Okay. However, for direct expense and all, it won't be considered, but for overheads and all, surely it will be considered. Got it? So it is nothing but a opportunity cost. Nothing but opportunity cost. What do you mean by opportunity cost, sir? Cost or the amount or the profit or whatever the value we left by choosing next best alternative. If at all I chose alternative A, I would have made 10,000, let's say. If at all I choose alternative B, I will make 12,000. Now let's say I will choose B, then I can't choose A. Because of that, I am giving up 10,000. This is opportunity cost. Got it? And few other costs are there, like sunk cost. Sunk cost means what, sir? We have already incurred it, or we have committed for it. We have already incurred for it, or we have already committed for it, which is irrelevant for decision making. For example, you guys already paid a fees for your course. Whether you attend the class or don't attend the class, will that fees is anyhow going to affect the decision making? No. If you attend also, it's gone. If you don't attend also, it's gone. You already paid for it. Correct? That is your sunk cost. Sir, let's say this marathon is an extra cost. Let's say we have to pay 2,000 rupees. Now, is it sunk cost or is it relevant cost? Relevant cost. Because if you pay, then you can attend. If you don't want to attend, don't pay. That is relevant cost. That is the difference between sunk cost and relevant cost. Hope it is clear. So relevant cost will be considered for decision making. Sunk cost will not be considered for decision making. One more thing is there, basically called as imputed cost. Imputed cost is again the notional cost, or you can call it as opportunity cost, internal cost, not explicit cost, not out of pocket cost. Money is not going outside. Money is not going outside at all. Money is there with us only. But for the accounting purpose, it will be treated as cost. Cost accounting purpose, it will be treated as cost. That thing we call it as imputed cost. Avoidable cost, non-avoidable cost. Sir, the cost which you can avoid, avoidable which you cannot avoid, unavoidable cost. Whereas controllable, non-controllable, the cost which can be controlled by the management, controllable cost, cost which cannot be controlled by the management itself, that is not non-controllable cost. What do you mean by cost object, sir? Anything for which a separate measurement of cost is required. You have to measure the cost separately for any particular item, anything. That particular item or anything, we call it as cost object. For example, ArivuPro guys, different branches they want to find out. Malleshwaram, Koramangala, Chennai, Coimbatore, like that. What is the profitability of that? How much is the cost for that particular branch? Now, those branches are the cost object. No, sir, in that particular branch, they want to find out course basis, CA, CS, CMA. Now, those courses are cost object. Sir, in that particular course, they want to find out cost for different stages, foundation, inter, finals. In that scenario, those courses levels are cost object. Got it? And how you denote the cost? In what terms you will denote the cost? That particular unit, we call it as cost unit. On what terms you denote the cost? That particular terms, we call it as what? Cost unit. For car manufacturers, car. For educational institute, it's number of students. Per student cost is how much? Like that. What do you mean by composite cost unit? Sir, as I already told you in service costing, if you remember, more than two cost units together, we call it as what? Composite cost unit. Because you know that Bus if you take, you are not going to charge on kilometer basis only. One is kilometer basis. You are not going to charge on only kilometer basis. Why, sir? In 1 kilometer in the bus, do you think only one passenger will be there? First, let's say bus will cost you 10,000 rupees. Okay. To go for 200 kilometers, let's say. It cost you 10,000 rupees to travel for 200 kilometers. Now, how much it will cost per kilometer? Correct? Hello? 50 per kilometer. Now try to understand. Can I charge this from only one person? No. I have to charge from all the passengers. So again, what we will do, let's say number of passengers are 25. This 50 will be further divided into 25. That is rupees 2 per passenger kilometer. That is for each and every passenger. For each and every kilometer, we will be charging rupees 2. How much we will be charging? Rupees 2 for each and every passenger for each and every kilometer. Now, unit, did you consider only kilometer? Or did you consider only passenger? No, you considered both passenger as well as kilometer. That's why we call this as passenger kilometer as a composite cost unit. More than one cost units are there. Multiple cost units are considered to determine the cost. Got it? Hospital. Can you charge whole hospital expense to one particular patient? Whole month expense to all the patients? No. You should consider how many days they were there. How many patients were there. That's why we call it as patient days. Hotels, lodges, boardings. Can we charge everything to only one particular guest? Whole year expense to that particular guest? Okay, whole year expense to whoever the guest came on that particular day? No. You should consider how many guests were there. How many days those guests were there. Number of guests as well as rooms. Or rooms as well as number of days. That's why we call it as room days. Hope it is clear. Sir, what do you mean by cost center, sir? Basically, whole company or whole organization responsibility cannot be like, given to only one person. So what we will do, we will bit of decentralize the power bit. So what we'll do, organization will divide into different centers. Okay, for decision making or to have a better control. That we call it as cost center. So, responsibility center is that where we will hold someone responsible for that particular department based on responsibility center. Our responsibility center is divided into 4. Cost center, profit center, investment center, revenue center. Cost center, profit center, revenue center, investment center. Here how it works, sir. Cost center, they are not at all bothered about how much revenue we make, how much investment we make, etc. Their concern is only one thing. What is it? To make sure the cost is well within the standard cost. We have determined some earlier cost. Now this must be my cost. Your work is very simple. To make sure cost is well within that. Your production department, purchase department, all those things falls in this. Whereas your revenue center is where they are liable or responsible for generation of revenue. They are least concerned about incurrence of the cost. Their work is very simple, to generate the respective revenue, how much ever the target we have given. Their work is only so much. Your sales department. Okay. Profit center is the one which is going to have responsibility over both profit as well as, revenue as well as cost. Revenue as well as cost. Okay. So they are liable for generating a profit. Basically, if you take the group company as a whole, then their subdivisions will be there, no, in that group company. different companies. Now, the different companies you can treat it as profit center because those companies are responsible for generating revenue as well as incurrence of cost. For example, if you take Reliance, in that Reliance Jio company, if you take, they are your profit center. Why, sir? They are responsible for generating revenue as well as incurrence of cost. Investment center is all about responsibility center, which will be there for investment purpose. They should take the right call. Minimum ROI, return on investment, how much we are expecting, they should make sure that is achieved. Guys, what do you mean by cost of production? Cost of production means any cost which is incurred directly to, need not be directly, any cost which is incurred to produce the product, we call it as cost of production. To produce, not to reach the customers. Because to reach the customers, you have to incur admin as well as selling and distribution. In fact, admin means general admin, I am telling. Generally, your COP includes what? Direct material, direct labor, direct expense, production overhead, sometimes admin overhead related to production. These things will be treated as what? Cost of production. Conversion cost means what, sir? Cost incurred to convert raw material into finished goods. What? Cost incurred to convert raw material into finished goods. That means damn sure the direct material is not conversion cost, because this is basic thing. This one we are converting into finished goods. The cost incurred for this in between, which are those? Direct labor, direct expense, factory overhead are there, no? These things we call it as conversion cost. Examiner's favorite MCQ question. Okay. Sir, what do you mean by overhead cost, or what do you mean by overhead? That I will tell when we are discussing different types of cost. I mean, classification of cost. Cost allocation, apportionment, absorption, all those things, under absorption, over absorption, all those things we'll see when we are discussing overheads chapter. Okay, that time we'll see that. Hope that basic things you are able to revise, recall. Don't ignore it. Go through all these things once before going to examination. Because if you want to attend 100 marks, you have to attend theory also. No doubt in that. Now, next unit, that is element of cost. Based on element of cost, you can divide the cost into two. Direct cost, indirect cost. Direct cost means what, sir? Whatever directly traceable. On the basis of traceability, you can divide it into two. Direct, indirect. Which and all can be directly traceable or assignable to the particular product. That thing we call it as direct cost, which you cannot directly trace it in the final product. That we call it as indirect cost. In fact, indirect cost together we call it as overheads. So basically, direct cost includes your direct material, direct labor, direct expense. Indirect cost, that is overheads, it could be relating to production, we call it as production overhead. It could be relating to administration, it could be relating to selling and distribution, marketing also will take it under selling and distribution only. Got it? So guys, listen. Sir, what are the different ways to divide the cost? On the basis of nature of expense, we will generally divide our cost into three: material, labor, other expense. On the basis of element, or on the basis of nature, we'll divide it into three: material, labor, overhead. Even we will divide it further. Direct material, indirect material, direct labor, indirect labor, direct expense, indirect expense. Direct material plus direct labor plus direct expense together we call it as prime cost. Direct material, direct labor, direct expense together we call it as what, guys? Prime cost. Indirect material, indirect labor, indirect expense together we call it as what? Overheads. We call it as overheads. Sir, what do you mean by direct material, sir? Material cost which can be directly traceable in the final product. Labor cost which can be directly traceable in the final product is direct labor. Any other direct expense other than material and labor, that thing we call it as other direct expense. And which you cannot trace directly or which you cannot ascertain directly, that thing we call it as indirect labor, indirect material, indirect expense. That we call it as overhead. That could be divided into production overhead, admin overhead, selling and distribution overhead. Production overhead means related to production. Correct? That is manufacturing overhead, also called as factory overhead. In fact, works overhead. Correct? And your admin overhead is whatever the expense incurred to administer, management. Selling and distribution is to reach the customers. On the basis of traceability, you can divide it on the into direct cost, indirect cost, which you can directly assignable to the cost object or traceable in the final product. We call it as direct cost, and which you cannot trace, we call it as indirect cost. By function work, you can divide it into production cost, admin cost, selling, distribution, research and development. Remember, cost sheet will be prepared on this basis. Cost sheet will be prepared on what basis? Functional classification. Functional classification. By nature of behavior, it could be fixed cost, variable cost, semi-variable cost. What do you mean by fixed cost, sir? Cost which will be fixed irrespective of level of output. Variable cost which changes with the level of output, and semi-variable is it has feature of fixed as well as variable in it. Correct? It has features of fixed as well as variable in it. Sir, how to ascertain any cost into whether it's fixed, whether it's variable or semi-variable? Listen here. Two levels I will give. Okay? To produce 5,000 units, to produce 6,000 units. Let's say one cost is there. Cost A it is. Let's say 10,000. 10,000. Cost B is there. 20,000. 24,000. Cost C is there. 30,000. 33,000. Okay. Now in this, which cost is fixed cost, sir? The cost which won't change with the level of output, that is A. This is your fixed cost. Which is our variable cost, sir? How to ascertain that? Always remember, variable cost total will change. Per unit variable cost won't change. Fixed cost total won't change, but per unit of course it will change. Correct? Now check whether B, is it fixed cost? The answer is obviously no. Now it could be variable or it can be semi-variable. How to determine, sir, whether it is variable or semi-variable? Very simple, guys. Just check per unit cost is same or different, because variable cost per unit will remain same. Total will change. So first one it is rupees 4. Second one it is rupees 4. So try to understand. Second one is variable cost. Second one is variable cost. Hope it is clear. Third one. 33,000. One thing is damn sure, it is not a fixed cost at all. Correct? It can be variable, it can be semi-variable. If it is variable, per unit it should be same, right? So first one will give you 6 rupees per unit. Second one will give you 5.5. So try to understand, per unit is changing. Per unit is changing. So basically, it is semi-variable. It is semi-variable. Okay, sir, but if at all in the question, like in budget chapter and all, if you want to divide or if you want to find out that particular cost for producing 7,000 units now, cost for producing 7,000 units, how to determine, sir? Very simple. Fixed cost though it is not going to change. It will remain 10,000 only. But variable cost, you know that per unit we calculated it as 4 rupees. Correct? So 4 into 7,000. 28,000. Semi-variable, listen here guys, what you should do. Semi-variable, generally there will be two types. Slab basis, unit level basis. Slab basis means they will only tell up to 50% capacity this much, 50 to 70% increase in this much, like that. Then you have to take that increase, that's it. That whatever they have given in question you should do. Otherwise, if at all they give like this, what you should do, sir? Can I tell one thing here? 30,000 is becoming 33,000. 30,000 is becoming 33,000 because our units from 5,000 it went to, agreed? Cost from 30,000 it went to 33,000 because our units from 5,000 it went to 1,000. Now this extra cost of 3,000 we incurred for producing 1,000 units extra, right? Guys, what is that additional cost we incur to produce the additional units called as marginal cost, which is variable cost? So can I tell that this 3,000 is nothing but variable cost to produce 1,000 units? So what we can do is we can find out variable cost per unit by taking change in cost. 33,000 minus 30,000, 3,000 divided by change in units, 6,000 minus 5,000, 1,000. That means variable cost per unit, we got to know it is rupees 3. Now either take it for the level 1 or level 2. Let's take it for the level 1. You know that total cost will consist of total variable cost plus total fixed cost. Total cost for that 6,000 units, sorry 5,000 units, it's coming to rupees 30,000. Agreed? In that variable cost will be how much, sir? 3 rupees per unit for 5,000 question mark plus total fixed cost. So 30,000 minus 15,000, that will be equal to total fixed cost. Total fixed cost is rupees 15,000. So fixed cost will come to how much in this? 15,000. Now the total semi-variable cost will be for the 7,000 units, fixed cost of 15,000 plus 3 rupees per unit variable cost. For 7,000 it will become 21,000. Total will become 36,000. This is how you are going to segregate your semi-variable cost into fixed and variable. Hope it is clear. Quickly go through this calculations once. Everyone, go through this once. Now, on the basis of production process, you can divide cost into job cost. Job cost means what, sir? Cost incurred to do or complete one particular job. Batch cost, cost of that particular batch. Contract cost to complete one particular contract. Process cost, whatever incurred in that particular process, and joint cost, cost which is common cost, also called as common cost or pre-split of cost, cost incurred for different products, single cost, that will get split off in the later part. All those things anyhow we are going to see in the further chapters. Correct? With that, these basic things we have discussed. Now we'll be starting our cost sheet discussion. Okay, we'll be starting our cost sheet discussion. Before that, take 2 minutes break, because once we start cost sheet till it gets over, no break. So you know that we are going to cover PYP as well as MTPs. So around 14 will be there. Best part is repeated questions will be there. Anyhow, that I will give reference. That's it. We are not going to solve it again. Okay. So guys, what do you mean by cost sheet? Cost sheet is nothing but a statement in which you are going to present cost in a systematic manner, which will of course helps in ascertainment of cost as well as helps in decision making. So cost sheet is nothing but a statement in which you are going to present the cost. Cost sheet is nothing but a statement in which you are going to present the cost. So you can present it for any given period, need not be like for a year only. Cost sheet can be for a week, cost sheet can be for a month, cost sheet can be for half year, quarter, yearly. There is no restriction on that particular thing. And cost sheet, we can segregate it into few divisions. Cost sheet, we can segregate it into few divisions. That is prime cost, gross factory cost. Also we can call it as gross works cost. Works cost, also we can call it as factory cost, cost of production, cost of goods sold, cost of sales. What is it? Prime cost, gross works cost, cost of production, cost of goods sold, cost of sales. Now, if we compare our total sales with the cost of sales, difference will be profit. Difference will be profit. Got it? Now, sir, prime cost includes what and all? Prime cost includes what and all? Direct material consumed, direct labor, paid or accrued, incurred. Okay, direct labor incurred and direct expense. What? Direct material consumed, direct labor, direct expense. Whereas your gross factory cost or gross works cost is nothing but your prime cost plus factory overhead. Prime cost plus factory overhead. And your factory cost is nothing but gross works cost add opening stock of WIP minus closing stock of WIP. Add opening stock of WIP minus closing stock of WIP. Why, sir? Because this year cost, that material, labor, direct expense, factory overhead, we considered only this year's cost. But the thing is, if already something was there in the production, last year cost is also incurred in that. So don't you think this year cost of production should include that? That's why we will add it. Whatever is the closing WIP, that is not yet finished. So the cost should not get segregated in the finished products. That's why we will exclude it. That's the reason we will add opening stock of WIP minus closing stock of WIP. That will give you works cost, or we call it as factory cost. To the factory cost, if we add research and development cost, pollution control cost, quality control cost, administration overhead, guys, administration overhead which is related to production, and if at all you recovered anything from the scrap, that should be reduced while arriving at cost of production. And also primary packing cost should form part of your cost of production. Primary packing cost. Got it? Hello. So basically your factory cost plus research and development plus quality control plus primary packing cost plus admin overhead which is related to production minus scrap recovery will give you cost of production. COP. Cost of production. Sir, admin overhead, what do you mean by related to production, sir? Guys, if at all question is silent regarding whether admin overhead related to production or general in nature, then treat it as related to production. In CA course and all, it is ulta. But here it is, if the question is silent regarding admin overhead is general in nature or no, then treat it as related to production. Take it as a part of COP, cost of production. Whereas, if at all it is mentioned general in nature particularly, then only treat it as a general in nature. Hope it's clear. And now cost of production, we got it relating to produced unit. That doesn't mean that whatever we produced is sold, right? So we will add opening stock of finished goods, will reduce closing stock of finished goods. We'll add what? Opening stock of finished goods will reduce closing stock of finished goods, that we call it as cost of goods sold. That we call it as what? Cost of goods sold. Add opening stock of finished goods minus closing stock of finished goods, we call it as cost of goods sold. Listen, if at all the question tells treat this way, then treat opening stock, closing stock in that particular way. Otherwise, always remember, valuation of closing stock should be done on the basis of FIFO. What do you mean by FIFO, sir? Sold units first consist of whatever was there in the opening stock. That means your closing stock consists of those products which is produced during the period. So closing stock valuation should be done on the basis of cost of production. Closing stock valuation should be done on what basis, sir? Cost of production basis, COP basis. Hope it is clear. Everyone, hello. Now you got COGS to the cost of goods sold. If you add all other general expenses like selling and distribution, admin overhead which is general in nature, etc., you will arrive at a cost of sales. You will arrive at cost of sales. Now, sir, what do you mean by direct material consumed or cost of direct material consumed? Guys, you know this. Opening stock of raw material plus cost of purchase of raw material minus return if any. Return if any, that you should of course reduce, no doubt in that. Minus scrap recovery of raw material. Scrap recovery of raw material. Sir, there also you told scrap recovery. No, sir. That is scrap recovery relating to units in production. That is relating to scrap recovery relating to units in production. Here we are talking about scrap recovery from the raw material. Raw material. And closing stock also, as it's not used, as it's not consumed, we are going to reduce it. So what is it? Opening stock of raw material, add the cost of purchase minus returns if any, minus scrap recovery from the sale of raw material, minus closing stock of raw material. Now cost of purchase includes what and all, sir? Whatever the cost we incurred to bring that raw material into our godown till reaching godown, which are non-returnable, which are non-refundable, and which are normal. Try to understand. Three condition. Condition number 1, cost incurred till reaching go down. After it reaches go down, nothing will be treated as cost of material. Overhead it will be like your raw material insurance, raw material storage, all those things. Okay. Go down rent, all those things are overheads. But till it reaches go down, it's cost of material. Condition number 1. Condition number 2, it is non-refundable. If it is refundable, is it a cost first place? Forget about whether it's material cost or no. Is it your cost? No, right? How it will become your cost? You paid for it, they returned it later. Then how it will be a cost? So returnable cost also will not be treated as direct material cost. I mean, in fact, it's not treated as cost at all. And last one is, it should be normal cost. It should be normal. We shouldn't have incurred it for abnormal reasons. We shouldn't have incurred for abnormal reasons. All those things together we call it as cost of material purchased. Okay, that is nothing but price of the material. And if at all, listen here, very simple. GST related, sir, so many things, when to add, when to minus. Very simple, try to understand. Common, simple criteria. If it is cost, make sure it's there in the cost. If it is not a cost, it should not be there in the cost. Let's say, sir, when it will be cost, when it won't be cost. 1, it will be cost. It will be cost when it is non-refundable. That is, credit is not available. Credit is not available. In that scenario, it will become cost. If credit is available, what happens? Now I will pay to my supplier. I will recover it from my customer. Net, is it cost? No. Now, if credit is available, then it's not a cost. If credit is not available, then only it's a cost. So if credit is not available, then you should make sure that is already there in the cost. So if your purchase price includes that GST portion, don't do anything, because that is cost only, let it be. No sir, it's not yet included, then include it. Add it to the cost. Sir, it is refundable or credit is available. In that scenario, what we should do, sir? In that scenario, just check whether your cost includes, purchase cost includes the GST. If the answer is there, yes, exclude it, minus it. No sir, that don't include GST, then don't do anything. So these basic things you should keep in mind. When it is cost, when it is not cost. When it is cost, if it's already there in the cost, correct? No treatment. If at all it's the cost but not there in the cost, add it. It's not a cost, so not there in the cost, ignore. Not a cost but already included in the cost, exclude. Simple. Got it? And your transportation cost, freight, loading charges, transit insurance, unloading charges, all those things will come here. And also cost of containers. Cost of containers. If you bring any cost of container, then you should treat net amount as a cost. What do you mean by that? Generally, containers will be returnable in nature. Generally, containers will be returnable in nature. If it is non-returnable, whatever the expenditures we have incurred, anyhow it will be treated as cost. If it is returnable in nature, that net amount what you have given, that you should treat it as cost. For example, non-returnable, you spend 10,000 on container. Now that is your cost of material. Sir, returnable, when you return, they are going to refund you 9,000 rupees. Then my cost of container won't be 10,000. My cost of container will be just 1,000. My cost of container will be how much? 1000. Hope this is clear. And of course, if at all you receive any discount, either the quantity discount or trade discount, then you have to reduce. Sir, what about cash discount? Cash discount is not relating to purchasers. Cash discount is relating to prompt payment. So payment related discount, why you are trying to adjust it to material cost? So remember, the discount which will be adjusted to material cost is trade discount, not the cash discount. Hope it is clear. No doubt. Pakka. Admin overhead, guys. Admin overhead related to production should be forming part of cost of production. General in nature should be forming part of COS. Now, if it is related to production, sir, how we get to know? If at all question is silent, treat it as related to production. If question particularly tells it is general in nature, then only take it as general in nature. Got it? Scrap recovery from raw material, scrap recovery of the units in production. If it is a scrap recovery of raw material, recovered amount should be reduced from the direct material consumed. If at all the scrap recovery relating to units in the production, reduce it from the cost of production. Correct? Packing could be divided into two, guys. Primary packing, secondary packing. What do you mean by primary packing, sir? Cost of packing we incur to protect that particular product. Protect that particular product. To protect the nature of that particular product. For example, toothpaste. To protect that toothpaste, you need the tube. Primary packing. Secondary packing is what, sir? Incurred for a distribution purpose or incurred for a marketing purpose, incurred for a selling purpose. Toothpaste tube is required, I agree. Outside one more box they will put, no. That is to arrange in a shelf for a seller to promote it. Now that is secondary packing. That is secondary packing. So primary packing is to maintain the quality of the product. Secondary packing is for what? Marketing purpose, or it could be distribution purpose. For example, item is small item. Just to make sure while transiting it to our supplier and all, I mean supplier in the sense, our customers who will sell our products. In big cartons we might put. Correct? That brown cartons will come. Now that is for a distribution purpose, right? That is your secondary. So if it's a primary packing, take it as a part of cost of production. If it is a secondary packing, cost of sales. Hope it is clear. Pure financial items, if any are there, just ignore it. Okay. Direct expenses, I gave you code word. Trash DP. Correct? Direct expenses, I had given you code word. Trash DP. What are those trash DP? T for technical assistance and know-how. R for royalty. R for royalty. A for amortization of molds, pattern, patents. Amortization of molds, patterns, patents. S for specific software. S for specific software. Try to understand direct expense chapter we are not going to see again. In this only it's covered. Whatever the expense traceable in the final product and which is not already considered under direct material and direct labor, that will be coming under direct expense. So generally we divide it into generally there will be 5 items. Okay, you have to remember trash DP, T for technical assistance and know-how, R for royalty, A for amortization of molds, pattern, patents, S for specific software, H for higher charges of specific equipment. Higher charges of specific equipment. D, design and drawing cost. Try to understand design and drawing cost, not department. not department. Design and drawing department cost is your overhead. If you particularly take any specific design drawing as a consulting kind of stuff for your product, then that could be directly traced to that particular product only. That's why we treat it as direct expense. No sir, my design and drawing team is in-house only. Then how many designs they do and all, can you trace it? That way we will call it as indirect expense. We'll treat design drawing department cost as overhead, factory overhead. Design and drawing cost, specific design and drawing cost as direct expense. P for power, fuel, steam. Power, fuel, steam. Got it? Once again, Rastrith. T for technical assistance and know-how. R for royalty. A for amortization of molds, pattern, patents. S for specific software. H for higher charges of specific equipment. D for drawing and design cost. Drawing and design cost, not drawing and design department cost. Keep that thing in mind. P for power, fuel, steam. Power, fuel and hope it is clear. Sir, then direct wages consist of what, sir? Whatever you pay to your factory workers who are direct. Whatever you pay to your factory workers who are direct workers, like the ESI, EPF, perquisite, whatever you end up paying them, everything shall be treated as direct wages. Okay, that anyhow you are going to learn more in wage direct like employee cost chapter. Done. Next, factory overhead. Factory overhead also generally few will be there. For that I have given you code word. Adi is DSLR. Adi is DSLR. A for amortization of jigs, fixtures. Correct. D for depreciation of factory building, plant and machinery. So many D's are there, don't worry. Factory building, repairs, your factory equipment, all those things. Whatever is there in the factory, depreciation of everything will be treated as factory overhead, because depreciation cannot be directed. Correct? A, D, I. Indirect employee cost, like your indirect factory workers, supervisors, foreman, all those things. This factory manager cost will come where? Factory overhead? No. Admin overhead related to factory. Manager. Supervisor, how you can trace? Supervisor is factory overhead. Manager salary, admin overhead. Okay, done. ADI is done. No, one more I. Insurance on factory building, plant and machinery, etc. Yes, sir. Service department cost. Along with your production department, few other service department also will incur some overheads. No, that department's overhead will be absorbed to, reapportioned to production department, that we have seen in overheads chapter. Again, we will revise it. No worries. Adi is D. Drawings and design department cost. Drawings and design department cost. Yes, sir. Stores and spares. Stores and spares. L. Lease. Lease of building, plant and machinery, etc. R is repairs and machinery of plant and machinery, factory building, etc. Okay. R is DSLR. ADI, IS, DSLR. A is amortization of jigs, fixtures, all those things, tools, etc. Whereas D for depreciation of building, plant and machinery, etc. I for insurance of building, factory equipment, plant and machinery, etc. One more I for indirect labor cost or indirect employee cost, which is relating to factory, of course. S for service department cost. Adi is D for Drawing and design department cost. S for stores and space. L for lease rentals of factory building, plant and machinery, tool, etc. R for R&M of same. Hope it's clear. If at all in the question, if they ask you to find out cost per unit column also, in that case, remember, till you arrive at COP, you are going to consider number of units produced. For direct material consumed, you are going to consider number of units produced, direct labor, number of units produced, direct expense, number of units produced, prime cost, number of units produced, factory overhead, number of units produced, this opening stock of WIP, closing stock of WIP, ignore. Factory cost, number of units produced, admin overhead, number of units produced, like this, till you arrive at COP. Once you arrive at COP, opening stock will be considered as cost of opening stock per unit, cost of closing stock per unit, cost of goods sold. You are going to divide it with number of units sold. After that, admin overhead general in nature, number of units sold, selling and distribution general in nature, number of units sold, cost of sales, number of units sold. So with what you should divide? Till your COP you should divide with number of units produced. After that you should divide it with number of units. Hope it's clear. Yes? Fine. So once again, one last time, quickly revise the cost sheet format. Direct material, direct labor, direct expense will give you prime cost. For that we'll add factory overhead. That will give you gross works cost. To that we'll add opening stock of WIP minus closing stock of WIP will get net works cost or works cost in simple, and add research and development, quality control, admin overhead, primary packing cost minus scrap recovery from the units in production will give you cost of production. For that, if you add opening stock of finished goods minus closing stock of finished goods, you will get cost of goods sold. To that, if you add selling and distribution overhead, add admin overhead which is general in nature, you will arrive at cost of sales. To the cost of sales, if you add profit, you will arrive at sales. With that, we have completed our revision on cost sheet. However, you know that majority of the time 2A question is a cost sheet, right? So quickly shall we see past PYPs as well as past MTPs quickly. Okay. Quickly tell me, in the June 23 paper, June 23 cost sheet question number PYP, cost sheet question number please. MCQ, give me a second. MCQ, descriptive, set 1, set 2, MCQ, descriptive, MCQ, descriptive. Okay. So quickly tell me, first June 23, right? June 23, MCQ question number 1 and 2 now. 1, 2, 6. Descriptive 2A na. Oh. Next June 23, December 23. 5-8. Descriptive. Okay. June 24. MCQ. 11-12. Descriptive. Okay. December 24. 1. MCQ only 1 na? 2 na? June 25. MCQ? No MCQ? Descriptive? MTP we'll see later. Okay. Somewhere you can write this way. It will be easy. Like all the questions will be there in the particular attempts question will be there with you guys. Now you have written randomly, no? You can do it chapter wise. June 23. So you told me MCQ number 1, 2 and 6. First one. B Limited pays rupees 10 per unit royalty to designer of a product which it manufactures and sells. The royalty charge would be classified as a direct expense. Trash DP in that R is royalty. One you told next. The sum of direct labor and factory overhead will be treated as conversion cost. If you remember, direct material to convert direct material into finished goods, whatever you incur is a conversion cost. Next. 6. For the purpose of cost sheet preparation, costs are classified on the basis of functions. Option B. Easy 6 marks. Right? Next one. Measures PQR Limited submits the following information on 31st March 2023. Sales for the year they have given 55 lakh, purchased material 22 lakh, direct labor 13 lakh, inventories at the beginning they are telling opening stock of finished goods 140,000, opening stock of WIP 80,000. Material inventory, that is raw material they are talking, opening stock is 60,000, closing is 80,000. Inventory at the end, closing stock of WIP, closing stock of finished goods. Factory overhead were 60% of the direct labor cost. So factory overhead absorbed at the rate of 60% of direct labor cost. Admin overhead expense was 5% of the sales. Selling and distribution were 10% of the sales. You are required to prepare cost sheet with all the elements in it. Okay. And one more thing. If at all in cost sheet, if they ask you to prepare condensed P&L, then remember your abnormal loss, your pure financial items, your sales, all those things will come in condensed P&L. Whereas in cost sheet, we will stop only to COS. So we'll take COS to the debit side. Abnormal loss, pure financial item like interest, dividend, all those things will be debited. Credit side, any other income is there, pure financial items, that income we will take, sales we will take, balance will be profit, like that. Okay. If at all they ask, condensed P&L. Keep that thing in mind. Now, direct material consumed. Of course, you should show opening plus purchase minus closing, but I am not going to show all those drama here because we are revising for some reason, right? So, opening stock was how much? 60,000. We purchased how much? 22 lakh. Correct? And closing is how much? 80,000. So basically, we will purchase 21 lakh 80,000. Correct now? Or 22 lakh 20,000? 21 lakh 80,000. Direct material consumed 21 lakh 80,000. Always remember, amount column should be represented by amount. Units should be written as units. Otherwise, you don't get marks if you just write some numbers, some phone number kind of stuff. Got it? Next. Direct labor 13 lakh. Direct expense is there. That will give you prime cost 34 lakh. Add factory overhead. They are telling it as 60% of direct labor 13 lakh. Guys, listen. If at all they have told this way, which way, sir? Direct labor is 60% of factory overhead. Getting it? Here they told factory overhead is 60% of direct labor. If at all they had told direct labor is 60% of factory overhead, then what you should have done, sir? 60 means 13 lakh. 100 means question mark. Because we know that, right? Factory overhead is 100 means direct labor is 60. But all they give this way. You should do cross multiplication. So 60% of 13 lakh is 7 lakh. That will give you gross works cost. How much? Add opening stock of minus closing stock of. How much is opening stock of WIP here? Closing stock 1 lakh. That will give you works cost, or you can call it as net works cost. Few places they are using gross works cost. In the place of gross works cost, they are using the term works cost. In the place of works cost, they are using the term net works cost. But you don't follow that, you follow this normal rule. No worries. Add admin overhead if I'm not wrong. Nothing else is there. Right? And admin overhead, as the question is silent regarding what it is, we are going to treat it as adjusted works cost also. Yeah, few places they are using the term adjusted works cost. Works cost and adjusted works cost. Admin overhead, as they haven't told whether it's related to production or no, so we are going to treat it as production. How much it is? 5% of sales. If the sale is 55 lakh. $2,75,000. That will give you COP, correct? 44,95,000. To this, we are going to add opening stock of finished goods minus. How much is opening stock of finished goods? How much is closing stock of finished goods? Net. What is it? What is it? COGS. To that we are going to add selling and distribution overhead. How much it is? 10% of sales. 5,50,000. Next. That will give you COS. How much it is? Okay. To that we are going to add profit, which is balancing figure. That will give you sales. Sales is 55 lakh. Sorry. Therefore, profit will come to. Anyone? Any doubt in this? Pakka. That is your 2A. 7 marks. Simple 7 marks. By any chance, chapter 1 thing is there in this thing? No, right? Chapter 1. Related thing in this paper. I think net profit we got is 475,000 only, right? Which question? Which of the following is applicable for cost control? It's a corrective function. Cost control is corrective function. It is related with the future? No. Cost reduction is related with the future. It challenges the standard cost? No. It ends when the targets are achieved? Yes. So cost control ends when the targets are achieved. Corrective related with future and your standard cost challenges the standard cost or cost reduction. Next one. Primary packing is part of production cost. Eighth one. Which of the following does not form part of prime cost? Cost of packing? Of course, no. Overtime premium paid to workers. GST paid on raw materials where ITC can be claimed. Of course, it won't take form part in prime cost. Cost of transportation, it will take part. So now the question is whether it's cost of packing or GST. So GST is the more appropriate here. Actually, packing cost also is not direct cost, but still it's better to go for GST because that is not a cost at all where input could be claimed. Next. 2A now. Sun and Moon is a leading hardware manufacturer startup. It manufactured and sold 200 components in the year 2022. Summarize trading and P&L they have given. They are telling the management of SL estimates the following facts for the year. The output and sales will be 300 computers. So we'll produce 300 computers and sell 300. Try to understand here they have given is for the previous year where we sold 200 computers. Price of material will be raised by 25% compared to last year. Wages will be raised by 10%. Manufacturing charges will increase in proportion to the combined cost of material and wages. Selling expense per unit will remain unchanged. Other expense will remain unaffected by the rise in output. Prepare cost sheet. Suggest the selling price per unit to earn a profit of 20% on selling price. Shall we start? Direct material consumed. Last time how much was the direct material? 12 lakh. Correct. And this time how much increase they are telling? 25%. How much it will be? 15 lakhs. If at all you take this way, the answer is gone. Why, sir? A 12 lakh, don't you think direct material is a direct expense? 12 lakh we incurred when we were producing 200 units. This year we are producing 300 units. Try to understand. Getting it? So at a old rate only my cost will be how much? 18 lakhs. Correct? And this time 25% increase is there. $22,50,000. Direct labor 18 lakhs. If you take 18 lakhs, gone. Why? Variable in nature. 18 lakhs we incurred when we were producing 200 units. Now we are producing 300. So how much it is? Plus 10% increase in cost. 70. Correct? Next, manufacturing expense. They are telling it will increase in the same proportion of your material and labor. Last time how much was material and labor? Can I tell? Around 30 lakhs. Last time it was 30 lakhs. How much was manufacturing charges? 7 lakh 50. So can I tell it was around 25%? 7 lakh 50 divided by 30 lakh into 100. Last time manufacturing charges was 25% of the material plus labor. This time also material plus labor, how much it will come? 52 lakh 20,000. Of that 25%. That will give you prime cost. $65 lakh. $25,000 only. Management expense is there 9,000, general expense is there 3,000, rent, selling expense. Try to understand, as the units produced is completely sold, we don't have to divide this among this, but still management expense treating admin overhead and no information is given, treating it as a related to production. So no opening WIP, closing WIP is there, no factory overhead information is there. So I'm going to treat my prime cost itself is a factory cost. To that I'm going to add management expense. How much it is? That will give you cost of production. How much? Best part, as there is no opening stock, closing stock of finished goods, this itself is my COGS. To that remaining whatever is there, I will add it. We have general expense, we have rent and rates, we have selling expense. Together how much it is? Shall I take it directly? 4 lakh 50, 4 lakh 50, 9 lakh. That will give you cost of sales. 83 lakh. To that, if we add profit, I think only till COS they have asked, right? Sales is 60 lakhs. Huh? Add profit, balancing figure, that will give you sales. How much is the sales? $20 loss, right? If you take this, gone. Why? This sales is relating to 200 units. Correct? Try to understand now. Sales. Oh yeah, selling expense we should take it separately. Ayyo. Listen. This 9 lakh we are not going to take it directly as it is. Why, sir? General expense 3 lakh fine. Rent and rate 150,000 fine. That will come to 4 lakh 50,000. Correct? Now selling expense is there, no? They are telling it per unit remains same. That means they have given a clear hint that it's a variable in nature. So selling and distribution, try to understand how much they have given, 4 lakh 50,000. But that was when 200 units were there. Now 300. 6 lakh. Total COS 80. 85 lakh 50,000. Next, suggest a selling price per unit to earn the profit of 20% on selling price. Try to understand 20% on selling price they are telling. So whenever we have cost, but they're asking on selling price, or whenever we have selling price, they ask on cost. Either you can do it on equation basis or either you can do it on cross multiplication. Listen here. How the cross multiplication works, sir? They have given it as a percentage of selling price. Now let me take selling price as 100. Let me take selling price as how much? 100. If selling price is 100, profit how much they are expecting? 20% on selling price. So profit they are expecting is 20 rupees. That means cost will be 80 now. Now 80 means 85 lakh 50,000. 100 means question mark. One crore. 1,06,87,500. Per unit, how much it is? 1,06,87,500 divided by 300. 35,625. Hope it is clear. $35,625, 1,06,87,500. Hope it's clear. Next. Yeah, you can do it. Cost per unit. Next up. Hmm. 11 and 12. The sum of direct labor and factory overhead is very good. Conversion cost. Just I will take you read that option. Don't use brains. 12th next. RST Limited has set up a laboratory for testing a product for compliance with the standards. Compliance with the standards. Salary of the laboratory staff is quality control. So they are there comparing actual product with the standard product. So quality is not there, they will reject. So basically they are doing is quality control there, not R&D. Next up. This was kind of job sheet. They have given it as a cost sheet. In study mat also they have done the same thing, if you remember. That's why we have taken it as cost sheet. PQR Limited Co. is an advertising agency which has received an inquiry to submit a quotation. Bill of material prepared by the production department for the quotation states the following requirement. 20 reams of paper at 2,200 per ream is required. So material cost, right? So 20 into 2,200. 44,000. Ink and other related material directly for this particular product only. Binding material and other consumables. Some photography is required for the job. Agency does not have a photographer as an employer. It decides to hire one by paying 20,000 to him. That is, again, direct in nature. Estimated job card prepared by a production department. Specific services as follows. Artist, 18,000 per month, where we are hiring them for 80 hours. Copywriter, 15,000 for 75 hours. Client servicing, 13,500, where we are using them for 30 hours. Primary packing material will be required to be tuned for 6,000. Actually, it should be treated as cost of production, but it's a job cost here. So we are going to treat it as a part of prime cost. We are going to treat it as part of prime cost because primary, this is relating to packing of that particular job itself. Production overhead is 40% of prime cost, while selling and distribution overhead are likely to be 20% of production cost. Agency works 25 days in a month for 6 hours. So how many hours we will be working? 25 into 6, 150 hours. Correct? Now listen. Artist, we are paying 18,000 to work for 150 hours. In this particular job, they are working for 80 hours. How much is the cost of artist? Copywriter, 15,000 in a month, they should work for 150 hours. They are working 75 in this particular job. 7,500. Client servicing, 13,500 for 150 hours, but for 30 how much? 2,000. Okay. Total will come to 9,600 plus 7,500 plus 2,700. 19,800. Also we have had particular person also, no? 20,000. So your employee cost will come to 39,800. Employee cost will come to 39,800, and in direct expense I am going to consider primary packing cost also, which is, that will give you prime cost 44,000. Very good. Very good. 8,000 plus 4,000 plus 39,800 plus 6,000. 1,01,800. Got it? Add factory overhead. Factory overhead, how much they are telling? 40% of prime cost. 40,720. 1,42,000. Got it? That will give you factory cost. In fact, there is no admin overhead, so this itself is my COP also. This itself is my COGS also. For this, we are going to add 20% of the production cost as the selling and distribution. 28,504. 1,71,024. Agency expects profit of 20% on quoted price, means selling price. So if you take selling price as 100, in last question I showed that cross multiplication. In this question, let me show it on an equation basis. Selling price is equal to cost plus profit. Selling price, let me take it as S. Cost will be 171.24. Profit will be 20% on sales, 0.2S. Got it? 0.8S is equal to 171.24. S is equal to 2,13,000. Hope it is clear. 2A. I think they are considering that even packing material as a part of direct material. Hope it's clear. No doubts. Next paper, please. Which of the following classification is meant for distinction between direct cost and indirect cost? Which one of the following cost is value for the best alternative course of action was not chosen? Also known as. Next one. Sotan Limited, producing product NB, provides the following information: royalty paid on sales, design charges paid for the product, higher charges for the equipment, total direct expense. Everything is direct only here if you see. We will see here. This which attempt? December 24. 3 papers are done now. The following financial parameter of ZONB Limited are available for the month of September 2024. Direct labor cost is 120,000, which is 120% of factory overhead. Try to understand. Which is 120% of factory overhead. That means factory overhead is 100, means direct wages is 120. So 120 is coming to 120,000. So 100 is question mark. So factory overhead is 1 lakh. Anyone any doubt in this? Everyone understood? No? No doubt in this? Akka? Okay. Raw material purchase they have given, not consumed. Sales they have given. COS also they have given. Cost of sales themselves they have given. I think this was the question in which mistake was there. Yeah, give me a second. That COS won't match. If at all you want to match the COS, then you can't consider selling and distribution and admin. That one only, no? The COS won't match. If at all you want to match COS here 4 lakh, then here you should take some distribution overhead, some nonsense stuff. Ignore. Ignore this question. Next. June. No MCQ. Which of the following is applicable for cost control? Applicable. It ends when targets are. So many times they have asked. That's what I am telling. Relating to that conversion cost, how many times they have asked? No wonder from these many questions, like whatever 14, 15 we are going for 5 plus 9. Around 14 papers what we are seeing. From that if 100 marks comes also, no wonder in it. Which one? Navi & Co pays rupees 8 per unit royalty to the designer. Royalty charges should be classified as repeated. You are required to prepare a cost and profit statement, they are telling. Sales they have given 90 lakh. Purchase of raw material 34, direct labor 16, inventory at the beginning, raw material, inventory at the end. Factory overhead is 60% of the direct labor cost, admin overhead is 6% of sales, not related to the production activity. Here they have given it is general in nature and selling and distribution are 12%. So quickly direct material consumed will be how much? Purchase plus opening stock minus closing stock. 33 lakh 50,000. Correct? 34 lakh add 80,000 minus 130,000. Direct wages 16 lakhs. Direct expense is not there. That will give you prime cost, which is 4950. For that, we are going to add admin overhead, factory overhead, which is 60% of direct labor. 16 lakh into 60%. That will give you factory cost. In fact, gross factory cost. 59 lakh. Gross works cost I will write. We'll add opening stock of WIP, will reduce closing stock of WIP. Add opening stock of WIP 120,000. Closing stock of WIP 180,000. That will give you works cost. $58 lakh 50,000, and you know that admin overhead they have given it as general in nature. Moral of the story, this itself is my COP. There is no admin overhead in it. For this, we are going to add opening stock of finished goods minus closing stock of finished goods. Opening stock of finished goods was 360,000. Closing stock of finished goods is 130,000. So 230,000, basically 60 lakh. Oh, sorry, it's not 130, 220,000. Sorry, 220,000. So it is basically 140,000 more. 59 lakh 90,000. Correct? For this, we are going to add admin overhead, which is 6% of the sales. Sales is 90 lakh, 6% of that will be 54, 90 lakh, right? 5 lakh 40,000, sir. 5 lakh 40,000. And selling and distribution is 12% of the sale. Cost of sales will be 76 lakh. Okay. 76 lakh 10,000 is cost of sale. Sales is 90 lakh. So around 13 lakh 90,000 will be profit. 13 lakh 90,000 will be profit. Hope it is clear. Next. That's all. MTP. Okay. Set A. Quickly tell me. Oh no, December 23 you tell me. I will write it as first chapter as well as cost sheet. Together you tell. Set 1. Oh, okay. MTP is not there, no? In December, June. December should be there. MCQ 6. Chapter 1. Okay. 2A. Set 2. Okay. June 24. Set 2 is not there if I am not wrong. June 24. December. What? 1, 2, 3. Set 2. Descriptive. Okay. June. 1. Okay. 1, 4, 2A. Next, December 25. A. 8. 1. Okay. Okay. In first set, what did you tell? December 23 set 1? 4. In process, conversion cost means cost of direct material, direct labor, direct expense, direct labor, direct expense, indirect material, indirect labor, indirect expense, prime cost plus factory overhead, all costs set up to product reaching a consumer less direct material cost. Option B. Direct material, direct labor, direct expense, factory overhead, which is indirect here. Hope it is clear. Next. From the following information, illustrate and prepare a statement showing a profit for the period and determine the cost per unit. So they are expecting you to prepare cost sheet also. Raw material is there, opening, closing, WIP is there. WIP, listen, what they are trying to give, they divided it into elements. Because WIP will include material cost, labor cost, overhead. They divided and given, that's it. How much is the opening stock of WIP? Oh my God. Throw the calculators. No, why you want? Instead of this, if you write and do, no, that will be much more faster than calculator. What is wrong with you guys? Don't know to use calculator? Or you are too lazy? Let the calculator be there on the table. Who will pick it up? Who will press the numbers fast? Let me press it very slowly. Examiner also will do the same thing. Let them pass very slowly. What is the urgency? How much it is? 31. Next one. You have to speed up, I'm telling you. 400. Finished goods opening they have given, closing they have given, closing only units they have given. That means you have to do it on the basis of COP. Purchase of raw material 190,000, carriage on purchase 1,500. Should we include it or no? Sale of scrap of raw material you should reduce or no? Wages. Works overhead are absorbed at 60% of the direct labor cost. Admin overhead are absorbed at ₹12 per units produced. Selling and distribution are absorbed at 20% of selling price. Sale 7,600 units at a profit of 10% on selling price. Direct material consumed. Listen here. Opening stock was how much? 29,500. How much did you purchase? One lakh. Did you incur any direct expenses as such? Carriage inward 1,000 minus scrap recovery from scrap of raw material 5,000. Correct? And minus closing stock. Very good. How much is the direct material consumed? 1,80,000. Direct labor. Direct labor, they are telling it as 2,97,000. Direct expense is there by any chance? No, right? Add factory overhead. Factory overhead, they are telling it as 60% of direct labor cost. 60% of 2,97,000. 1,78,000. That will give you gross works cost. 6,50,000. 200. To that, we are going to add opening stock, admin overhead. Admin overhead, they are telling 12 rupees per unit produced. How many units we are producing? WIP we didn't adjust. Add WIP. Opening WIP minus closing stock of WIP. Opening stock was how much? 31,200. Closing 38. That will be our works cost. To this, of course, we are going to add admin overhead. Admin overhead 12 rupees for the units produced. How many units we are producing? Have they told? They haven't told, no? We can find out. How, sir? Try to understand. Opening we had 200 units. Closing we have 1,600 units. We sold 7,600 units. Try to understand. We sold 7,600. We held 1,600 in our hand at the end. That means total during the year we had 9,200 units. That doesn't mean that 9,200 also you produced. Why, sir? Opening 200 was there. Which means during the period units produced are 9,000. That is whatever you sold plus closing minus opening. So 9,000. So 9,000 into 12. 1,08,000, sir. That will give you cost of production. How much? 7 lakh. And also remember here, you should calculate per unit also. How much is 180,000 divided by 9,000? 297,000 divided by 9,000. 178,200 divided by 9,000. 6,55,200 divided by 9,000. 6,48,000 divided by 9,000. 1,08,000 divided by 9,000. 84 is cost per unit till COP. Got it? Add opening stock of finished goods minus closing stock of finished goods. Opening stock of finished goods, we have around 200 units at the rate of 84, which will come to 16. Okay. And we know that closing finished goods should be valued at cost of production, FIFO assumption. So how many units are in closing? Into rupees 84. 1 lakh. Final. One lakh. Final. 38. I think that also will come to 84 only, right? Because opening was also 84 only, so it won't change per unit. Add selling and distribution, 20% of selling price. So selling price you don't know, right? Sale 7,600 units at the profit of 10% on selling price. So try to understand. Cost is 84. Cost is 84 plus 10% of the 20% of the selling price will be selling and distribution. So let me take it as 0.2s plus profit itself will be 10% on selling price, 0.1s. That is equal to S. 84 is equal to 0.7s. 0.3s will go that side. S is equal to 120 na? 120. Sales will be 120 into 7,600. 9 lakh. Hope it's clear. 9,12,120. Anyone, any doubt in this? Calculation of selling price you understood now. Just like how we used to do in our transportation, if you remember. Commission also used to be there. Percentage of takings. Profit also on percentage of takings. That way, same ditto. Hope this is clear. Next one, please. MCQ. Cost of sales is equal to cost of production plus what is it? Cost of production plus opening stock of finished goods minus closing stock of finished goods, cost of goods sold, cost of goods sold plus selling and distribution overhead, admin overhead. So I think they should have given it as none of the above, or they have given it as selling and distribution now, which is wrong. It need not be per unit. Correct, no? Selling and distribution, if it is there, it's correct. Because we assume there is no opening, there is no closing. Or they should have asked cost of sales per unit. Then it would have made sense. Next. 8th one. A company pays ₹1 as a royalty to the designer. It shall be treated as direct expense. 2A, MNQ Limited. Sales they have given. Inventory finished, opening, WIP 4,000. Purchase of material during the year 1,10,000. Material at opening is so much, closing is so much. Okay. And direct labor they have given 65,000. Factory overhead, inventory at the end, other expenses, selling expense is 10% of sales, admin is 5% of sales. I think this could be done. Nothing special is there. We have already discussed about it. Same like last one only it will come. 2 unknown figures. Next. Dash is anything for which a separate measurement of cost is required. Cost object. Correct? No. Direct expense shall not include imputed cost. What? Primary packing cost is part of production cost. Same question. Whatever they have repeated in the last. Next. December 24, set 1 na. MCQ. Primary objective of cost accounting, maximize the profit. Of course, no. Record financial transaction. Why cost accounting will record financial transaction? Provide financial statement. No. Facilitate cost control and decision making. If the direct materials are consumed 30,000, direct labor is 20,000, factory overhead is 15,000. What is the total manufacturing cost? 30, 20, 50, 50 plus 15. 65. Sum of direct labor and factory overhead is known as a company employs 3 drivers to deliver goods to its customers. The salary paid to drivers are selling and distribution because it is relating to distribution. Which of the following does not form part of prime cost? GST paid on raw material, input credit can be claimed. Sorry? 2A na? This is that PYP question what we discussed, job cost related stuff. Next up. December 24 set 2. MCQ. The direct material consumed are 30,000, direct labor 20,000, factory overhead. So total manufacturing cost is 65,000. This is ICI material question. Hopefully answers they are not matching with ICI material. Reason being, if admin overhead is there in ICI material, in admin overhead, in ICI material they are considering it as general in nature. Here they are treating it as production. We'll see. First, the following figures are extracted from the trial balance of the company as on 31st December 2023. Okay. Inventory they have given. Office appliance they have given. Plant and machinery they have given. Building they have given. Try to understand these are the assets. Don't book it as an expense right now. Depreciation on this should be booked it as an expense. Sales is there. Sales return is there. Material purchased. Freight on material, purchase return, direct labor, indirect, factory supervision, factory repairs and upkeeping, heat, light, power, rates and taxes, miscellaneous factory expense, sales commission, sales traveling, sales promotion, distribution department, office salaries, interest on borrowed fund. Further details are given as follows. Closing inventory of raw material, finished goods, WIP they have given. Accrued expenses are direct labor 8,000, indirect labor 1,200, interest 2,000. Depreciation should be provided 5% on office appliances, 10% on machinery, 4% on building. Heat, light, power are to be distributed in the ratio of 8:1:1 for factory, office, distribution. Rates and taxes applied 2/3 to the factory, 1/3 to the office. Depreciation on building to be distributed in the ratio of 8:1:1 among factory, office, distribution. Illustrate and prepare a cost sheet and condensed P&L, which means in cost sheet we take till COS. So interest and all will be adjusted in the condensed P&L. Hope it's clear. This is opening stock of raw material, let it be. So this will be adjusted in the direct material consumed if you know. WIP will be adjusted in the works cost if you know. Finished goods will be adjusted in the cost of goods sold if you know. Yes. Same question we have illustration 10 now. Office appliances, depreciation what they are telling? 5%. Plant and machinery 10%, building 4%, 5, 10, 4. 5% of 17,400, 870. 5%, 10%, right? 10. 10% of 4,60,500. Next 4%, no? 8,000. These are our depreciations. Office appliance depreciation will go to where? Admin overhead. Hello. Plant and machinery depreciation will go to building. Divide it in the ratio of 8:1:1. So 8:1:1 is 10, 800. So 800 into 8 is 6,400. So 6,400 will be treated as factory overhead, 800 will be treated as admin overhead, remaining 800 will be treated as, got it? Sales, it will be shown in the condensed P&L, credit side, income. Sales return, P&L only, will reduce and show. Material purchased, direct material consumed, freight on material, direct material consumed, purchase return, direct material consumed, but we should reduce it. Direct labor, indirect labor, factory overhead, factory supervision, factory overhead, factory repairs and upkeeping, factory overhead, Heat, light, power. 8:1:1. That is 65,000, 6,500, 6,500 into 8, 48,000, 48, 52,000. 52,000, 6,500, 6,500. Rates and taxes to factory and admin in the ratio of 2:1. 4,200, 2,100. Miscellaneous factory expense, name itself says. Factory overhead, sales commission, selling and distribution, sales traveling, sales promotion, distribution department, office salary, interest on borrowings, P&L, debit. Hope it's clear. See there, direct material, opening stock we took, add purchases, add freight, less returns, minus closing, this one. Direct labor, try to understand here, they are telling one thing here. What is it, sir? Direct labor accrued is 8,000. So here they have given paid 18,000. You should not take only paid, you should take how much is incurred. If you remember, I asked this question when beginning only, correct? So you should take total incurred. 8,000 plus, sorry, 18,000 plus, not 18,000, sorry, 160,000 plus 8,000, 168,000. Indirect labor, 18,000 plus 1,800, sorry, 1,200, 19,200. And interest will be 2,000, total 4,000 interest. So prime cost, indirect labor, accrued, factory supervision, upkeeping, heat, light and power, 52,000 only we got, rent rates 4,200 only we got, miscellaneous factory overhead, depreciation as well as building, I think 6,400 only we got. Add opening closing, we got factory cost. So here admin, luckily they are taking it as a part of cost of production. So ditto copy, luckily they didn't do. Then what I feel is the efforts and team which prepares MTP is better than the one which prepares PYP. Yeah, for us it's PYP only. So heat, lighting 6,500, rent 2,100, depreciation, I think all these things came same. COP, add opening minus closing, COGS, selling and distribution, we got COS, condensed P&L, see there, sales minus sales return, debit side, cost of sales, interest on borrowings, net profit. Simple, no?
Yes, sir.
Next, please. June 25. If the fixed manufacturing cost is 50,000, number of units produced are 5,000. What is the fixed cost per unit? Go and ask 10th standard students. Nonsense things it is. At least to some extent they should maintain the standard. If they had given some semi-variable cost and they asked, that would have made sense. 9th one now. Which of the following is deducted from the total cost to calculate net profit? Which is reduced from the total cost? Selling expense, opening stock, direct material, indirect labor. Selling expense will deduct from the total cost. Why will deduct from the total cost? It will add to the total cost. None. To be frank, you should reduce closing stock. 9th one, what they have given answer here? A na? A is what? Jatre. Or they should have given added to the total cost. What type of cost is incurred to support multiple cost object but cannot be directly traced to specific one? Support multiple cost object but cannot be directly traced to any specific. Variable and direct not possible. Either it could be indirect or either it could be fixed. Okay, both make sense on the same way. 10th one, what they have taken? They have taken it as indirect. Next, any other questions are there? A company employs 3 drivers to deliver a goods to its customer. Salary paid to drivers are 2A na? Okay. Concentrate. PR Limited manufactures and sells a typical brand of tiffin boxes under its brand name. The installed capacity is 120,000. Total capacity is 120,000. Evenly over each month of the calendar, which means 10,000 every month. Cost accountant of the company informs the following cost structure, which is as follows. Raw material 20 rupees per unit, direct labor 12 rupees per unit, direct expense 2 rupees per unit. Variable overhead 16 rupees per unit, fixed overhead 3 lakh. Semi-variable overhead is as follows. 7,500 per month up to 50% capacity, additional 2,500 per every additional 25% utilized or part thereof, which means it is slab based semi-variable. Plant was operating at 50% capacity during the first 7 months of the calendar year. January, February, March, April, May, June, July. At 100% capacity for the remaining month. August, September, October, November, December. So for 7 months you are operating at 50%. Remaining 5 months you are operating at 100%. Now, the selling price for the period from January to 31st July, that is for the 7 months as fixed at rupees 69 per unit. The firm has been monitoring the profitability and revising the selling price to meet its annual profit of 8 lakh. So our target is to reach 8 lakh. I think this was there in study material if I am not wrong. Identify the selling price per unit for the period from 1st August to 31st December. Illustrate the cost sheet clearly showing the total per unit cost as well as profit for the period. Seven months, 5 months total. Okay. Rupees per unit, rupees per unit, rupees per unit. Now listen, in this 7 months, we are operating at 50% capacity, which means every month capacity is 10,000 units, but we are operating at 50,000, which 50%, which means 5,000 per month into 7. 35,000 units. Next, for the next month, we are 5 months we are operating at 100% capacity, which means basically 50,000. Correct? So total we will be selling 85,000 units. Hope this much is clear. First is direct material. Per unit, how much they are telling? $20, 35,000 into 20. Done. Direct labor per unit, how much they are telling? Next, direct expense. Prime cost 11,90,000 34 17 lakhs 34 Hope it's clear. Add factory overhead, right? I think three things we have: variable, fixed, semi-variable, right? Variable, how much they are telling? 16 per unit. So 16 into 35,000. Fixed, how much they are telling? 3 lakh. Remember, don't take 3 lakh directly. 3 lakh is per annum. 3 lakh is per annum. So divide it not in the terms of units but in terms of month. So 6 lakh into 7 by 12. 3,50,000. First one. How much is the fixed? 3 lakh. Sorry, 3 lakh into 7 by 12. 1,75,000. 1,25,000. How much is 1,75,000 divided by 35,000? 1,25,000 divided by 50,000. 3 lakh divided by 85,000. 3.5. 2. Semi-variable cost, what they are trying to say, 7,500 per month up to 50% capacity. So for first 7 months, it's just 50% of capacity. So it will be 7,500. Correct? 7,500 into 7. 52 divided by 35,000. For the next 5 months, we are going to operate at 100%. What they are telling? 7,500 plus 2,500 up to 75%. Plus the 2,500 up to 100%. 2 times 2,500 will get added. So total 12,500. For 5 months it is 62,500 divided by total 1.35. Anything else is there by any chance? Expense? I don't think so. No, right? Pakka? Done. Now it is very important. Listen. Total cost in this scenario it was 11,90,000 plus 560,000 plus 175,000 plus 52,500. 19,77,500 divided by 35,000. 56.5. Correct? In second scenario, the total cost is coming to 17 lakhs plus 8 lakhs plus 125,000 plus 62,500. 26 lakh divided by 50,000, right? Total cost will come to 19,77,500 plus 26,87,500. 46 lakh 65,000 divided by 85,000 units. 54 point. Hope it is clear so far. Add profit. Add. That will give you sales. Listen here. First one, sales though we already know. Because we are selling at rupees 69 per unit. Correct? So 69 into 35,000. Correct? Because of which how much profit will you be making? 4,37,000. What? 4,37,500. 500. Correct? So divided by 35,000, 12.5. Now listen very carefully. Our annual profit target is how much? 8 lakh. Correct? That means in the second scenario, second half, I mean for the next 5 months, already out of 8 lakh, 4 lakh 37,500 is already achieved. 3 lakh 62,500 should be achieved. So per unit around 7.25. Total sales will come to 26 lakh 87,500 plus 3 lakh 62, 30 lakh. So selling price to be fixed is 61. Market as LMR might come this time. This kind of question. Understood? What? 61, huh? For a moment I got heart attack only here. Next. MCQ? 1 now. In context of cost element, which category includes cost of raw material, direct labor, direct expense? Absorption costing is also referred as traditional costing, if you remember. Next, fourth one. If the gross profit is 40,000, selling expense is 10,000, admin expense is 5,000, then the net profit will be, of course, 40,000 minus 10,000 minus 5,000. 25,000. Luckily, they haven't given 30,000 as an option. Because if they give 30,000 as an option, that will be grace marks only. Reason being, if you treat admin overhead as part of production, then that 40,000 already after reducing that 5,000. So you have to reduce only 10,000. But if you treat it as related to general, then you should reduce both. Yeah, but reducing both. That's the thing. If at all they are given 30, then it would be a problem. Next up. To A now. This I think we have discussed, right? I think this was that question only, where it wasn't matching. Let's see other, at least here they are matching or not. Here also they are not matching. Congrats. Alternatively, wow. Next up. December 25 sector. Which of the following best describes the difference between cost control and cost reduction? Cost control is preventive in nature. Cost reduction is corrective in nature. Correct. Cost control is corrective. Cost reduction is preventive. Both are identical. Cost control focuses on increasing sales. Cost control is preventive. That is, just make sure it won't reach you more than total cost, expected cost. Cost reduction is corrective. Once you done something, next time you will be changing it further. So option that's it. 2A is that question. Next. Which among the following is not type of cost accounting system? Process costing. Because process costing is type of methods of costing, not cost accounting system. Next. Prepare a cost sheet and identify cost per ton of A grade paper manufactured by a paper mill. Direct material 500 into 52. How much it will be? 20? 100 into 30. Total direct material. Labor 80 skilled men into 3 rupees per day into 25. 80 into 75. Next one 40 into 50. Direct expense 2500, 1500. All this will come to prime cost. How much is prime cost? 41,000. Admin overhead variable at 100%, fixed at 60% on direct wages. That is, direct wages is 8,000, variable is 8,000, fixed is 8,000 into 60%. 4,800. How much it is? 53,800. Gross works cost. Admin overhead is 20% and selling overhead is 10% on works cost. So this itself is my works cost also. There is no opening closing WIP. For this admin overhead we are going to add 20% of the works cost. 20% of this. 10,760. That will give you cost of production. 400 tons of special paper was manufactured and rupees 1,800 was realized by the sale of scrap of material during the course of manufacturing. So that also you should reduce while arriving at cost of manufacturing, cost of production. 1,800 reduce. 62, 760. That's it now. Selling and distribution. That is 10% of works cost. 10% of 53,800. How much it will be? 68. That will be your cost of sales. Simple one. Correct? They are asking cost per ton. Divide it by 400 tons. How much it will be? 170 point. Hope it's clear. Simple now. Sure. Now we'll take a break and we'll continue. Fast. He's wearing black t-shirt. Like this ArivuPro and all. Can I go inside or no? Rastrith sir is not allowing. Just check and come. Now listen. We'll be starting module 2, unit 1. That is material cost. Okay. Material cost. So basically in the elements, in this chapter we are going to discuss about material cost, labor cost, overheads. Correct? Direct expense, as I already told you, done already. Shall we start now? What do you mean by material cost? Sir, any cost you incurred on any physical substance used in the production and all business, that we call it as material cost. Material cost. That is cost of material used to manufacture a product or provide a service. Remember, for a production industry, material cost is a major cost. 50 to 70% of the total cost includes material cost. Material could be two: direct material, indirect material. What do you mean by direct material, sir? Direct material are the material which are directly traceable in the final product, which are directly assignable in the final product. Indirect material are those materials which you can't directly trace it in the final product. That is indirect material. Direct material form part of your prime cost, indirect material form part of your overheads. Got it? Sir, what do you mean by material control? Sir, material control means trying to keep the track of materials. Trying to keep the track of materials. So basically in 3 places if you control, whole material will be controlled. 3 places if you control, whole material will be controlled. Which are those, sir? One is your procurement. From where you buy, how much you will buy, when you will buy, all those things. Next one is issue. How much you are issuing, which department you are issuing, on what basis you are issuing, what are the documents you have taken, all those things. Next one is consumption. How much you are consuming, how much is a normal loss, how much is extra loss over and above normal loss, which is abnormal loss, all those things. If you keep a control of these 3, then material control is done. Why you need material control, sir? One, availability. That is to make sure all the required materials are available in the required time, in the required form. There should not be any shortage and all. Because if at all any shortage and all arises, there might be a possibility of production getting stopped. Quality and cost. To maintain the quality of the final product, your raw material should be bought at the right quality. Plus the price for which you pay that should also be justifiable, reasonable price. Minimize waste. When you have control, then only the waste will be minimized. Otherwise it will be done. For example, onions cutting. If at all your mom and all are there, onions cutting, how many layers of onions will go out as a outer cover? Small layer, correct? Mom is not there. That one big layer of onion will go out. Then remaining portion we will chop it, correct? Now where the material control was there? When mom was there. So automatically reduction in the wastage. Prevent overstocking. So if you know exactly how much stock you have, how much you should keep, etc., then automatically overstocking could be avoided. Sir, but overstocking is there means what happens, sir? I already told you. Your holding cost will be more. Carrying cost will be more. Because the money is getting blocked. Space is getting blocked. Opportunity cost is getting blocked. Stock information. So you will get a proper stock information. What stock is there, etc. Minimize the loss during use. So you can implement this material control in purchase and receipt, stores management, material issue. Procurement includes following question. Sir, what we should purchase, which raw material we should purchase, what quality raw material we should purchase, when to purchase, where to purchase, how much to purchase, at what price to purchase. So basically guys, your procurement could be done in centralized way or decentralized way. Centralized way means one stores all other departments. Whatever they want, they should come to stores, they should ask. Stores people will place the purchase order. Centralized way. For whole organization, one department will be placing the orders for materials. Decentralized way means those departments are given right, authority, power. Whenever they want, they can directly place the order. They don't have to go and tell to someone else. That is your decentralized purchase, and they might check this in theory. Difference between centralized purchase, decentralized purchase. So keep an eye on it. Yes. And before going to examination, read it and go. Documentation relating to our material. Documentation relating also question might come in examination. Theory question, if at all they give. Basically, they might give this major question. What do you mean by bill of material law? What are the different uses of the bill of material to the different departments? What do you mean by bill of material? What are the uses of the bill of material to the different departments? Listen, bill of material means nothing but, guys, once our sales department people will tell how much units we are planning to sell. Based on that, our planning department has to decide how many units to be produced. Okay, they plan that. Now, when they got to know how many units to be produced, they now have to decide how much raw material is required, what quantity of what raw material should be used, all those things. Basically, scheduling of that. Basically, scheduling of the material usage. We call it as bill of material. Who prepares it? Planning department. Or you can call it as drawing department or drawing office. Planning department or drawing office. Got it? They will send it to production department. They will send it to production department. Now the production department will get to know how many units to be produced, in what quantity to produce this quantity, what quantity of material A, material B, material C and all to be used, because schedule is already there in the bill of material. So basically, bill of material will help production department in giving idea about how much material to be used, what material to be used, etc. Now, based on that bill of material, our production department will raise material requisition. What is it? Material requisition note with our stores department. That is, to stores department, they will go and ask, boss, I need these materials. Please give me the same. Because stores will be there with them now. Now, if the inventory is there, stores guy will directly issue. If the inventory is not there, they have to purchase now. But of course, stores department won't purchase. They will ask purchase department to purchase. Now, the request made by the stores department to purchase department is called as purchase requisition note. What is it? Purchase requisition note. Now, purchase requisition note, they will tell what quantity to be purchased, from whom, like how much to be the size, quality, all those things. Now, based on purchase requisition, purchase department, now they have to buy material. Before that, what they should do, sir? They should call for the tender. Boss, we are buying these things. If at all any supplier is interested, please send your tender. Based on that, our suppliers will send a quotation. Based on the quotation, we'll select the right vendor and will ask them to supply. Ask them to supply through what material, sir, or what document, sir? Purchase order. In purchase order, we tell what we want, in what quantity we want. Please send us. Based on that, they will raise an invoice. Got it? And if at all we return the goods, we are going to raise something called as goods return notes. And when we receive, we will maintain when we receive the goods, we are going to prepare one document called as goods received note. Goods received note. And bill of material to the purchase department, stores department, how it is applicable, sir, or how it is going to help? Very simple. They can match, no? How much material is required? How much production department is asking for? Whether they are correctly asking or not. And based on that only, they can prepare a purchase requisition note. Now, purchasing department also, while placing or while preparing purchase order, they can refer bill of material. So this is how it's going to affect different departments. So how bill of material is going to help different department? Keep that thing in mind. Very important question. Hope it is clear. Now, how much quantity you should purchase, sir? Guys, overall how much we consume, we can't purchase and keep. Overall how much we consume, we can't purchase and keep. Why, sir? Overstocking. Overstocking. Sir, can we do one thing? What is it? Let's not stock only, sir. Small portion will stock. But if that is the case, you have to place more orders. Ordering cost will be more. So one thing is very clear. If you reduce the size of the order, ordering cost will increase because you have to place more order, more cost. If at all you increase the size of the order, then carrying cost will increase. Why, sir? More inventory we have to carry. More inventory we have to carry. Got it? So one thing we can tell, ordering cost as well as carrying cost are inversely proportional. If you want to reduce ordering cost, you have to increase carrying cost. If you want to decrease carrying cost, you have to increase ordering cost. But to tackle this, we have one thing called as economic order quantity. Economic order quantity. Based on this, we arrived at one formula called square root of 2AO divided by C. Sir, how did we arrive at and all? I already showed you derivation and all in the regular class. I hope you are not expecting same again. So square root of 2AO divided by C. A means what, sir? A means annual consumption. Remember, annual consumption, raw material, not finished goods. O means what, sir? Ordering cost per order. C means what, sir? Carrying cost per unit per annum. Okay, in this what happens, sir? If at all your order size is this, if at all your order size is EOQ, total of your carrying cost and ordering cost will be minimum. Total. I am not telling both of that will be minimum. That is not possible at all because both moves in the different direction. Ordering cost and carrying cost will move in the different direction. So both will match. Both will match and both together will be minimum. So that quantity order size we call it as EOQ, economic order quantity. Always remember, if at all order sizes or EOQ you are getting in decimals, always remember, don't apply your normal rounding off criteria. Round it off to the next number. Number of orders to be placed. If at all it is coming in decimals, next numbers. And always remember, if at all our supplier don't give us discount, quantity discount, always and always EOQ is best. Got it? Always EOQ is best. However, when they give quantity discount, you have to do the proposal analysis. You know, right? That comparative statement you used to do, no? That one you have to do. Hope it's clear. And sir, in the question, let's say they have given units to be purchased, units to be consumed. For A, should I take units to be purchased or units to be consumed? Purchased. Why? EOQ is related to purchase or consumption. Then you should consider units to be purchased during the year, units to be consumed during the year. Purchased during the year, keep that thing in mind. I mean, generally they will give only one. If at all they give both, then which one you should prioritize? Sir, how to ascertain total cost of inventory? Very simple. Your purchase cost plus ordering cost plus carrying cost. Purchase cost means what, sir? Annual requirement into purchase price. Annual requirement into purchase price. Ordering cost means what, sir? Number of orders into ordering cost per order. Carrying cost is what, sir? Guys. Although you place order for 1 lakh units, are you going to keep 1 lakh units throughout the year? No. On an average, half of that will be kept. That's why we take half of Order size, not annual requirement. Very important. Half of order size, because whole annual requirement you don't keep in your go down. Will you keep whole annual requirement? No, you keep only how much you place the order for units. That one on an average. So half of order size into carrying cost per unit per annum. And always remember, while arriving at carrying cost per unit per annum, sometimes they will tell in terms of rupees only. That time directly you can take. Sometimes they will tell percentage. Like your storage cost, insurance, interest, like that. Obsolescence, all those things. All those percentage you should add. That percentage you should multiply with purchase price. See, all those things, reason and all I have told in regular class, but please don't expect the same thing in revision also. You are able to recall, right? Sir, I am watching for the first time. What should I do? Go like this. First place. By the time it comes, if at all you still didn't start the subject, my advice is June is not too far. Advice number 1. Advice number 2. No. Why I should promote? Advice number 2. Watch regular classes, then watch marathon when you are writing in June. Okay. We'll meet you in June. I'm telling this is not for the people who are watching for the first time. Got it? What you are telling? Yes, sir. Topic you told is they can't speak. Why? Not online. They also watch recordings. I'm talking about some random guy who will be watching in YouTube. Sir, no sir, I'm writing in June only, sir. I just came to check. Should I buy it or no? Check and go. If you want to buy, I hope you know where to buy. Website is there, no? Website, app. Use this code word RAST 50. You will get 50% off. Yeah. Wrong promotion. Or you just pray that next year IPL again RCB wins, so that again we will give 20% discount, just like how we did last time. No, everywhere for recorded classes we gave 20% off for 2 days. Not because RCB won, of course, because both were new teams to win the cup, even if it's RCB or Punjab. So we are like, for new students 20% off. Marketing team, I have nothing to do with that. Square root of 2A divided by C. And remember, carrying cost will change because of purchase price. So if at all quantity discount and all they give, purchase price should be kept in mind. Got it? Classification, codification, all those things you see. And inventory level, there is something called as maximum level. That is how much maximum inventory you can hold. See, again, I am not going to explain the formula, blah, blah, blah. Please keep that thing in mind. I will tell the formula. I hope you remember the concept. So maximum level is maximum how much I can keep in my inventory. That will be nothing but your reorder level. That is at what point you will place the order. Plus reorder quantity. If the question is silent, then EOQ will be your ROQ. If the question is silent, EOQ will be your ROQ. Reorder level plus reorder quantity minus minimum consumption into minimum reorder period or lead time. Minimum consumption into minimum reorder period or lead time. That is your maximum level formula. Hope it's clear. Minimum level is what, sir? Minimum level is minimum how much we always try to keep our inventory. If it goes less than this also won't be that big problem, but generally we make sure it won't go below this. What is the formula, sir? Reorder level minus average consumption into average reorder period. Sometimes instead of average they might use the term called normal. Reorder level means what, sir? Once inventory reach what level, you should place the new order. There are two formulae for that. One is maximum consumption into maximum reorder period, or minimum stock level, minimum plus average into average. Average consumption into average reorder period. Got it? Next is danger level, basically where we will stop issuing normal units and we will issue only emergency issues. What is the formula, sir? Average consumption. In the question, if they tell consider minimum consumption, then minimum consumption into reorder period for emergency purchase. Reorder period for emergency purchase. Hope it's clear. And average stock level is nothing but minimum stock level plus maximum stock level divided by 2. What? Minimum stock level plus maximum stock level divided by 2, or minimum stock level plus half of reorder quantity. Minimum stock level plus half of reorder. Hope it is clear. Everyone? Examiner's favorite again. So they might ask you to compute reorder level, reorder quantity, minimum stock level, maximum stock level, average stock level, danger level, blah, 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 blah. So once again, all the formulas. Come on, guys. Close your eyes and tell. Let's see. Maximum stock level is equal to reorder level plus reorder quantity minus minimum consumption into minimum reorder period. Minimum stock level is equal to reorder level minus average into average. Reorder level is minimum plus average into average, or maximum into maximum. And danger is minimum or average into lead period for emergency purchase. Average is minimum plus maximum divided by 2. By the way, minimum consumption, maximum consumption, average consumption will be nothing but minimum plus maximum divided by 2. Minimum reorder period, maximum reorder period, normal or average reorder period is nothing but minimum plus maximum divided by 2. If they only give some number, then that only you take. Just don't try to match it. Hope it's clear. No doubts. And yes, maximum stock level. One question in regular class we have solved, if you remember. When goods are perishable in nature. If goods are perishable in nature, always remember maximum stock level will be restricted to 1. Answer as per formula. 2. Maximum consumption before that goods gets perished. For example, in a whichever is minimum. For example, in a day you can consume 2000 kgs. In a day you can consume 2000 kgs. Now 10 days is the time for that particular product. After 10 days it will get perished. As per formula you are getting 25,000 kg as the maximum stock. As per formula how much you are getting? 25,000 kgs. As per usage thing, in 10 days max to max you can consume is 20,000 kgs. But as per formula it's 25. Are you going to keep maximum as 20 or 25? 20. You are not mad to keep 25 and waste other 5,000. Yes or no? And in the same question, in the same ICA question, that EOQ computation, number of orders, you remember, did we divide it by EOQ to calculate number of orders? No. We divide it by the consumption in that time period. Why, sir? Because in EOQ we are getting around 13,000 units. But maximum consumption would be done was 12,000. So although you get 13,000, in one order you can use only 12,000. So you considering the 12,000, we calculated number of orders. You remember, no? If at all EOQ was less than the 12,000, then we would have taken it as a actual one. I hope you remember that formula. Just asking you guys to go and check it once again. That's some. If at all your institute really want to complicate the things, they will do that. Okay. And hopefully answers at least they will match. Now listen. In the question, if they don't give how much is minimum, how much is maximum, or how much is average, only one information they will give. Either minimum consumption information they will give, maximum consumption information they will give, average consumption information they will give. There will be no way that you will be able to ascertain other two things. Then always remember, whatever they have given, that itself will be considered as all the three. For example, if they give minimum consumption, no information about maximum, no information about average, then minimum itself will be considered as a maximum also, average also. Hope this thing is clear. One more thing, just now it came like this and it went like this. It was important only. Leave. Anyhow, when we proceed, if I get it in my mind, I will tell you. This thing. Sometimes they won't give ROQ, they will ask you to find out ROQ. ROQ what, sir? Square root of 2A1 divided by C. C they will give. O they will give. A they won't give. What you should do? A is nothing but consumption, right? Take the average consumption. For example, consumption per week they have given. Take the average consumption per week, multiply with 52 weeks. You will get annual requirement. Per day they have given. Multiply with 365. If then question they tell consider 360 multiply with 360, you will get annual consumption. You are getting what I am trying to say? So in the question, if they don't tell how much is A, but consumption related information they have given, consider average consumption. Hope it's clear. And they might tell ROQ is 200 kgs more than EOQ. Then in Josh what we will do, we'll find out EOQ and we'll consider that only as ROQ. No, ROQ should be EOQ plus 200. All these basic things, when you see the question only, you will understand. So revise every question once again. Okay. But examiner's favorite it is, I am telling again and again and again. This quantity levels are there, no? Inventory levels. Examiner's favorite. What is perpetual inventory system, sir? Perpetual inventory system is basically where we will be keeping the track of each and every inventory. Whenever we receive it, whenever we issue it, we will be recording. It's not like a once in a time, like periodic inventory system. Once in a while we go and we check, we will write and come, how much is closing and all. No, every day we will be keeping the track of it. Just like this pharmaceutical, like pharmacy and all will be there, no. They will feed in the system, how much inventory is there, how much is spent, all those things, like that. That is your perpetual. But although you maintain perpetual inventory system, periodic count should be done now. Because just because in books the inventory is there, that doesn't mean that in go down also it's there. ABC analysis is what, sir? ABC analysis is what, sir? Basically dividing inventory into three categories. A category, B category, C category. A category is those category 70% or more in terms of value. See, this is subjective in nature. 70 means need not be exact 70 and all. Near. Basically major proportion in terms of value. That is, these are the category of inventory where value wise it will constitute almost 70%. But quantity wise it will be just around 10%. Value wise how much? 70%. Quantity wise 10%. B category are on an average, like average kind of thing. Value wise also 20, quantity wise also 20. Whereas C category is value wise constitute just 10%, but space wise 70%. I gave you example of jewelry shop if you remember. A category gold, silver, small portion, huge value. B category, I told you that box, bag, all those things. Moderate value, moderate quantity. C category, water bottles. Space is huge, required space, but the value is small. Got it? Next, VED analysis. Vital, essential, desirable. What do you mean by vital products, sir? By the way, ABC, which product will have more control? A category, then B, then C. Vital, VED. Vital means what, sir? Without these raw materials, without these materials, you won't be able to produce at all. So you should always keep a track of it. Essential, you can produce, but quality of the product will get affected. Desirable, very less impact on the production. You can produce also, and if you try to achieve, you can achieve that quality, required quality also. Next is FSN, fast moving, slow moving, non-moving. Fast moving are those which are inventory turnover is more. Slow moving is once in a while it moves. Non-moving is it's been a long since that product has been getting used or getting sold. So it's always better to write off the non-moving. Write off and recover it, how much ever is possible from it. Okay. So inventory turnover we have to decide. Before that, just in time one concept is there. What do you mean by just in time? Sir, just in time is basically a method of cost reduction. Kaizen costing. What is it, sir? We don't keep the inventory stock. We don't keep the inventory stock. Then what, sir? We'll have that system with us and our supplier, where whenever the requirement arises, that time supplier will send. So we are going to keep minimum stock. So holding cost will be, got it? That method we call it as just in time. In theory, they might ask just in time also. Important topic, theory point of view. Inventory turnover ratio is, sir, how many times our inventory is getting empty and refilled, in a given period. Okay. So formula is cost of material consumed divided by average inventory. Cost of material consumed will be nothing but opening stock of inventory plus purchased minus closing. Okay. And average inventory will be nothing but half of opening plus closing, or opening plus closing divided by 2. Half of opening plus closing or opening plus closing divided by 2. Hope it is clear. Valuation of material as per AS 6 is here. Go through it, all those things. I will tell that, I will show that there. Methods of issue. Because whenever we buy, we know how much is the money, payment we have done, price. But whenever issuing it to the production, at what rate we should issue, sir? We have different methods. First one is cost price method. In that we have FIFO, LIFO. FIFO is first in, first out. That is, whatever is the inventory is there in the beginning, that will be issued first. So stock will be issued that. I hope you know that FIFO, I don't have to explain more and more about it. LIFO is last in, first out. Whatever the recent inventory is there, from that we will be issuing the materials. So in the inflationary time, always LIFO is better. LIFO is better. Why, sir? Closing stock talks about beginning inventories in LIFO. So beginning inventory, of course, inflation situation means you would have bought at lesser price. So value of closing stock will be less. So automatically profit will not be overstated. 1. 2. As the cost of material consumed, cost of material issued will reflect the recent prices rather than old prices. So always remember, in the inflationary situation, out of FIFO and LIFO, which is better? LIFO. Okay. Next one is base stock method. Base stock method means minimum stock we will keep in the beginning only, that we are going to ignore it. Although it's there, we'll be carrying it in inventory, but we are not going to treat it as a available for issue. That one question is there in material. Please go through that. That 50 stock material. 50 base was there, 100 opening. In that 50 we kept as it is, remaining 50 we issued, like that. That one is your base stock method. That could be under FIFO or that could be under LIFO also. Got it? Second one is a specific price method. Specific price method is basically when directly you can identify which inventory bought at what rate. In that scenario, you will be issuing it that rate only. Okay. Whereas your average pricing, you have simple average, weighted average, moving average. Simple average, weighted average, moving average. Simple average means what, sir? You will be consider only average of the prices. Average of the prices. But remember, when calculating that average of the prices, even FIFO concept is applicable if you remember. For example, we bought 100 units at 10 rupees, 200 units at 15 rupees, 300 units at 20 rupees. How much? 100 units at 10, 200 units at 15, 300 units at 20. Correct? Now let's say we are going to issue 250 units. We are going to issue 250 units. For this 250 units, price will be computed on average of these three. 10 plus 15, 25 plus 20, 45, 45 divided by 3, 15. Got it? Now let's say next we are going to issue other 100 units. Now for this 100, what price should I consider? I can't take 10 plus 15 plus 20. Why, sir? Apply FIFO also along with that. Last time you issued how much? 250, no? Hello? That means this 100 is completely exhausted. In this 200, 150 is exhausted, which means 50 is there. Even 1 unit is there, you should consider that lot. No doubt in that. So here it is, you take these two. 15 plus 20 divided by 2. 17.5. Hope it is clear. And in the balance column, of course, only once you will write the amount, price column. After that, it will be just a units and amount column only. Please go through these questions once. Examination point of view, rare they have asked, but you know about your luck. Moving average, it could be simple average or weighted average. Moving average means, let's say April, May, June are there. July price we want. Moving average on the basis of 3 years average. That means you will take April, May, June's average for July. May, June, July for August. June, July, August for September. Like that. Previous 3 average you will keep taking. Weighted average means what, guys? You will consider quantity as well as prices. Based on that, you will take the average. Quantity as well as prices. Based on that, you will take the average. Sir, what if there is a normal loss? Guys, take it in the issue column. Only quantities, not amount. Why, sir? We know one thing. If it is a normal loss, it should be apportioned to good units. It should be apportioned to good units. If at all it is an abnormal loss, charge it to costing P&L. So always remember, if there is any abnormal loss, treat it like any other normal issue. Treat it like any other normal issue. If at all it is a normal loss, take it in the issue column only, but unit column, because denominator should get decreased, numerator amount should not get decreased. Normal loss amount should be apportioned to all the good units. Getting it or no? Okay, that one thing. Sir, returns, check whether are we returning it to supplier. If we are returning it to supplier, it will come in the issue column. It will come in the issue column. And if at all our supplier is, our department, production department is sending us back, then being a storekeeper, you are receiving it. Take it in the purchase column, receipt column. Take it in the receipt column. Okay, sir, in balance where we should write recent purchase. Treat it as a new purchase, recent purchase. Hope it's clear. Whenever you will receive something from returns, treat it as a new purchase. Got it? Market price method, you have two. Replacement, realizable. What do you mean by replacement, sir? Guys, for example, this calculator. In market today, the market price for this calculator is 250 rupees, let's say. Now, replacement price is 250. Replacement price is 250. Inventory will be valued at 250. Sir, realizable price means what, sir? Realizable price means, guys, for this particular calculator only, market is ready to offer 220 rupees. Then this inventory is valued at 220. So replacement means similar product in the market is getting sold at how much? If I want to change this product, at what price I can change it? Realizable means by selling this out, how much I can recover. That is realizable price. Notional price means not an actual one, predetermined one. One we have is standard price. Here we will predetermine it. At what rate I should be issuing my inventory to department A, department B, like that. Okay. Beginning only. How much is actual doesn't matter. We will be issuing at that price only. So also few questions are there if you remember, where it was something like this. How much is closing stock as per LIFO? If the standard cost is so much, whether it is undervalued or overvalued, like that. So those questions and all, go through that once. Okay. Physical verification, you can do continuous verification, that is perpetual inventory system, or periodic verification. Once in a while you will shut down the business, go and check how much inventory is there. Treatment of loss, there could be normal loss, abnormal loss. Normal loss means charge it to good units. Abnormal loss means treat it like a normal units only, calculate the cost for that and charge it to costing P&L. Charge it to costing P&L. Got it? These are the few things what we have discussed in the material costing. Of course, ascertainment of the cost of material come into picture. Ascertainment of, see there, what are the different items and how to treat those items. First one is discounts. Discounts can be three, guys. Trade discount, quantity discount, cash discount. Cash discount will be given for the purpose of prompt payment. So it has nothing to do with the material cost. Ignore. However, your trade discount and quantity discount. What? Trade discount and quantity discount, you are going to reduce it from the total cost of purchase. Got it? By the way, what do you mean by quantity discount? Discount offered for buying in bulk. Discount offered for buying in bulk. Sir, what if any subsidy is there? Then reduce it from the cost. Sir, taxes and duties, just check whether it is refund or credit is available. If yes, then ignore it. It's not a cost at all. No, sir, no credit or refund is available. Then treat it as a cost. Sir, penalty, demurrage, fine, detention charges, ignore. Abnormal items, charge it to costing P&L, not to your cost of material. Penalty, demurrage, fines, detention charges. Demurrage means what? Because of our transporter weights, generally ship and all, they charge us some penalty. That is demurrage for late unloading and all. Sir, few other expenses like insurance, commission, brokerage, freight, toll, etc. All these should be added to the cost of material. Sir, cost of containers, just check whether it's returnable or non-returnable. If it's non-returnable, full amount shall be charged. If it is returnable, then only take net amount. In simple, guys, always remember, from the suppliers go down, till our go down, whatever the expenses we incur, which are normal in nature and which are non-refundable, should be taken as a cost. All normal non-refundable costs are to be added to the cost of purchase. Treatment of normal loss, abnormal loss. See there, normal loss, abnormal loss. Normal loss means losses which you cannot avoid. Losses which you cannot avoid. That is due to inherent nature of the goods, product. Whereas abnormal loss is not due to inherent nature, which you could have avoided. So normal loss, what you should do, sir, add it to the cost of good units. What do you mean by good units? Total input minus normal loss. Abnormal loss, what you should do, sir, charge it to costing P&L. More about it we are going to see when we are doing process costing. Scrap recovery, what we should do, sir, related to normal loss, reduce it from the total cost while ascertaining cost per unit. Relating to abnormal loss, credit it to costing P&L. Or just reduce abnormal loss with that scrap recovery, remaining portion you charge it to costing P&L. Again, in process costing, we have seen all those things. Correct? And stores record could be maintained, guys. Bin card, store control card, stores ledger. Bin card means what, sir? In front of the inventory storage, bin will be keeping one card telling what is there inside that bin, what quantity it's there. Stock control card talks about what quantity is there, how much we purchased, how much we issued, how much is the balance. Whereas stores ledger talks about not only in terms of quantity, but also in terms of amount. That FIFO, LIFO, all those things. Got it? All these things we have seen already. Hope it's clear. Nothing extra is there. Shall we see the questions directly? I think for this, almost all the ICA material questions also we have solved, right? For this chapter. Correct. All those things you have to see once. Material cost. Guys, tell me now from the beginning. Let's see. June 23. MCQ. No MCQ. Oh. MCQ, June 23. Descriptive 3A. Okay, December 23. June 24. Descriptive. Descriptive. 24. Descriptive. MCQ 30 na. Descriptive. 2B. June 25. No descriptive. 8B. December 25. Yet to be. She is searching. Okay. First one, what you told? Descriptive. Measures. KPM Limited buys its annual requirement of 80,000 units of component alpha in 10 installments. Right now we have a policy of placing 10 orders. Okay. Annual requirement is how much? 80,000. Each unit of alpha will cost you rupees 10 and ordering cost is 25 per order. Inventory carrying cost per annum is estimated to be 20%. So carrying cost per unit per annum is 2 rupees. Correct? You are asked by the KPM Limited to find out the total annual cost of the existing inventory policy. Okay. Also, how much money can be saved by using EOQ? Very simple. How much will be our EOQ? EOQ will be nothing but square root of 2AO divided by 2 into A is O is 25, right? C is rupees 10 into 20%, purchase price into 20%. $1,440. $1,414 units. Now listen. Existing policy EOQ. Sir, how do you know that they are going to save only through EOQ? They ask save only, no sir. How they know? I told you, no, unless and until there is a quantity discount, your total cost under EOQ will always be lower than any other quantity levels. Correct? First, purchase cost. Both the scenarios you are going to buy 80,000 only of rupees 10. 8 lakhs only. Remember, it will change only and only when there is a quantity discount. Ordering cost. Existing 10 orders we are placing. Existing how many orders we are placing? 10 orders at the rate of 25, which will come to 250. But if you go for EOQ, how many orders you should place, sir? 80,000 units I want. From one order I am getting 1414. How much you are getting? 56.57. If it was 56.4, very good. Orders cannot be in the previous numbers. It should always be next number, although it is 56.01. 57 it is. Otherwise, you won't get the annual requirement. So, always order should be rounded off to next number. 57. So, 57 into 25. carrying cost in first scenario. You ask this every time and the same happens, correct? Hopefully in examination that won't happen. Half of order size. In the first scenario, try to understand. You need 80,000 units. 10 orders you are placing. That means per order you are placing 8,000 units. Correct? Half of 8,000 into rupees 2. 8,000. But for EOQ, half of 1414 into rupees 2. There is around 11 rupees difference. Generally, your carrying cost and ordering cost should match total. It should match and together it should be minimum. Okay. But here it's not matching because of rounding off. Now, that will give you total cost. Eight difference. $5,000. So amount saved by shifting to EOQ is 5,411. Anyone, any doubt in this? No doubt? $5,411. They got the difference. They didn't round it off. Distinction between scrap and spoilage they are asking. Scrap and spoilage is that while normal scrap arises mostly as a result of the processing of material, where spoilage will be due to defect in the operation or a material itself, which may or may not be inherent in the manufacturing process. Further, scrap has always a relatively low but definite value because we will be knowing exactly how much wastage we will get. But spoilage, it could be low, it could be high. Because raw material itself got spoiled. What you can do? Correct, no? These are the things. Hope it's clear. Next paper, may I know? No MCQ? No descriptive? What are you talking? Seriously? They ignored whole chapter they were telling. Sorry? I mean whole unit, yeah. My bad. I know, right? I mean 20 days back I wasn't like this. Some cursing. Eight B is which chapter in that? Material costing. That was third one. Third MCQ. Correct. What do you mean by bill of material? It's a schedule prepared by drawing department, issued to production department, telling what material to be used, etc., etc. What are the basic purpose for use preparing bill of material? 8B. Bill of material is a complete schedule of part or material required for a particular order prepared by a drawing office and issued together with the necessary blueprint of drawings For standard products, printed copies of material, bill of material will be kept with the blank spaces for any special detail of the modification to be filled up. The schedule details everything given out to bolt, nut, size, weight, everything will be there in that. What are the purpose? It provides a quantitative estimate of the budget of the material required for a given job, process or operation which might be used for control purpose. 2. It substitutes material requirement and expedite issue of material. 3. Storekeeper can draw up a program of material purchase based on this. 4. Provide a basis for charging material cost to the respective job or a process. Important question it is. Mark it as LMR. Already I have given it as LMR. Oh. Next up. MCQ 4 is what? Marginal costing. Huh? In which of the following methods of pricing cost lag behind the current economic value? P4. Correct, no? Yeah. Because we will be issuing at the old price. Current market price could be something else. Old market price is something else. For example, you are a gold dealer. Gold dealer. Okay. Now, you bought something at 6,500. Now the price is 13,000. Now if you use FIFO, you will be issuing it out of 6,500 or 13,000 first. 6,500. What is the current market price? Which is lagging? I mean, brain is lagging. Other than that, FIFO method, prices will lag. Got it? Next. You didn't get madam. Got it. Seventh. Calculate inventory turnover ratio. Formula. Consumed divided by average inventory. 10,000 to 5,200, right? Sorry? If at all they had given it as material purchase, then you should find out consumed first. Opening plus purchases minus closing. Next. Company requires 1 lakh units of an item annually. Cost per unit is rupees 10. Ordering cost is rupees 500 per order. Inventory carrying cost is 50% per unit per annum. 50%, can you imagine? The EOQ will be how much? Square root of 2 into A is 1 lakh, O is 500. Carrying cost will be half of rupees 10, rupees 5. Option B. Sir, this one also we should round it off to next number? No. This one nearest number. Which of the following method is used for evaluation of equivalent production? That you leave. That is relating to process costing actually. But generally, out of all the pricing methods, which one is better? Very good. Weighted average is better. Whenever inflationary situation, that time LIFO is better. All other time, it's always and always weighted average. 8B na. Again theory question you are telling. Seriously? Discuss the advantage of ABC analysis. Okay, discuss there. Control, all those things. Important concept. Next. Hope you are able to understand this much. December 24. Ninth one is marginal. The raw material prices are suffering from inflation. Suffering from... Which of the following method will give the lowest gross profit? Now you tell. Now you tell. Very good. Answer LIFO only. That's what we told. Cost will be more under LIFO in the inflation situation because it takes the recent prices. Closing stock will be less under LIFO because it takes old rate. Closing stock will decrease in closing stock, decreases the profit, increases in cost, again decreases the profit. So under LIFO only it will be less. Understood? Next. I say material question. Also study mat mein this they have included it, right? Donks Limited uses 3 type of material PQR for the production of product M for which the following data is applicable. Raw material PQR are there. To produce 1 unit, they need 10 kg of P, 4 kg of Q, 6 kg of R. ROQ they have given, price per unit they have given, delivery period. Delivery period means what? Reorder period. Reorder period means what? Lead time. Correct? Reorder level. I'm proud of these faculties who lives on time, isn't it? Very good, yeah. Reorder level, minimum level. Even I want to become like that. I don't know. Time won't permit at all. No, I mean, I can't. I feel like you came from that far. You know, if you do one more sum, that makes more sense. That's what I feel. No. Is Dilip sir is in Bangalore? Yeah, he is in. No, he's not. I think he went out. He will come back. Why? What happened? Just ask the okay. Weekly production varies from guys. Shh. Weekly production varies from 175 to 225, which means they are talking about final product. Here average is 200. This will be used for consumption purpose calculation. Getting it? Now shall I write minimum consumption and maximum consumption here only? Minimum you are producing 175 units per week, and always remember this kind of questions always remember the units should match. Data if it is given per week, consumption also should be per week. Data is given per day, consumption also should be per day, like that. And also remember, if at all they give weekly data for one, daily data for one more, don't convert weeks into day. Better to convert days into weeks, because if you divide by 7, fraction might come, decimals might come. But if you multiply with 7, no, if decimals and all will come. Hope it's clear. We'll start now. P 10 4 6. Correct? Now listen. 175 units are there. Minimum 175 units we are producing. So 175 into 10. 1750. 175 into 4. Sorry? 700 kgs. 175 into 6. 1050 kgs. Got it? Maximum will be how much, sir? Maximum we are producing it 225, right? 225 into 10. 225 into 4, 225 into 6. Got it? First, minimum stock of P. Minimum stock level, what is the formula, guys? Reorder level minus average into average. Reorder level for P is 8000 kgs minus, give me a second, minus average into average. Average is how much? 200 into 10, 2000. Average consumption is 2000 now. Into average reorder period, which is 2 weeks. 4000 kgs is the minimum stock of P. Next, minimum stock of Q. Reorder level 4750 minus average consumption 4 into 200, 800 into average lead time 4, that is 1550, right? 1550 kgs. Reorder level of R is minimum stock level they have given, so we can use that formula only rather than maximum into maximum. Use this formula because for some reason they have given minimum, no there. So minimum stock level is how much? 2000 plus average into average. Average is how much? 6 into 200, 1200 into 3, 5600 kgs. Correct? Hello. Average stock of P they are asking. Minimum of P we know. To find out average, either you are going to take minimum plus half of ROQ or minimum plus maximum divided by 2. Let's do minimum plus maximum divided by 2. Maximum will be how much? Maximum will be reorder level 8000 plus reorder quantity 10,000 minus minimum into minimum. Minimum is 1750 into minimum lead time is 1. 18,000 minus 1750, 16,250 kgs. Don't take this as average. This is maximum. Now maximum plus minimum divided by 2 is average. Maximum is 16,250. Minimum is 4,000. 20,250 divided by 2, 10,125. Anyone any doubt in this? Pakka. 7 marks, cakewalk. Context होता है. You are laughing at yourself. That's it. Huh? 8B is also there. Huh? This 10,125 only we got now. If I am not wrong, this is the screenshot attached. If this is the screenshot attached, that means they might have taken screenshot from some other material. I don't know which material. Hopefully answers are matching. About JIT it is. Jayantina. X, Y, Z. Eleventh. Yeah, exactly. Correct. What the hell you are doing? Still you had zero interest in writing that, no? Where is printout? 11th marginal cost. Then 8 ABC. ABC, JIT, bill of material are the three important theories. Not, yeah, you should go through it. This also you are taking printout or writing? Oh, that's it. All papers are done. Oh my god. Now tell me this. Set 1 now. June 23. December 23, set 1. MCQs. Huh? MCQ 4. 7. 2B. Set 2. MCQ 4. 7A. 8. Hey, 7A should be marginal. Leave. Tell. 6 will be marginal there. Correct. 14 marks. Next up. June 24. Set 1 now. Okay. December 24. No MCQ. 2B. Set B. Set 2. 1, 2, 4, 6. 8 marks from MCQ. June 25. Ah. 8B na. 3, 4. 3, 4, 5. 3, 5. 3, 5. 8B. MCQ. Descriptive. Okay. No MCQ. So December 23, set 1 now. Oh, by the way, this third one we didn't solve. Royalty paid on sale 89,000. Software development is 22,000. Direct expense will be 1,11,000. I told no, same together. Next. Fourth. I'm proud of my patience. Next. Seventh. Material you would have written it as MAT. What you guys have done? He's better than. He's starting only first two papers. PKR Tubes Limited are the manufacturers of picture tubes of TV. Following are the details of their operation 22-23. Ordering cost, cost of tubes, minimum usage 50 tubes per week, maximum usage 200 tubes. Lead time, normal usage 100 tubes. Now don't tell 50 plus 200, 250 divided by 2, 125 sir. Average is 125. No, they only have given. Inventory carrying is 20% per annum. Compute EOQ. If the supplier is willing to supply quarterly 1500 units at a discount of 5%, is it worth accepting? 2. Reorder level. 3. Maximum level. 4. Minimum level. And also this question also you have to go and check. How much is the minimum discount should be expected if at all we want to accept the project? That one question I have formulated and showed you, remember? 2.82% something we got discount should be so much. That is what we will take. We'll take total cost as per EOQ should be my maximum cost. To get that, how much should be my discount? Like that. Or for this question only, I will show it later. Okay. Listen. First they are asking EOQ. Formula. One second. Two into A, do you know? A, we don't know. But normal usage per week is 100 tubes. We know this. Which means for 52 weeks, ordering cost per order is how much? 100. Carrying cost per unit per annum is how much? 500 into 20%. 100. How much is EOQ? Square root of 10,400. One or two tubes. That will be your EOQ. Hope it is clear. Supplier, if at all willing to supply quarterly 1500 units at the rate of discount of 5%, is it worth accepting? Guys. First, purchase cost, EOQ, quantity discount. Purchase cost 5,200. Under EOQ, we are going to spend around rupees 500 per tube. How much it will be? 5,200 into 500. 26 lakhs. But our supplier is luckily giving us a discount of 5%. That means price won't be 500. Price will be 500 minus 5%, which is 475 if I am not wrong. 475 into 5,200. 24 lakh. Hope it's clear. Next, ordering cost. Under EOQ, how many orders to be placed? 5,200 divided by 102. $50.98. 60 into 100. 50.98 or 59. 50 point? That is 60, correct. Now I won't tell anything because I am already suffering from your curse. Huh? Cold, fever, irritation, irritation. Again she cursed. Aliv, how much it is? 51, no? 51 into 100. Under quantity discount, we are placing 4 orders, so it will be just 400. Correct? Carrying cost under EOQ, it will be half of 102 into rupees 100. $5,100, but in this, remember, half of 1,600, 1,500, 1,500. Half of 1,500 into not rupees 100, guys. That is 20% off. 20% off 475. 95. How much it is? 71,000. Total, please. Difference. 5. So, if the supplier is willing to supply quarterly, will you accept? Yes. Because we will be saving around 68,550. Reorder level formula. Mega. Reorder level formula. Reorder level. Very good. ROL is equal to, guys, max into max. Correct? Maximum consumption is how much per week? 200 tubes. Maximum lead time is 8. Next, what they are asking? Minimum level. Minimum is what? Reorder level minus average into average. Average is how much? 100 into 7. 6 plus 8 divided by 2. 900. Hope it's clear. Oh, here only it was there. EOQ we got 102 na. Actually, ordering cost they are taking proportionately. If you want, you also can do that. Why, sir? Try to understand. If at all we place the order there, per order we are going to place 1,500 units. Correct? Based on that, in 4 orders we will receive 6,000 units. But actually we want is 5,200 also. 5,200 only, no? So, ordering cost what we get is for not for 5,200 units, but for 6,000 units. So, for 5,200 question mark, like that proportionate you can take. Okay? That one thing you should keep in mind. And reorder level you got 1,600. Yeah. Maximum we got. Maximum where we have written? Question only we have written now. A maximum where we did computation? We didn't do the maximum. Hey. Maximum we did somewhere. I don't know where it went. Huh? Shut up. Yours cuts only. Because I remember solving it. Hey! I remember taking average. Okay. Live. Maximum level will be nothing but your reorder level 1000. Now don't tell that also, it's not done now. Jatre. Maximum into maximum. That is 200 into 8. 1600. Correct? Maximum level will be reorder level plus reorder quantity. Here reorder quantity will be EOQ plus, sorry, minus minimum into minimum. Minimum is 50. Minimum lead time is 6. How much it will be? 1402. Minimum level will be reorder level 1600 minus average into average. Average is 100 into 7. Yeah, 7 I told for which one then? 6 plus 8 divided by 2. I remember telling this. You remember? Then where did that go? A. I remember writing 900 also. We did the minimum. We didn't do maximum. Correct. That might be the case. Not that last year and all you have done. So. Whatever it is. I hope you guys understood this. But yeah, that one rectification you do there. And yeah, that minimum discount to be accepted, I was telling, no. Let's say you reject it. Because as per your policy now, you are getting cost as 1 lakh. As per EOQ, you are getting 98,000. Of course, you will reject it. Why? EOQ will give you less cost. Now, how much percentage discount you should expect so that you will accept the project? You will accept the project only and only if the cost becomes less than 98,000. So what you will write? You will write like this: purchase cost plus ordering cost plus carrying cost should be lesser than at least equal to 98,000, not more than this. So for this 98,000, how much should be the thing? Taking the purchase price as X, you can solve it. Got it up? Then X you will get, difference find out, current price as well as X. You will get to know how much discount you want in total. Basically that sum we have done already. I don't want to solve it again now. No time. Hope you remember which question I am talking about. Hope you remember in the exam also. If here it's not fine, but there, huh? What? Yeah. Answer. Remember answer. How to do it. That you remember. Next. Prepare a statement showing difference between bin card and stores ledger. Bin card only keeps the information about how much inventory is there right now in that particular location or a bin. Whereas stores ledger talks about what was the opening, what was the receipt, what was the issue, all those things. Got it? See there, bin card is maintained by the storekeeper, whereas stores ledger will maintained by the costing department. In fact, stores ledger keeps the track of prices also. Correct? No, it contains only quantity data. Here it contains value also. Entries are made when the transactions are in place. It's always posted after the transaction only. Each transaction is individually posted. Here summarized, and inter-department transfer do not appear in bin card because transfer related we don't write only, but here it will be there from one job to other job. Set 2. Oh, okay. 10th one they didn't tell material. Now you are telling it as material. Thirteenth one, what you guys have written it as? MC na. Let's see. At EOQ, the following is true. Ordering cost is minimum, carrying cost is minimum, ordering cost is equal to carrying cost, purchase price is minimum. Ordering cost is minimum. Very good. Ordering cost is equal to carrying cost. Okay. Next up. Eight B now. Here you didn't write MCMC. Eight. Requisites of good material control system, why it is required. That essentials and all are there, no? All those things. Done. Next one, please. 7A now. 7A is budget. That also you have written into the MC. 7A. 7A you have written into the material now. Budget. Four. Term 1, set 1, how much? Fourth question, huh? Very good. Marginal costing it is. Sure, madam. Marginal it is. Marginal. Anil Limited buys its annual requirement of 36,000 units in 6 installments, which means each and every order we are getting 6,000 units. Correct? Each unit cost 1 rupee and ordering cost is 25. Awesome. Inventory carrying cost is estimated to be 20% of unit value, which is rupees 0.2. Correct? Compute the total annual cost under existing policy. Determine how much money can be saved in EOQ. Simple one. Sorry. EOQ. This hardly takes 2 minutes now, this question, because we have already solved many questions like this. 2 into A is how much? 36,000 into ordering cost is 25, carrying cost is 0.2. EOQ is how much? 3,000. Okay. EOQ is 3,000. Next we have to compare our existing policy as well as EOQ, right? First is purchase cost. We are going to purchase 36,000 units at the rate of 1 rupee, which will come to 36 in both the scenarios because there is no quantity discount as such. Ordering cost, in the first scenario we are placing 6 orders into 25, which will come to 150. Whereas under EOQ 3000 means we have to place 12 orders into 50 will come to, 25 will come to 300. Correct? No? Carrying cost, half of 6000, thank you, into 0.2, 600. Under EOQ it will be 300, that is half of 3000 into 0.2. Total will come to 36,750, 36,600. So you are going to save around 150 rupees. Simple question for this 7 marks they had. I mean, good only. When I was taking CMA batch, one girl was there. Whenever I used to tell simple question, why they have given this, she used to give one look like this. Not you. There in Chennai it was. Management accounting. Sir, why are you telling like this? It's good for us only, no? It is. Next up. No MCQ? Sure? Twelfth one, what you have written? Sure, 2B na? This if you remember. Only one girl, not here, there. Purchase department of S Limited has received an offer of a quantity discount on its order of the material. If at all you place the order somewhere between 500 to 1000, then it is 1180, 1000 to 2000, 1160, 2000 and above 1140. Similar question we have solved in the class if you remember. The annual requirement for the material is 5000 tons. Delivery cost per delivery is 1000. Holding cost is 20% of the material cost. Calculate and advise purchase department most economical purchase level. Try to understand as I already told you, if you see carefully, your delivery cost is comparatively cheaper than carrying cost, which means order size. Sorry. Stop, madam. I'm sorry. Stop now. She's still doing it. Oh my god. Nothing. She would have asked earlier only. She was so busy in cursing. She didn't want to stop in between. She completed that sentence and then now she is like, sir, what I did, sir. So generally we take minimum numbers, right? So 3 levels I am going to take. 500, 1000, 2000. Correct? No. I am not going to explain again why we will take minimum numbers for this. Ordering cost, carrying cost comparison I told that day. Now, first purchase cost. 5000 into 1180. 80. 5000 into 1160. 58 lakh. 5000 into 1140. Correct? Next is ordering cost. Try to understand. If at all you are placing an order for 500 units, that means you have to place 10 orders. 10 order into 1000 rupees. 10,000. 1000 units if you place means you have to place 5 orders. 5 orders into 1000. 2000 means you have to place 2.5 order, which is 3 orders. 3 into 1000. Hope it's clear. Next, carrying cost. Half of 500. Half of 500 into 1180 into 20%. This will give you carrying cost per unit per annum. How much? 59,000. This one, half of 1000 into 1160 into 20%. 1 lakh. Half of 2000 into 1140 into 20%. 2,28,000. Total cost, please. ₹59 lakh. So basically second option is giving you least cost out of all. So 2000 units is a better option. Sorry, 1000 units per order is a better option. Hope it's clear everyone. No doubts? Next. December. Set 1 nothing is there. Explain in detail CAS 6 material cost. Okay, whatever you know about material cost, you have to write it down. I mean, what are the things going to be forming part of material cost? All those things. MCQ. First. That is marginal costing. Marginal. Next up. Descriptive. No descriptive. Whole chapter they have ignored them. Crazy. Units. A whole unit. Sorry. June 25. Set 1 now. Which of the following method of pricing cost lags behind the current economic value? Repeated question also you take so much time, huh? Next up. Similar question, can you do it on your own? I think prices they might have changed. But why they have given price there? Price also same. Huh? Name PQRC they changed to ABC. That's it. Discuss the bill of material and examine the purpose. Next up. Danger level is equal to dash into maximum reorder period for emergency purchase. Normal rate of consumption. If at all they particularly tell minimum, then only minimum. Otherwise, it's always average. Next up. Opening stock is 10,000, closing is so much, consumption is 78,000, average inventory is 10 plus 16, 26 divided by 2, 13. 6 times. How many times in a year? Inventory holding period? In 12 months or 365 days. How many days we have held the inventory? Basically, in a year, 6 times means on an average 2 months we held the inventory. Correct? So if they ask average inventory holding period, this is how we are going to do. In a year, how many days or months divided by inventory turnover ratio. Next, MCQ only 2 are there. Sure, dust is not there. There, you are also feeling it. So I am not the one who is getting cursed all the time. For you, it is from different person. 8B, right? 8B, no?
Sir, I'm not saying about this.
Discuss the requisites of material control system. That is why material control system is required. It is repeated question again. December 25. No material. Sure. 2B na. From the following, calculate EOQ, ROL, maximum level, minimum level. Reorder quantity is to be calculated on the basis of ROQ they have given. Cost of placing purchase order is 20. Number of units to be purchased is 5,000. This is annual requirement. Purchase price inclusive of transportation cost. Annual cost of storage per unit. Carrying cost they only have given. Okay. So square root of, basically they are asking us to find out EOQ, ROQ using EOQ. 2 into annual requirement is 5,000, ordering cost is 20 divided by carrying cost is 5. 200 units. Reorder level is what? Maximum into maximum. Maximum consumption is how much? 20 units per day. Okay. Maximum lead time is how much? 15. So reorder level is equal to maximum level, that is reorder level plus reorder quantity, which is basically EOQ, minus minimum into minimum. Minimum consumption is, try to understand, maximum is 20, okay. Average is 15. How did you arrive at average? maximum plus minimum divided by 2, correct? So 30 is equal to 20 plus x is equal to 10, which means minimum is 10. I mean, you don't have to show these workings. If at all you are confused how we got that, then this is the workings. So 10 is minimum. 10 into 6 minimum lead time, 500 minus 60, 440. Minimum level, that is reorder level, 300 minus average into average. Average consumption is 15, average lead time is 10, 150. As they had given emergency purchase also, they should have given danger level, but they didn't give, but you compute. That is normal consumption 15 into reorder period, emergency time for reorder period, emergency reorder period, that is 60. Hope it's clear. Next one, please. And yeah, before going to examination, that question also see and go once. Computation of total cost of material, insurance, container, all those things will come now, GST, all those drama, that thing see and go. And also sometimes they might give other expense, 1% of the total cost. Now don't take whatever the total you got, 1% of that is other expense. No, whatever you got plus that other expense, that is equal to total cost. So it is like whatever the cost is there, that is 99%, 1% question mark, that will give you 100% of cost. One question we have solved already in the class. You go and see, we'll get to know, you will be able to remember it. Component A and B are used. Normal usage 300, maximum 450, minimum 150. Okay, reorder quantity they have given, reorder period they have given. Reorder level they are asking. Reorder level is nothing but maximum into maximum. Maximum is 450. Reorder maximum is, for A, it is 6. How much it is? 2700. For B, it will be 450 into 4, 1800. Minimum level, reorder level 2700 plus average into average, right? Sorry, minus average into average, 300 into 3, 4 plus 6, 10, 10 divided by 2, 5. How much it is? 1200, right? 1800 minus average into average. Here average is 3 weeks. Consumption is 300. 300 into 3, 900. Correct? Maximum level is very simple. Reorder level 2700 plus reorder quantity 2400 minus minimum into minimum. Minimum is 4 weeks. Consumption is 150, which is 600, which will come to 4500. Next one, reorder level 1800, reorder quantity 3600 minus minimum into minimum, 2 into 150, 300, right? 5100. Hope it is clear, everyone. Average stock level, that is minimum plus maximum divided by 2. 1200 plus 4500 divided by 2. 5700, 2850. Correct? 5100 plus 900, 6000 divided by 2, 3000. Oh, answer key is not there. Fine. Next up. Done. Align the concept of EOQ. Align. What EOQ, you know about it. Derive the formula also if time permits, and you know to derive all those things you do it. Okay. You know about EOQ, no? And if possible, draw this and come. This will be your carrying cost decreasing along with the units going down. These are units, no? These are cost, right? Carrying cost will keep decreasing as more and more units you ordering cost. This is ordering cost. Carrying cost, it will keep increasing. Here somewhere EOQ will come. This also you draw and come. With that, we have completed our material cost. At 2:10, we will be starting with next unit. Fine. Today's our target is to complete chapter 3 immediately. Will start after lunch break. Okay. I mean, just revise all the 24 standards. Section 148. That thing we will revise. CASB related stuff. And we'll see MCQs. Okay. And after that, we'll do labor, overhead, and unit. Job, batch. And if time permits, cost accounting system. These many things today we'll try to complete. So tomorrow we'll be left out with process, service, contract, marginal, standard, budget. If tomorrow it won't be possible to complete, don't worry, day after tomorrow we'll do. Okay. Now we'll be starting our revision on cost accounting standards. Okay. What do you mean by cost accounting standards? It's a guidelines or a principle. It's a guidelines or a principle. Why did you why people formulated it? Why CASB formulated it? To bring uniformity now. Standardization for the purpose of standardization of the method and process of cost determination, measurement, presentation. Correct? What are the significance? It brings consistency, comparability, transparency, improved decision making, regulatory compliance, resource allocation and efficiency, cost control. Correct? And Companies Act 2013, Section 148 deals with this. And yeah, CASB basically is the one which is responsible for formulation of this. So we have 24 standards. We'll revise all the standards name. Come again. First one, classification of cost. 2, capacity determination. 3, production overhead. 4, captive consumption. 5, average transportation cost. One set is done. 6, material cost. 7, labor cost. 8, utilities. 9, packing. 10, direct expenses. 6, material. 7, labor. 8, utility. 9, packing. 10, direct expense. 11, admin overhead. 12, repairs and maintenance. Good. 13, service center or service cost center. 13, 14, pollution control, not pollution. 15, selling and distribution overhead. So 11 is what? Admin overhead. 12 is repairs and maintenance. 13 one is service. 14th is pollution control. 15th is selling and distribution. 16th is depreciation and amortization. 17, interest, borrowing cost. 18, Virat, research and development. 19, joint cost. 20, royalty. Technical know-how. 21st, quality control. 22nd, manufacturing cost. 23rd, reduction in the overburden cost. 4th one, 24th I mean, treatment of revenue in the different cost accounting statements. Correct? We'll revise once again. 1, 2, capacity determination. 3, production overhead. 4, captive consumption. 5, average transportation cost. 6, 7, 8, 6 is material, 7 is labor, 8, utilities, 9, packing, pollution, very good, packing, 10, direct expense, done, 11, admin, 12, R&M, 13, service, 14, pollution control, 15, selling and distribution, 16, depreciation, 17, borrowing cost, interest, 18, research and development, 19, JST, 20, royalty, 21, quality control, 22, manufacturing cost, 23, overburden cost, 24, treatment of revenue. Sorry? All these things you have to read once, okay? All the standards once. And fine. We'll see few MCQs. Fast.
Yes, sir.
Before that, give me a second. Section 148, I assume you guys have learnt in law, company law. Section 148. There or not there? It's there, right? Pakka? 200%. Okay. Cost accounting standards. Quickly tell me the MCQs from the question paper 23. Fifth, which of the following deals with depreciation and amortization? 16. 8 deals with utilities. 12 deals with R&M. 14 deals with this only you do. 14 deals with pollution control. Next, 2B na. Chale 2B. This one. Advantages. Right, okay, advantages. How to determine the installed capacity? That is your overheads. Next. Only MCQs you tell, because PYPs we already discussed yesterday once. December 23. Average cost of transportation 5. 6 is what? Material. 9 is what? Packing. 16 is what? Depreciation and amortization. Okay. Yeah. June 24. Second is deals with production and operation overheads. 3, right? Oh, okay. 3. 2 is what? Capacity determination. 5 is what? Average transportation cost. 10 is what? Direct expense. Done. Next. Seven. R&M. 12. 4 is which one? Captive consumption. 15 is which one? Selling and distribution. 19th one is joint cost. June 25. 10. Section 148 deals with all this cost accounting, cost bookkeeping, cost records, cost auditor, blah, blah, blah. I mean, in law paper, if you get this questions and all, select the right section. In costing, always select 148. Cost accounting deals with in like section 148. What? Okay, fine. December 23, set 1. First one, dash deals with production and overhead. 3. 5 is equivalent transportation cost. 9th one, packing. 16, 17, 18. What? That only. 18. She is in the joint cost mode. So when I am asking 18, she was still in 17. So remember this 12 and 18 multiples of 6. No. 12 is R and D. 12 is R and M. 18 is R and D. 24th is also R only, but revenue, not repairs. R, you remember. MRRR, you remember. Material 6. Repairs and maintenance 12. Research and development 18. Revenue 24. MRRR. Okay. You remember, like, imagine now you remember MRR. There you go. 12 they have asked whether it is R and D or R and M. That can't help. Descriptive you leave. Next. Virat Kohli researching. Virat Kohli is into research and development now. In this nothing is there, huh? Repairing and servicing come together, huh? 12 and 13. Oh, okay. Test is not a cricket at all, no. Test is the worst form of cricket, where it's called as purest form of cricket. Test who will watch, isn't it? See? Who will watch 5 days and all? That too when the match is happening in Australia and England, zero interesting. Ball won't swing only. Yeah. Youth ball. Yeah. Test cricket is not beautiful at all. People simply call test is beautiful. No. The way the Duke ball moves, no. That won't, much interesting to cricket fans. No. Yeah, 5 days time pass. Correct. I agree with you. Test and all, who will watch, isn't it? Oh, you play directly 2020 only. Huh? You watch test, then you will become fan of. You don't need patience for test now. That is gone. When Pakistan and India were playing, no, in the batting picture, that time we wanted patience. Now and all, like in 10 overs, match will change. Better than T20, more interesting than T20. Oh, that is sarcasm. Oh. Leave. Now listen. Depreciation and amortization 16. 15 is which one? S&D. 12 is which one? R&M. 9 is which one? Packing. Abnormal administrative cost, what you should do? Any abnormal cost, exclusion from the cost calculation. It should be charged to costing P&L. Not P&L, costing P&L. If at all it is integrated cost accounting system, then P&L. Next up. One second. Set to its nothing is there. Huh? All this theory you go through once, okay? 7th one now. 9 deals with employee cost, direct expense, R&M, packing material, section, eight, 20, joint cost, quality control, manufacturing cost, dash nominee required from regulate like CAG, RBI to the CASB board, that they haven't given in study material at all. Two, you think? CASB board. Nice. Next one complicated. Which one? This one is complicated. What are you talking? CASB composition. CASP, not CASP. We'll go to your website only. Wow. It should be there in your law. There is no particular number. Nominee they are telling. Some nonsense thing. 2 they are telling in answer P. Then 2 it should. Not sure exact correct answer is which one. But yeah. I don't think so it will come in paper. Because nowhere in study material it is there. Next. Next. Set 1. Joint cost. 4 is which one? Captive consumption. 8. Utilities. 15. Next. Huh? Dash deals with depreciation and amortization. 10. 9. 12. R&M deals in 12. 16. 10. Yeah, all this whatever is there in the material, just once go through it completely, all the standards once in depth. Okay, fine. Okay, now we'll be starting our discussion on employee cost or also labor cost. So basically whatever we pay to our employees, everything will be treated as employee cost. Need not be only payment here, anything, even perquisite what we give, monetary, non-monetary, whatever the benefit, whatever we incur towards employees, everything shall be treated as employee cost. Everything shall be treated as employee cost. Employee cost also you can divide it into direct, indirect. Direct what you should do? Prime cost. Indirect will be overheads. Correct? Okay. So what are the aspects to be considered, sir? Remember, as per CAS 7 measurement, employee cost should include gross pay including allowances, employer's cost providing benefits, bonus, ex gratia, managerial remuneration, voluntary retirement, all those costs, exclude imputed cost. If at all any imputed costs are there, that is actually not incurred, opportunity kind of stuff, that you should exclude. And idle time. Okay, variances, all these things are there, you just go through that once. But remember, this basic criteria or basic condition, whatever you incur, on an employee will be treated as employee cost. Now listen, sometimes they might ask you to calculate employee cost. Sometimes they will ask you to calculate employee cost. Sometimes they might ask you to compute employee earnings. Employee earnings. Now listen guys, employee cost means you should look from the employer point of view. Employee cost means you should look from whose point of view? Employer point of view. For me it is cost, right? If I have hired you guys, then for me it is cost. Employee cost means, or employee earnings means, you should see from the point of view of employee. That is, how much I am getting as an employee. For example, you are my employees. I am your employer. Now, employee cost means they will see from your point of view. You got in one piece only? Here it is. There only. How much she is cursing, I don't know. 11,000. Huh? Now listen. Employee cost means, if I am an employer, you are my employee. Employee cost means you should see from my point of view, finally from my hand how much is going. Employee earnings means your point of view, how much you are getting in hand. So try to understand. If at all they ask you to compute employee cost, whatever our employee is going to get, salary, bonus, all those things, DA, all those things, along with that, over and above that, I have to pay something called as ESI EPF. Correct? I have to pay something called as ESI EPF. Now, ESI EPF over and above that I will contribute. No. So, that should be considered. Okay. So, always remember, while computing employee cost, employer contribution should be added to the cost. Employer contribution to PF, ESI, all those things. Sir, employee contribution, what we should do, sir? Ignore. Why? For example, if I am paying you guys 10,000, extra 2,000 I am paying to government, my total cost is 12,000. In this 10,000, to your hand I will give 9,000. Your contribution of 1,000 I will give it to government. But net while booking expense, did I book it as 10,000 or 9,000? 10,000. Now, 10,000 itself is my cost, no? Whether I will give it to you full 10,000 or no, that doesn't matter. Whole 10,000 is my cost, no? So, always remember, whenever you are finding out employee cost, employer contribution should be considered, employee contribution should be ignored. So, when you are computing employee cost, employer contribution should be considered, employee's contribution should be ignored. Now, let's say you are computing employee earnings. Then, employer is contributing to government. Is employee, as an employee, am I getting it? No. My contribution also is going to government. So, try to understand, when computing employee earnings, you should reduce. Reduce what? Reduce employee contribution, because whatever I am earning, that I am not receiving, no. And employer contribution, ignore. Try to understand, while computing employee cost, consider employer contribution, ignore employee contribution, add it. When finding out employee earnings, reduce employee contribution and add employer contribution. Got it? And listen, there is something called as engineering department or a industrial engineering department. Their work is very simple to do the time and motion study. That is, how much time is required for the work, how much movement will be involved, how to reduce that movement. All those work will be taken care by whom? Engineering department. Okay. So all those things you go through once. Job evaluation could be done on 3 bases: point ranking, grading. Point ranking means based on the requirement of the job, I will rank. I will start giving points. Qualification, okay, high qualification required, more points. Low qualification required, less point. Skills required, more point, like that. And I will get to know exactly how much to be paid for the particular job. Whichever earns, like points are more for the job, that job people will get more. Where points are less, that job people will get less. Ranking method is very simple. Normally rank 1, rank 2, rank 3 kind of thing. We'll rank the jobs according to that. Whereas grading method is grade A, grade B, grade C, like that. That work will be classified. Okay. So merit rating is based on how our employees are dealing the things. How our employees are doing the work. Based on that, we will assess it. That is merit ranking. Guys, there is something called as timekeeping, time booking, payroll. Timekeeping, time booking, payroll. Timekeeping means what, sir? At what time employees entered the organization, at what time employees left from the organization. Morning, evening time. Attendance. That we call it as what? Time keeping. Time keeping. Okay. Let's say I entered at 8 a.m. I left at 8 p.m. So now this record shows me time keeping. 12 hours I was there here. Correct? Now, in this 12 hours, what work I have done? That segregation will be there, no? For the respective jobs. That we call it as time booking. Time booking. That is allocation of the employee hours to the respective jobs. Based on the time spent, that process we call it as time booking. And payroll means what? It's a department, payroll department, who prepares how many hours they have worked, what rate to be paid, how much should be paid. That calculation. Sir, what are the different methods of timekeeping? One is attendance record, very simple. They will come, they will sign, and they will go. Disk method, they will be given with one disk. When they come into the organization, they will put it to the box or something. Now, our timekeeper will take out that and will record who and all has come. And while going out, they will take it and go. That disk. They will take that disk and go. So, that time they will record at what time employees have left the organization. Proxy possibility is too much in this. Time record clocks, that is basically, it is an automated system where clock itself, I mean clock time kind of system will be there, or basically your biometric ID and all will be there. No, ID cards. You scan the ID card, it will show at what time you entered. While going out, you scan, it will show at what time you gone out. Biometric is based on physical traits. Fingerprint, retina scanner, face recognition, thumb, like that. Now, what are the different methods of time booking? Day time sheet. All the workers, that particular day, what and all different workers has done, that thing will be taken. Weekly time sheet, but it's for a whole week, not per day. Job ticket, at what time job started, at what time job ended. Relating to that particular job it takes, not particular labor. Labor cost card tracks multiple workers' contribution to that particular job. And time and job card is basically attendance as well as job specific time tracking, all those things. Just go through it once. Now listen. Something called as labor turnover. What do you mean by this? Labor turnover. Oh my God. We have discussed formula, everything we have done, no? God.
In the organization, the employees, existing employees are there, and someone new joins there.
Basically, change in the composition of employees in the organization, that we call it as labor turnover. People entering in, people exiting. Okay. Change in composition of employees, we call it as what? Labor turnover. Now, labor turnover might be due to two reasons: voluntary reasons, involuntary reasons. That is, when employees leave on their own, I don't want to continue here. Voluntary. If organization removes them, we don't want you. That is involuntary. What are the causes for the labor turnover? Why employees will leave? Three reasons you can tell. Personal cause, unavoidable cause, avoidable cause. Personal cause means their personal reasons. Job dissatisfaction, poor work environment, personal reasons, career change, all those things. Unavoidable causes are you want to keep them, but you can't keep them because your business might be downsized, sales might have decreased, business size might have decreased, all these things. Avoidable causes are due to low pay people are leaving, poor working condition people are leaving, lack of amenities people are leaving. This can be avoided. How, sir? Bring in all these good things: reasonable pay, good working condition, good working environment, good amenities, good perquisites to employees. Automatically employees will stay, no? Sir, labor turnover could be calculated on what basis, or which are the different methods? Basically, we have four methods. We have how much? Four methods. One is addition method. What do you mean by addition method, sir? Total how many employees joined organization during the period. For example, we had 500 employees already. Opening we had how many employees? 500. Closing we have around 700 employees. Okay. Now, average employees will be how much? 600. Correct? Now, let's say 300 employees joined the organization during the period. Sir, what reason, sir? Whatever could be the reason. Total new 300 employees came into the business. Came into our organization. Now, 300 employees, we call it as what? Additions. So, 300 divided by average employees into 100 will give me employee turnover as per addition method. Employee turnover as per addition method. Now, if at all, only separation method is asked, then you should consider only separated one. What do you mean by separated one? Number of employees left from the organization during the period. Number of employees left from the organization during the period, that we call it as what? Separation. Replacement means, guys, out of additions, how many employees are joined for the reason that to fill in the vacancy of the employees leaving the organization. Now, let's say employees left the organization are 100. In that, 80 new employees are appointed to replace those 100 employees. Try to understand. 100 employees left. 80 new employees joined to replace those 100. Now, that 80 who have joined to replace the old one, no, that itself we call it as replacement method. That itself we call it as what? Replacement method. Got it? And sir, let's say total new joinees are 200, but you are telling replacements are only 880. Then that 120 is what, sir? 120 is new joinees. That is altogether they are coming in for the new business position. Earlier those positions wasn't there. Now because of that positions they are coming in. Those people we call it as new joinees. Always remember, additions includes new joinees and replacements. New joinees and replacement. Got it? Next is your flux method. Next is your basically flux method. Two formula is there. All you have to do is just check whether new joinees are there or new joinees are not there. If the new joinees are there, then the formula will be half of additions plus separations divided by average employees during the period. Additions plus separations divided by average employees during the period. No sir, new joinees are not there. Then the formula will be replacement plus separation divided by average employees. Sir, not additions. When new joinees are not there, additions and replacements will be same. How addition is different from replacement? Replacement consists of only replacement. Additional consists of replacement plus new joinees. Now, if new joinees are not there, additional is equal to replacement. In that scenario, no half and all will come. Directly replacement plus separation divided by average employees. Got it? So, these are the different formula. And listen, let's say now we are computing employee turnover for a period of 4 months. Now we have to compare it with the one organization whose employee turnover is given in 1 year. Now what you should do, sir? You should equalize it. You should equalize it. How, sir? Whatever answer you are getting, that is for 4 months. Let's say 20% you got. That is for 4 months. For 12 months, question mark. Like that. Hope it's clear. Hello. And in this overtime, important question is there, that is like, loss of sale. How much is the contribution lost? How much is the profit lost and all they are asking? Remember, that questions are there. Now, overtime. First we'll see theory completely once. Then we'll go and see the questions. Fine now. Overtime, guys. Overtime means what? Extra hours worked over and above the normal working time. That is, for example, if the time of work is 8 a.m. to 4 p.m., whatever the work is done before 8 a.m., after 4 p.m. will be considered as overtime. It will be considered as overtime. And always remember, for this overtime work, we are not only going to pay the normal wages. We'll pay normal wages plus overtime payment, premium. Your overtime payment includes normal wages plus overtime premium. Generally, it will be 100%. 2x. If you are getting 100 per hour, you will get 200 like that. Okay. Now listen. Overtime normal wage, so directly we are going to charge it to job or particular work as a direct wages. No doubt in that. What about this overtime premium, guys? How to treat this overtime premium? You should check the reason for this overtime. You should check the reason for this overtime. Reason number 1. Our customer might have asked for it. Boss, I need urgent order. Please do it. If that is the case, you are going to charge it to job itself. Charge it to respective customer itself, job itself. Got it? No, sir, customer didn't ask. Irregularly we are doing it. Irregularly we are doing it to meet some urgent orders, irregular orders. In that scenario, you are going to treat it as a overheads. You are going to treat it as a overheads. Sir, customer also didn't ask. Irregularly also we are not doing once in a while. We are doing it regularly due to worker shortage, etc., etc. Then, based on previous years wages, this year's complete wages, including overtime premium, treat it as a normal wages by inflating wage rate. So basically, I'm trying to tell that overtime premium, don't try to treat it separately. Treat it like any other normal labor cost. Okay. Just make sure it is already added to the labor hours, because you are regularly working due to worker shortage and all. Okay. Sir, due to the mistake of other department, for example, my employees from morning till afternoon, they were sitting quiet, sir. Why? Material wasn't there. Now, because morning to evening, afternoon, they sat quiet, I can't tell I am not going to pay because it's my mistake. Okay. So, I asked them to work after 4 p.m. Fine. But for that, I have to pay them premium. No. Now, when I paid a premium, that we call it as overtime premium. Correct? Now, due to the fault of other department, if you are incurring overtime premium, then we are going to charge it to that respective department. Got it? Sir, due to abnormal reasons like earthquake, flood, etc., costing P&L. Charge it to costing P&L. Hope it's clear. Treatment of overtime premium. Hello. Normal wages. See, overtime premium consists of overtime payment consists of two things. Normal wages, overtime premium. Normal wages will go to labor cost only, no doubt in that. Direct wages. But your overtime premium, you should check the treatment. Reasons for that overtime premium. Reason number 1, it can be due to customer's requirement, charge it to the job. 2, worked irregularly to make up the shortage and all. Overheads. 3, due to the worker shortage and all, you are working regularly. Then find out inflated wage rate and treat it like a normal wage rate only. 4, due to the fault of other department, charge it to that respective department. It's not your cost. I mean, normal wage rate is your cost. Overtime premium I'm talking. 5th, abnormal conditions like flood, earthquake, all those things. Then costing P&L. Got it? Sir, something called as idle time. What do you mean by idle time, guys? You have paid for it, but employees are not working in that time. What? Paid for it, but employees are not working in that time. You paid, but employees are not working. Now listen. That time we call it as idle time. For example, let's say ArivuPro people are making me payment for 10 hours. I am working only for 8 hours. That means 2 hours is what? Idle time. 2 hours is idle time. And listen, idle time could be divided into 2. Which are those? Normal idle time, abnormal idle time. Normal idle time, abnormal idle time. Normal idle time are the idle time which you cannot avoid it. Which you cannot avoid it. Inherent nature. Due to the inherent nature. Like lunch break, rest in between, all these things. Do you think if I take 10 hours continuous classes, I will be alive? I'll be alive, but I mean, it's not a normal way to do the business, right? See, try to understand. Normal idle time also can be avoided, but in the normal, not normal course of business. 1 or 2 days you can tell, don't take lunch break, just do it. Somehow manageable, but not in a long-term point of view. So normally, which is unavoidable, that we call it as normal idle time, which you can avoid in the normal course of business, that we call it as abnormal idle time. Shortage of material, electricity cut down, machine breakdown, all these things. Abnormal idle time. Got it? Sir, how to treat the normal idle time? How to treat the abnormal idle time? Normal idle time, whatever is there, treated as normal loss. That is, wages paid to the normal idle time should form part of good units. For example, now for 10 hours, ArivuPro people are paying me, let's say 20 rupees. Okay. Now, in that, 2 hours is a lunch break, break in between, etc., etc., etc. That means, try to understand, per hour how you are going to calculate, sir. 20 divided by 8, not 10. How much it is? 2.5 or 2.25? Correct? But I have worked only for 7 hours, sir. That means 1 hour is what? Abnormal idle time. That 1 hour into rupees 2.5 shall be charged to costing P&L. That shall be charged to costing P&L. This is the treatment between normal and abnormal idle time. Hope it is clear. So while arriving at effective hours to compute hourly rate, while arriving at effective hours, you should make sure you are going to reduce normal idle time, not abnormal idle time, normal idle time from the total hours paid. Got it? And always remember, your standard hours will include hours to be worked to complete that work, hours to be worked to complete that work, plus the standard, normal idle time. For example, this marathon need to be completed in 16 hours. But the standard hours for the marathon will be given is 20 hours, let's say. Why, sir? 2 hours will be, 4 hours will be normal idle time. 4 hours will be normal idle time. So standard given is 20 hours to complete the work. Got it? So always remember, standard hours will consist the normal idle time. Normal idle time. Hope it is clear. Now, remuneration plan, you can give it on time basis, or either you can give it on piece basis. Time basis means how many hours you have worked, hourly rate. Piece basis means how many units you have produced into piece rate. Okay. Now, bonus system will be there. That is, if at all you complete the work early and all, or you work efficiently and all, then we will be ready to give you bonus. 3 bonus methods are there. Individual bonus, group bonus, indirect workers bonus. Individual bonus means when the work could be done by one single person. Your work yours, my work is mine. Then there we can apply individual bonus plan. Sir, as a group, employees should work to complete that particular job. Then there you can give group bonus to motivate them. Sir, you can't directly trace that employee in that particular job, but that employee's presence is very important, sir. Indirect employee, correct? For them, it is indirect workers bonus plan. Now listen, time rate method. In that we have different types of time rate. We'll see one by one. First one, time rate at ordinary level. That is how much ever our competitors are giving, etc. Based on that only we will be giving. Let's say per hour 2 rupees. Per hour 2 rupees. Now if at all anyone worked, they will get 10 hours they have worked, they will get 20 rupees. Correct? Time rate at high wage levels means generally will be offering more than the industry. Generally will be offering more than the industry. That is your time rate at higher wage rate. Okay. For example, if the industry is offering 2 rupees, I am going to offer 2.5 per hour. Graduated time rate means it is not fixed for everyone. Based on your skill, experience, etc. hourly rate will vary. That is graduated time rate. Got it? Piece rate. Guys, straight piece rate is there. What piece rate? Here it is what, sir? Basic it is. For example, per piece it is 10 rupees. If you produce 100 pieces, you will get how much? 1000. Differential piece rate is there. This is important. What is differential piece rate, sir? Based on your efficiency. Based on your efficiency. Now, efficiency could be found out on the basis of hours, or it could be found out on the basis of units. Hours basis means it is standard hours by actual hours into 100. But units basis it is actual output divided by standard output into 100. Standard hours by actual hours into 100 in case of hours efficiency. In case of unit efficiency, it is actual output divided by standard output into 100. Got it? Okay. Now, sir, what are the different methods are there for that differential scheme? 2 methods we got. One is Taylor, one more is Merrick. And before that, remember, standard means always for the actual output. Standard hours means always for the actual output. For the actual output, how much you have produced. For that, how much standard hours I should have taken. That is your standard hours. Got it? Differential piece rate could be 2 methods. One is Taylor's differential piece rate. Next one, Merrick's differential piece rate. Taylor is Papa or Taylor is some nonsense guy from employee's point of view. Nonsense guy. Why, sir, nonsense guy? There was nothing called normal in this dictionary. It was very simple. You work at efficiency or over efficiency. That is, if your efficiency is 100% or more, you will get paid more. If at all your efficiency is a bit less compared to 100, then you will be getting punishment for it. That is Taylor. Merrick was not like that. Merrick was Papa. He gave different slabs. We'll see that. Taylor. What did Taylor say, sir? If at all your efficiency is greater than or equal to 100%, if at all your efficiency is greater than or equal to 100, then whatever your piece rate will be there, no? Based on that, whatever you get, no? But you will get into 120%. 20% bonus for what you get. Enjoy. However, even 1 unit is less compared to your 100%, then boss, then you will get just 80% of what you will generally get. For example, now per unit you are getting 10 rupees. Per unit you are getting 10 rupees. Now if at all your efficiency is 100 or more, per unit you will get 12 rupees. If at all your efficiency is less than 100 even by 1%, you will get 8 rupees per unit for whatever you produce. Got it? It was too strict, no? But Merrick was Papa. He came up with 3 layers. He came up with 3 things. What is this, sir? If at all up to 83% you get, no, your efficiency, enjoy. Normal piece rate I will pay. No penalty and all. If at all your efficiency is less than 83%, don't worry. How much ever you should get, that I will give. Unit basis. Boss, if at all you have done something like 83 to 100, no. If at all you are doing 83 to 100, congratulations. Why? You are going to get 110% of normally what you earn. You are going to get 110% of normally what you earn. Sir, what if it's over and above? I mean, not over and above, about 100%. In that scenario, you will get 120%. Got it? See, whoever was working more than 100% efficiency, for them, whether it is Taylor or for them, whether it's Merrick, is not going to matter. People who are either somewhere bit less compared to 100% efficiency or much more less, for them it is better. Why? Taylor straight away would have told you will get 80%. But Merrick is telling, boss, just check whether yours is more than 83 or what. If the answer is yes, then you will get 110%. If the answer is no, don't worry, no punishment. You will get only 100% of what you get, no bonus. Got it? Hello? Next one is Gantt task. What is it? What Gantt task will tell, sir? It is a mixture of your time and unit. It is a mixture of your time and unit. What do you mean by that, sir? See, what your Merrick told, I agree Merrick is good only. But what he told, I will pay 100% of the piece rate. If you produce 1 unit, let's say we'll get 10 rupees. Now, if at all your efficiency is less than 83, then you will be paid 10 rupees per unit. Correct? But what Gantt task told was, if at all your efficiency is somewhere less than 100%, don't worry. Now you are not going to get paid under piece rate basis. You will be getting paid on daily rate or a time. If at all your efficiency is somewhere less than 100%, you will be paid full day's wages, irrespective of how much you produce. Whether you produced or no, that also doesn't matter. You will get that day's wages. However, if at all you work at 100%, then you will get bonus. You will get time rate plus bonus. So what if more than 100? Then you will be paid at a higher rate. You will be paid at a higher piece rate. Got it? Hello? Piece rate with guaranteed day rate means what, sir? As per day, I agreed to pay you guys 800 rupees. As per piece rate, it is coming to pay 700. Then I have to pay 800. Sir, as per piece rate, it is coming 1000. But as per daily wages, you have to pay me 800. Then how much I should pay? 1000. Whichever is higher. Piece rate or a daily wages, whichever is higher, I have to pay them. Got it? We have Emerson's as well as Beddock system. Emerson says what, sir? Guys. What Emerson's will tell is, if at all you are working below 66.67% of your efficiency, then you will be paid only normal wages. Somewhere 66 to 100. Bonus might vary from 0.01 to 20 that they will give in the question. If at all it is above 100%, this 20% also you are entitled. Over and above that, for 1% bonus for each 1% increase in your efficiency over and above 100. For example, your efficiency is 65%. You will get a hourly rate, full hourly rate. Sir, somewhere between 66.67 to 100, sir. Then you will get hourly rate. Along with hourly rate, you will get bonus. You will get bonus. Sir, over and above 100, sir. Over and above 100. In that scenario, you will get hourly rate, you will get bonus up to 20% based on what we have decided. Over and above that, let's say if you are producing 105%, then that 5% extra bonus will be given. Got it? That is the thing. Baydock's point means basically for that standard points will be issued. For 8 hours means 8 points. Now actually let's say you take only 6 hours. That means you are saving that 2 hours. No, for the 2 hours we will be paying you bonus. For how much points you save, for that we will pay you bonus. Got it? How much bonus, sir? 75% bonus. Hope it's clear. So, first one we discussed was Taylor. What did Taylor say? If at all your efficiency is less than 100%, you will get 80% of your piece rate. If your efficiency is 100 or more, you will get 120% of your piece rate. Then came Merrick, right? What did Merrick say? If at all your efficiency is 83, less than 83, don't worry, you are going to get normal piece rate. If at all it is 83 to 100, then you will get 110% of piece rate. If it goes beyond 100, you will get 120% of piece rate. Next up. Gantt task. What does Gantt task says? Boss, if at all you are working at the efficiency of less than 66.67, you will get day rate. Time rate payment. If at all it is 66 to 100, then you will get Gantt task. If at all your, Gantt task, that is immersions, right? Yeah, Gantt task less than 100, you will get guaranteed wage rate, time rate, not piece rate. If at all you are working exactly at 100%, you will receive 20% bonus on the time rate. If at all your efficiency is more than 100%, then you will get paid at higher piece rate. Sir, how much is higher piece rate? That they will only give in the question. Okay. Emerson's it is basically, guys, divided into 3. Below 66.67%, you will paid time rate. Sir, 66.67 to 100%, you will be paid time rate plus bonus, which varies from 0 to 20% at the discretion of the company. If at all over and above 100%, then time rate plus 20% bonus plus 1% increase in bonus for each and every 1% increase in your productivity or efficiency. Got it? Sir, individual plans, which and all we got? Sir, individual plans we got Halsey, Rowan, Halsey Ware, Barth. First, Halsey. What Halsey says is, normally what you pay, that you have to pay. In any method, normally what you pay, you have to pay. That is, time taken into hourly rate, you have to pay. Along with that, how much ever money you saved because of those employees working fast, that is, time saved into hourly rate will be there. No. Of that, half you transfer to employees as a bonus. So what is the formula? Time taken into time rate plus half of time saved into timely rate. But this comes up with one demerit. What is it? The more and 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 more you save, more and more and more and more and more and more you earn per unit. Okay. Because of this, after some point, quality will in the name of speed, quality will get affected. Because of that, once again we came up with one more plan called as row 1. In this, what happens, sir? Normal payment is same only, time taken into timely rate. But here he tried to give connection between time saved, standard time, time taken. That is, bonus will be time saved divided by standard time into time taken into timely rate. This will be the bonus. Got it? Time taken into time rate, though, that is normal. Along with that, you will get bonus this much. Halsey where means instead of their 1 by 2, 1 by 3 will come. 33.33%. Barth is very simple. Total earnings will be equal to rate into square root of time allowed into time taken. Time allowed into time taken. Different group bonus schemes are there. Just go through those things. And also, labor efficiency ratio means expected time to produce the output in hours, standard hours, divided by actual hours into 100. Got it? Capacity utilization ratio means hours spent in active working, that is actual hours, divided by total hours available for work, standard hours. Got it? Production volume variance is expected time to produce output, standard hours, divided by total hours available to work. Actually, that is budgeted hours. Okay. Standard hours by budgeted hours. Hope it is clear. Hello. With that, we have completed theoretical discussion on employee cost. Now we'll see some. Okay. Before that, giving you guys 5 minutes break. Go out and come. Okay, quickly tell me the question paper. These things we'll do it now. Why I am unable to find dust here? You guys are able to. Huh? Is it? Huh. Liv, tell me this. Quick. Paper number, please. MCQ 3. June 23, MCQ 3. Overtime is actual hours being more than the normal hours, actual hours being more than the standard hours, standard hours being more than the actual hours being less than the standard hours. Normal hours is overtime. Actual hours being more than standard hours is less efficiency, not overtime. Got it? Next. Okay, fine. Sorry? Hello? 3B. Measures. Peacock Limited is in the process of evaluation of the employees welfare scheme of the company. In this regard, it has selected 3 workers KLM to study their wage earnings. The company furnishes the following particulars for the month of April 2023. Job completed are 10,000, 8,000, 14,400. Out of the above output, rejected and unsaleable are 400, 160, 1,600. Time allowed for 100 units are 2 hours 36 minutes, 3 hours, 1 hour 30 minutes. Basic wage rates are 25, 40, 30. Time taken are 200, 216, 184. The normal working hours per month are fixed at 176 hours. Normal working hours are how much? 176. Bonus is paid at 60% of the basic wage rate for gross time worked and gross output produced without deduction for rejected output. So bonus is 60% of the basic wage rate for gross time worked and gross output produced without deduction of rejected output. The rate of overtime for the first 20 hours is to be paid at time plus 1/3, and for the next 20 hours is paid at time plus half. From the above information, you are asked by the management to calculate the following: number of bonus hours and amount of bonus earned, total wages earned during basic, including basic wages, overtime premium and bonus, direct wages cost per 100 saleable unit. We got three products, right? K, L, M. Correct? Standard hours. Guys, try to understand. Computation of standard hours here. Try to understand. You are producing 10,000 units. Standard time for standard output, that is to produce 100 units, you need 156 minutes. Hello. To produce 100 units, you need 156 minutes. Now, you are actually producing 10,000 units. For this, how much is the standard hours? Divide by 60. 260. So, standard hours are 260 hours for K. Got it? Next. Guys, to produce 100 units, L takes 180 minutes. Now you are producing 8,000 units. $240 hours. M generally will take, or M time allowed to M is 90 minutes to produce 100 units. Actually, M is producing 14,400 units. Huh? 216 hours. Coming to actual hours. K has taken 200, 216, 184. 200 hours, 216 hours, 184 hours. Correct? Thank you. Next, time saved. Time saved 60 hours. 24 hours. 32 hours. These are your bonus hours. Correct? No? Time saved or bonus will be paid for time saved only. No? Bonus hours. Done. Now, bonus is paid at 60% of basic wage rate. Here first one they have asked bonus hours only, no? And amount of bonus earned. Here This person will earn 60 into hourly rate is how much? 25, right? Into 60% because bonus is paid at 60% of normal wages. Got it? Next one. 24 into hourly rate is 40 into 60%. 32 into 30 into 60%. Anyone, any doubt in computation of bonus hours and amount of bonus? Pakka. We'll proceed. Next, what they were asking, what they are asking? Total wages earned including premium on overtime. Try to understand. Now, bonus is sorted. Now we'll find out overtime. Actual hours is how much? 200, 216. Normal hours 176. $24, 48. 24, 48. Now let's see overtime payment. Full overtime payment I am telling. Try to understand. I am not telling overtime premium. I am telling overtime payment. For that 24 hours, try to understand. The rate of overtime for the first 20 hours is paid at time plus 1/3, which means extra we are paying is 1/3 of this thing. And for the next 20 hours, it is 1/2. So try to understand overtime payment. For this 24 hours, the normal payment will be there. That is 24 into 25. How much it is? 600. Next, 40 into 40. 1600. 8 into 30. This basic pay. For that, again, overtime premium will be paid. Overtime. How much is overtime premium, sir? Guys, for up to first 20 hours, 1/3 will be the premium. Correct? So here he is working for 24 hours. That means try to understand. For the 20 hours, at the rate of 25, 1/3 will be premium. For the next 4 hours, half will be the premium. How much it is? 20 into 25 into 1/3? 160. Next one. 50 now. Next one now. 40 hours. That means 20 hours is getting paid at rupees 40 now. How much is per hourly rate? 40, right? 40. For that 1/3. For the remaining 20 extra hours, over and about 20, for that is getting paid half. Next one. Next. Overtime is 8 hours, right? For that 8 hours, it is very simple. 8 into rupees 30 into 1/3. Hope it's clear. So overtime payment in total is how much? 816.67 now. 2266.67. 320. Hope it's clear. Now shall we find out a total payment? For the basic that 160 hours, for that basic 160 hours, how much they will end up getting? 160 is normal, no? Sorry, 176. 176. 176 into 25. 4,000? 176 into 40. 7040. 5,000. That is for 176 hours. Also for the remaining overtime, 816.67, 2266.67, 320. Correct? Also bonus. Bonus 900, 576, 576. 900. So total employee cost for the first one is how much? 6,160. Okay. Next one.
9,882.67.
Next one. 6,176. Correct? Total wages earned. Done. Direct wages cost for 100 saleable units. 100 saleable units. Try to understand. 6116.67 we incurred for how many saleable units? 10,000 minus 400. 9,600 saleable units for 100 question mark. 63.72. 9882.67 we incurred for 8,000 minus 160, 7,840 into 100, 126.05. 6176 we incurred for 14,400 minus 1,600, 12,800, no? Into 100. 48 point. Hope it's clear, everyone. 3B, no? Same we got 63.72, 126.05, 48.25. Okay. Total wages 6116, 9882, 6176. Okay. Amount of bonus 900, 576, 576. Hope it's clear. Next paper, please. Huh? No MCQ? Time allowed for a job is 80 hours, standard hours. Workers' time taken is 68 hours. Time rate is 15. Total earnings of row 1 under row 1 scheme. Very simple. Time taken is 68. Time rate is 15. Plus, you know that bonus will be time saved. How much is time saved? 12 hours divided by time allowed 80 into time taken into 15. One. Next up. Next. 2B. This that question. Which question? Which that the management of Dolphin Limited wants to know the profit or loss foregone as a result of labor turnover. Last year sales accounted 66 lakh with a PV ratio of 20%. I told you, if you remember, PV ratio and change in profit percentage, change in PV ratio will be same. I showed in marginal costing only. So for the time being, PV ratio, you remember it as a profit percentage. The total number of actual hours worked by a direct labor force is 345,000 hours. They are actually working 345,000 hours. As a delay by the personnel department in filling up the vacancies, 75,000 hours of potential productive hours were lost. How much we have lost? 75,000 we lost due to delay in filling the vacancies. The actual direct labor includes 30,000 hours attributable to training new employees. Out of 345,000, 30,000 is training, out of which half is unproductive, which means, try to understand, although he worked 3,45,000 hours, in that 3,15,000 hours are normal, completely productive. Remaining 30,000 is there, no? Out of 3,45,000, 3,15,000 are normal. This 30 is there, no? This 30 is for the training purpose. In this 30, 15 is productive, 15 is unproductive. So try to understand. Net 315 plus 15. 315 plus 15. 330. What? 330 hours we have worked. How many hours we have worked? 330 hours we have worked to make the sales of 66 lakhs. Understanding? See, I agree 345 we have worked, but productively how much we have worked? 330. That means if at all my employees didn't leave and go, no, this work we would have completed in 330 hours. Now the question is, because of them leaving and going, how much is the cost? That means that 15,000 extra we are losing. That should be taken into consideration. Yes or no? The cost incurred in consequent on the labor turnover revealed the following. These are the extra cost incurred. Settlement cost 25, recruitment cost 18, selection cost 2,500, training cost 16. 25 plus 18, 33, 43, 43, 63, 500, 79, 500 is the extra cost what we incurred. Correct? Assume potential production loss due to. So try to understand here. Here, one is this 79,500 is extra cost what we are incurring. Because of this, we are losing profit. One more is, try to understand. Actually, we are losing 1,15,000 hours, but everywhere in your material also, they have taken only, total we are losing 75,000 plus 15,000, 90,000. But in your material and all, while calculating, they are ignoring that 15,000. In CA material, they considered, here they ignored. So, for the time being, we'll consider CMS material only. That is, because of the delay in filling the vacancies, 75,000 hours we lost. Correct? If at all, this wasn't there. Now try to understand. By working in 3,30,000 effective hours, we are making a sales of 66 lakhs. Correct? Yes or no? If at all vacancy was filled on time or labor didn't leave and go only, then whether we would have lost that 75,000 hours? That we would have potentially worked, no? Yes or no? So So because of labor's leaving and going, we not employing employees on time, we are losing total 75,000 hours. So how many hours we are, like how much is the sales we are losing? 15.
That.
Remember, just because you are losing sale of 15 lakh, that doesn't mean that you are losing 15 lakh profit. Why? Cost also will be there, no? Which costs are variable cost. That's why they have given PV ratio. Because fixed cost is already recovered in the 66 lakhs. So how much contribution you would have lost? For the time being, profit only you keep. 3 lakh you lost due to decrease in sales. 79,500 you lost due to selection and other recruitment cost, termination cost, all those things, which will come to 3,79,500. So this is the amount lost. Anyone, any doubt in this kind of question? This is how you should do it. Hope you guys understood. And mark it as LMR Pro Max. Very important. Second B, right, it is 3,79,500. God only should save students from the ICMA institute. Why they don't give explanation for the answer key? Oh, because they want you to fail. Smart she is.
That's why I'm not ready.
Not rating. Why? She took it seriously.
So I'm writing on this question.
Okay. What is overtime wages? Wages paid for working over and above the normal hours. Don't write standard hours, right? Normal hours. How to treat the overtime? I told 5 situations. Accordingly, you are going to treat. Got it? Next. In P Limited, labor force, question number 1, sub question 9. In P Limited, labor force at the beginning was 3,800 and the end is 4,200. So how much is average? 3,800 plus 4,200 divided by 2, 4,000. Next, during the month, 50 workers left while 80 workers were discharged, which means total separations were 130. Correct? Always remember, whenever MCQ questions like this and all is there, not only MCQ question, any question, first you have to read is last line, what they are asking you to do. Then you read the question. So basically they are asking you to find out labor turnover under flux method. So separation we got to know. Correct? 560 workers were engaged, out of which 60 were appointed in the vacancy created. So replacement are 60. New joins are 500. So total additions are 560. So flux method, you know that new joinees are there. So we are going to take half of additions plus separations, whole divided by average employees. If new joinees wasn't there, then I would have taken only replacement and separation, no half and all. Option D. We'll proceed. Hello. Homework. Why? Repeated. There it was 20 hours, here it is 10 hours. Next, which paper? Recent paper, December 24. MCQ. What is the question number? 8C na. How to treat the idle time? This is the way to treat the idle time. Normal idle time, abnormal idle time. Normal idle time shall be added to the cost of unit. So while calculating effective hourly rate, please make sure normal idle time is included there. Cost relating to that. Abnormal idle time, charge it to costing P&L. December. Row 1 plan, they are asking total earnings. Okay. So basic is how much? He takes 40 hours to complete the job. Okay. Plus time allowed is 48, which means 8 hours is time saved. Standard time is 48 into time taken into hourly rate. Option A. Hope it is clear. Next, what? Juju 2255. Huh. 13. Production volume ratio. What is the formula? We discussed now. 3 formulas. No, we discussed already. Efficiency is what? Standard hours by actual hours into 100. Capacity utilization is what? Actual hours by budgeted hours. Correct? And production volume is standard hours by budgeted hours. And listen here. Labor efficiency ratio into capacity utilization ratio is equal to what? Check. Labor efficiency, what is the formula? Standard by actual hours. Capacity utilization. Production volume ratio. There were 21 days of 8 hours each. The workforce consists of 20 workers. Due to machine breakdown, 480 hours recorded as a idle time during the month. During August, the workforce produced 10,800 units. The expected time per unit is 15 minutes. So, first standard hours will be very simple. 10,800 into 0.25. Standard hours. 21 into 8 into 20. Huh?
3,360.
Okay. How much is 2700 divided by 3360 into 100? Yeah. Correct. Efficiency ratio, find out. Let's see. For efficiency, you need actual hours. No. Do you have actual hours? You don't know. But one thing we know. Total hours available for 3360. But how much is booked as idle time? 480. That means actual hours worked is how much? 2000? 2,280. Got it? Now listen. Actual RC is 2880. Sorry, standard RC is 2700. Actual RC is 2880 into 100. 93 point. That is what? Efficiency ratio. Capacity utilization ratio. Actual hours by budgeted hours. $85.71. All the answers they have given. Just to mislead you guys. 14th one. That is standard rate. To be na. This is nice question. Babbu Small Industries employed 2 workmen, Vikas, Shiv. Both works to produce the same product. Same product means material should be same. With the help of same raw material and also with the same normal wage rate. Vikas is paid bonus under Rowan, while Shiv is paid bonus according to Halsey. What Hashley? Halsey. Halsey. Akshi, your ex. The time allowed to make the product is 50 hours. Standard time is 50 hours. Oh, where is that Chinnu? Chinnu Chini. No, yesterday he came, no? Oh. Online also, I think he's not there. No. Yeah. Chinnu Chinni city rounds. All are there. Time allowed to make the product is 50 hours. Standard time is 50 hours. Vikas takes 30 hours. Q takes 40 hours to complete the product. Factory overhead rate is 10 per man hour actually work. The factory cost of the product for Vikas and Shiv are 15,200 and 14,560. Find the cost of material. Prepare a statement comparing the factory cost of the product as made by the 2 workmen. Simple. I will take. First one is who? Direct material. Let me take it as M. As both using the same amount of material, I am going to take MM. Okay. Always remember, if you are getting only one equation, try to keep the unknown number to 1. 2 equation, keep unknown number to 2. Not more than that. This type of question only I told you once. You remember? Instead of taking time taken 1 digit and time saved 1 digit, take time taken as T. Time allowed will be knowing, minus time taken will be standard, like saved time, like that. Direct labor consists of 2 things. Basics, bonus. Correct? Basics how much, sir? Vikas 30 hours. Let me say 30 hour. Rate per hour is R. Both are getting same rate per hour. But Shiv is working for 40 hours. 40 hour. Listen, bonus for Vikas will be under row 1, right? Time saved, time allowed is 50, time taken is 30. That means time saved is 20. Got it? Time taken into hourly rate. 30 into 40%, 12 hour. Correct? Shiv, who is getting bonus under HAL C, half of time saved 10 hours into hourly rate 5 hour. That will give you prime cost. M plus 42 R, M plus 45 R. We are going to add factory overhead. Correct? Factory overhead, they are telling 10 rupees per man hour worked. 30 into 10, 300. 40 into 10, 400. That will give you factory cost. Factory cost, they are telling it as 14,560, 15,520. Correct? Now we can write it in the equation form quickly. M plus 42R. I will take that 300 that side. Or I will bring this 14,560 this side, or I will take 3,000 that side. I will take 300 that side. It will become 14,260. Equation 1. Equation 2. M plus 45R, taking 400 that side, 14,800. 2. Minus 3R is equal to 540. R is equal to 180 na. So much you are getting. Hourly rate is 180 per hour. Wages. Let's put it in equation 1 or equation 2 so that we can find out M. So M is equal to 14,260 minus 42R. M is equal to 14,260 minus 42 into 180. M is equal to 6,700. So one answer we got 6,700. Hope it is clear. Prepare a statement comparing factory cost and the product made by two workmen. That is very simple. Direct material. Say, not direct material. First one is who? Vikas, Shiv. Direct material 6,700. 6,700. Wages for Vikas basic 30 into 180. 40 into 180. Bonus for Vikas will be time saved divided by time taken into, time saved divided by standard time, time allowed into time taken into time rate. Two 160. For Shiv it is half of time saved into time rate. Prime cost. $14,260. 14,800. Add factory overhead per hour 10 rupees. 3,000, 4,000. Factory cost 17.
260.
Are we getting the same amount here? No. Somewhere we have done mistake then. Where is it? Where is it? Bonus computation is correct, Factory overhead is there, no, 10 rupees. Oh, 10 rupees, 300, sorry. I think that day also we did the same mistake. Not 100, 300, 400. Got it, How many handwritings I can write in? Crazy. Laughing, Bring your notes. Bring your notes faster. Faster. My handwriting, okay. This one.
Say please, you don't choose.
Hey.
This is your first page.
This is the handwriting of the person who is laughing.
Sir, what? Now it's you, Sean, and now you wrote that.
We'll see. That also I'm damn sure. This one,
No, sir, not this.
This one only. Just now I did this one only. This is my workings. Same question, no? Where did it go? Your workings? Oh, here it is.
Sir, that is not what you said.
Should we call a chemist? No, they will die only. Who is laughing, sir? The person whose handwriting is very nice. Next up. No, earlier when I started teaching, like back then 2019, that time I used to feel my handwriting is very bad. Then after seeing so many talented people, now I have confidence on my own handwriting. Yeah, handwriting is good. Earlier I thought it wasn't. But Dilip sirs and the Karthik sirs is top notch. Karthik sir's handwriting is also very good. Akhilesh sirs, it's not that great. So I am like, Meghna Biryani, correct. Next. December 23, set 1. Time and motion studies conducted by engineering department. I told now. Repeated what? In which of the following incentive plan wages on time basis are not guaranteed? Taylor's differential. Piece rate, no? In Gantt task, it is guaranteed. If your efficiency is less than 100%, you will get time rate. Equal to 100%, you will get time rate plus 20% bonus. More than 100%, you will get higher piece rate. In this, no questions are there. Set 2 na. Question number 15. Last question. If the time saved is less than 50% of the standard time, then wages under Rowan and Halsey plan comparison. Try to understand. Halsey plan will always keep increasing the wages. Sir, but final figure will change. Effective hourly rate will increase. Under Halsey, more and more time you save, more and more bonus you get. But Rowan, up to 50% it will increase. But at 50%, Halsey and Rowan will be both gives you same wages. And after more than 50% time if you save, your Rowan will start falling. As per Rowan, it will start. Got it? So try to understand. 0 to 50% of the time allowed savings, Rowan will give more. At 50%, Halsey and Rowan will be equal. More than 50% of the time allowed, up to 100%, Halsey will give more bonus. So time saved is less than 50%. Then now, equal wages, no. More wages to worker under Halsey, no. More wages to worker under Rowan, correct. Got it? Next. This is that guys, I say a material question. Dicto question. But the solution will change. Because I say is taking 1,15,000 hours in it. But we have to take only 1 lakh potential productive hours lost. Similar question, what we discussed there. Hope you guys remember that question only. Try solving on your own. Next. 8. What are the things should be excluded while measuring employee cost? That is there in that standard, this thing I showed you, there. CAS 7, in that it is there. All these points. Next. Under Taylor differential rate scheme, if the worker fails to complete the task within standard, then he will be paid 83% of. Actually, it should be 80, right? 80 and 120, but yeah, can't help. They have given 83. Next. Compute the direct expense they are asking here. Design charges will be direct expense, right? Software development will be direct expense now. Royalty is also direct expense now. But this is relating to units sold. So divide it in the ratio of sold units. This is relating to units produced. Divide it in the ratio of units produced. Higher charges also direct. All these are direct. Next. 8. Analyze time rate, piece rate, differential piece rate with regard to the labor. What is time rate, what is piece rate, what is differential piece rate, all those things. Next. 15. If the time saved is less than 50%, then Rowan will give more earnings compared to Halsey. More than 50%, Halsey is more. Equal to 50%, both are same. Next. In this nothing is there. In which of the incentive plan of the payment, wage on time basis are not guaranteed? Taylor's differential. There it is, piece rate. All three are time rate. I mean, Gantt task is mixture of both. Next. A company pays royalty to state government. Direct expense. Sorry. 2B. Vishnu Shiva. Just now we did this. No, Vikas and Shiva. Same question. Numbers also they have changed. 60-80. There it was 30-40. Standard was 50 there. Here it is 100. That's it. Next. No MCQ. Then why did you say? A company has a setup laboratory for a testing product for compliance with standards. That is quality control cost. Correct? Direct expense. Set to MCQ number? No MCQ. Two. Zintest Limited. A manufacturing company has its factory at two locations. Rowan plan is in use at location A and Halsey plan at location B. Standard time and basic rate are same for the jobs which are similar and carried out in the similar machinery. Time allowed is 60 hours. Job A location completed in 36 hours while B takes 48 hours. Conversion cost, that means labor cost plus factory overhead. Correct? That they are telling 1224 and 1500. Overhead amounted to rupees 20 per unit. They are asking calculate normal wage rate, compare conversion cost. Simple. Location A is there, location B is there. Correct? Basic, bonus, factory overhead, conversion cost. Conversion cost are 1224, 1500. 1224, 1500. Factory overhead are rupees 20 per hour. So for A, 20 into 36. B, 48 into 20. Bonus will be how much, sir? Bonus. Guys, time allowed is 60 now. A is first we'll see the basic wages. 36 hours, 48 hours shall I take? 36 hours, 48 hours. Bonus. In location A we are following row 1. So bonus will be time saved. Out of 60, 36 hours work with 24 hours time saved. Into time allowed, divide by time allowed, into time taken, into hourly rate. How much is 36 into 40%? 14.4 hour. 14.4 hour. Going to next one now. Under Halsey it is, right? Half of time saved 12 hours into hourly rate R 6 hour. So it is 50.4 hour plus 720 is equal to 1224. Shall I write it as 50.4 hour is equal to 1224 minus 720? How much? 5 R is equal to 10. Correct? Next one, just check whether it will match or no. 54 into 10 is how much? 540, right? 540 plus 960, 1500. It's matching. See, similar question in study material. Material also they don't know. They have given factory cost. Getting it, there some quadrilateral equation and all has come. You remember? 96, 90. Nothing. Similar question, but here only conversion cost it is. Next up. MCQ 3. Calculate the production volume they are asking. This is the same question. Answer was 80.36. Correct, no? So 21 days into 8 hours into 10 employees together. If they work, budgeted hours will come to elimination method. Correct. 1680 hours. Actual hours why we want leave. Standard hours are 5400 into each and everything is taking 0.25 hours. 1350 hours. So 1350 divided by 1680 into 100. Got it? Next. 8. Theory. The rising labor turnover presents a dual challenge, adversely affecting both workforce productivity and leading to increased cost. Discuss the cost associated with labor turnover. Basically, 3 costs will be associated. One is recruitment cost, that is for additional this one. Next one, turnover cost, that is employees leaving and going. One more is we losing our contribution, these things. Those things will come into picture. Just write about labor turnover, what are the effect on it. Got it? Fine. Set 2 is there. Tell. MCQ. Idle time ratio is idle time divided by total hours into 100. Option A. Next up. Theory again. 8B. Analyze the measurement of labor turnover. You got three things. No. 4 methods you got. Additional method, separation method, replacement method, flux method. Flux method again divided into 2. When only replacement and separation is given, when addition is given. When addition is given, numerator will be half of addition plus separation. When no new joinees are there, then the replacement plus separation divided by average employees. Hope it's clear. Yes? Fine. We'll take a break. We'll take a break of 20 minutes and we are proceeding. 5:10 we are starting. Okay. Now we'll be revising job costing. Okay. Job costing. Basically, it's a method of costing, guys. What do you mean by method of costing? Method of costing is methods which are there to ascertain the cost. Ascertain the cost of the product. That we call it as method of costing. In that, now we will be discussing job costing. Sir, when can we apply job costing? Sir, or what do you mean by job? Basically, when anything to be customized and all. Basically, work is to be done as per the requirement of the customer, specification of the customer. That particular work we call it as job cost. Job, the particular work we call it as job, and the method of costing which we apply to calculate the cost, that we call it as job costing. That we call it as job costing. Got it? Anything where customer specification is required. You went to give clothes to your tailor. Job costing. Because for everyone can they stitch that way only? No. Painting. Based on your choice it will be painted. Tattoo work. Printing work. So basically that is as per your requirement. Customer specification. That thing we call it as job. And the method applied for such a job we call it as job costing. Okay. So it is the accounting system that traces cost to individual unit or a specific job, contract or a batches of goods. So what are the different features of job costing, sir? Each job maintains a separate identity because it is as per the different requirement of different customers. No, the job is meant for a specific customer and not for the mass market. Production pattern is not repetitive and it is not continuous in nature. Okay, and production begins only after we receive the order from customers, because otherwise how we will get to know what is the basic requirement of customer? Each job is executed as per the requirement of the customer. Duration of the production cycle is usually short, but if at all it is large, no, then if it goes beyond 1 year, no, then we might apply contract costing rather than job costing. If at all it goes for beyond 1 year and all, we will apply contract costing. Okay, and to ascertain the cost, the document which we are going to prepare is called as job cost sheet. Job cost sheet. Got it? So what are the factors to be considered when you are preparing job cost sheet, sir? Cost sheet: identify the job that is chosen as a cost object, that is for which a separate measurement of cost you are doing. Next, identify the direct cost relating to that, direct material, direct labor, direct expense, all those things. Select the cost allocation basis for the overheads and all. For example, if you remember that on P&L they used to give in job cost, factory overhead we used to apportion on the basis of wages, percentage of wages. Your admin overhead we used to apportion on the basis of works cost. Selling overhead we used to apportion on works cost basis, like that. Compute the rate per unit, identify the job and apply it. That's it. So these are the few things you have to keep in mind. Quickly we'll see the question. Nothing special, much special in this. Quickly we'll see the question. If at all some nice questions are not there, quickly we'll see it in our study mat itself, one or two, because similar kind of questions are only there if you see carefully. If you have seen carefully. Quickly tell me, in the June 23 any paper question is there? MCQ. Which of the following statement is true? Batch costing is a variant of job costing. Job cost sheet may be used for estimating profit of jobs. Job costing cannot be used in conjunction with the marginal costing. Nothing like that. In cost plus contract, the contractor runs a risk of incurring loss. No. Generally, batch costing is a variant of job costing. That is also true. In fact, sometimes job cost sheet we may use to estimate a profit also. Even one and A and B. Generally, A and B are correct only. But still, you can go for A, more accurate. 8th one, no? Next, that's it. That's it in this. No question, nothing. MCQ, December 23, right? The most suitable cost system where the products differ in type of materials and work performed is job costing. That is based on different customers' requirement. Correct? Next. June 25. Till then nothing is there. Seriously. No descriptive. Okay. We'll see if we don't get it in MTP also, then we'll see in the study mat only. MCQ they have chosen as B as right option. Okay, right option. So they have chosen that cost sheet will be used for computing profit. That's what. A or B it is. If they have chosen A, okay. Choose A. I mean, both they won't give, don't worry, in examination. Either one they will give next time. But yeah, if you want to go for A, you can go for it. Huh? June? In this next MCQ is there in which one? December 24. Huh? December 24. This one 5th. Huh? State the following. Which of the following are the characteristics? Homogeneous products? No. Not similar kind of products. Customer driven production? Yes. Complete production possible within a single accounting period? Yes. 2 and 3. C. Next up. MCQ 6, June 25. A and Co calculates the prices of the job by adding a overhead to the prime cost, adding 30% to the total cost as a profit margin. Job number LM24 was sold for 6760 and incurred overhead of 2776. The prime cost of the job is, try to understand. How much is the total sales? 6760. How we are arriving at 6760, sir? 30% to the total cost as a profit margin. So try to understand. If at all cost is 100, selling price is 130. So 6760 means 130. 6760 means 130. 100 means question mark. I will get the cost here. Sorry? 5200 is the total cost. This total cost includes, guys, prime cost plus overheads. Correct? Now, 5200 minus 2776. How much? Option B. Option B. Got it? Next. Which one? Set 2 is there. MCQ for now. Which of the following is not a feature of job costing? Each job maintains its separate identity throughout the production stage. Yes. The job is meant for mass market. The answer is no. Customer based, it is customer driven. Production pattern is not repetitive. Correct. Production begins only after getting order. Correct. Option B. This particular MCQ only might come in your examination. You never know. Next. June 24. 1 second. MCQ. Job costing is used in furniture making, repair shop, printing press, all of the above. Everywhere it's customer driven. Next. A company calculates the price of the jobs by adding overheads to the prime cost and adding 30% to total cost as a profit margin. Job number Y26 was sold for 1690 and incurred an overhead of 694. So same question. So 1690 means 130 because selling price is 30% over and above the cost. If the cost is 100, profit will be 30. Selling price will be 130. 100 question mark. That will give you total cost. 1000. In that 694 will go as a overhead. Sorry. Option B. Got it? Next, ninth one, right? Job costing is suitable where similar product are produced on a mass scale. The answer is no. For that, unit costing is better. Method of costing used for non-standard and non-repetitive product, correct. Applicable to all industries regardless of the product, nothing like that. Only in the customer based market it is. Next. Four enough. Set 2 now. This kind of question we have already seen in study material, if you remember. In the factory, following job costing method and abstract from the WIP as on 30th September is as follows. Job 115, 118, 120. Material, labor, factory overhead. And factory overhead, see there how they might have absorbed it. 640 when the direct labor were 800. 400 when the direct labor was 500. 380 when the direct labor were 475. Just check everything is coming as 80% or no. 640 by 800 into 100. 400 divided by 500 into 100. 380 divided by 475 into 100. %, no? So factory overhead they are absorbing is 80% of direct labor. Keep that thing in mind. Material used in October. These are the material requisition number. These are the jobs used, but you know that there will be few adjustments in next lines. Correct? Summary of the direct labor also they have given. A shop credit slip was issued in the month of October. The material issued under requisition number 54 was returned back to stores as being not suitable. So requisition number 54, this thing we are not using in job number 118. Correct? So that should not be added to job cost. A material transfer note issued in October indicated that material issued under requisition number 55 for job 118 was directed to job 124. So this is not job 118 anymore, it is job 124. Don't add it to cost of job 118, add it to the cost of job 124. The hourly rate in shop A is rupees 3 while shop B is 2. For shop A it is rupees shop B the factory overhead is applied at the same rate as in September. So last time we applied 80%. Now also we are going to apply 80% of the direct wages. You are asked to calculate the factory cost of the completed job and invoice price of these three jobs. They are asking you to compute factory cost as well as invoice price of the three jobs completed, 115, 118, 120. It is the practice of the management to put 10% of the factory cost to cover the admin and selling overhead and invoice the job to the total cost plus 20% basis. Okay. Listen carefully. We got three jobs here. Which and all? 118. 115 first. 115. 120. Completed jobs only. Direct material, September, October. September month, how much was the direct material? $1325, 810, 765. 1325, 810, 765. Correct? October month, try to understand. 115 is not receiving any material. 118 receiving finally one material. 515. 120 is receiving 665. So 515 and 665. 515, 665. Got it? Direct wages. September, October. See, I think I showed one more format in when doing in class. I have taken that material labor overhead of September as a opening WIP. You remember? You can do that way also. Now, direct wages 800, 500, 475. September 800, 500, 475. October, it is job 115 taking 25 hours of shop A. So 25 into rupees 3. 25 hours of shop B, rupees 2. 125. In October month it is 125. Relating to job 118, only one. 90 into rupees 3, 30 into rupees 2. 270 plus 60, 330. Job 120, 75 hours of shop A, which will come to 225, 10 hours of shop B, which will come to 20. Total will come to 245. 245. Correct? If I am not wrong, that itself will give you prime cost. First one, how much? Two to 50, no? Next one, 2000, 155. Next one, 2000, 150. For this, we are going to add factory overhead. Correct? Factory overhead also. September is there, October is there. September's we know directly. If you want to write directly, you can directly you can write, or you can take 80% of wages. 800 into 80%, 640, 400, 3, 475 into 80%, 380. 125 into 80%, 100. 330 into 80%, 264. 245 into 80%, 1. That will give us factory cost. Total how much? 29. Okay. 2. Okay. Last one. 7. For this, we are going to add admin and selling and distribution overhead. How much they are telling? Generally, it is a practice to add 10% of the factory cost to cover admin and selling. 10%. 299, 281.9, 272.6. Always remember, unless and until they ask you to round off, always amount decimal should be taken for two digits. That will give you total cost. How much? 3,289. Okay. 2009. That will be your total cost. Correct? Of course. Now try to understand. They are telling it will be practice to add 20% on cost as a profit. Add profit. 3289 plus 20%. Sorry, into 20%. 6. 3,100.9 into 20%. 2,998.6 into 20%. That will give you selling price. Hope it is clear. This kind of question, if it comes, you know right how to solve now. Hardly few type of questions are there in this. 3946.8, 3721.8, 3598.3. Hope it's clear. No doubts? Pakka? June 25 MCQ. A company operates job number which requires 345 of material, okay, 210 of direct labor, okay. What is the total expected cost they are asking? Which is paid rupees 14 per hour. So how many hours we are making them work? 210 divided by 14. So 15 hours it is. Production overhead are absorbed at the rate of 30 rupees per labor hour. So 15 into 30. Now hope you understood why we calculated how many hours it is. And non-production overhead are absorbed at 40% of the prime cost. So 210 plus 345 how much? So 555 into 40%. 22 now. How much is the total? 1000. Next up. Set to this is same question. I think answer we got it at 606. Next up. Ninth one now. Next up paper. Job costing is used in all of the above. Next up. Discuss the advantage of job costing. All those things. Theory you have to read once. Next up. That's it. Finish. Fine. One very common kind of question every time, like we can check or we can see if at all it might come in the examination, then it will become difficult. So let's not ignore completely. One type of question is already solved. We'll see one more type of question. Fine now. Look at this fifth illustration from your material. This one question we'll see, and then we'll proceed to the next chapter, next unit. A shop floor supervisor of a small factory presented the following cost data for job number 555 to determine the selling price. Page number 308. Material information they have given, wages they have given, and wages 2.5 per each and every hour. Chargeable expense, which is direct expense, prime cost they have given, and they have used to add 33.33 for the expenses. During the years P&L also they have given here. Now it is noted that average hourly rate for three departments are similar. Okay. Calculate the departmental overhead recovery rate. Calculate the departmental overhead recovery rate. We can do it on the basis of number of hours. Correct? And per hour how much it is, guys? 2.5, right? So how much is 10,000 into 2.5? 25,000. Okay, 12,000 into 2.5. Oh, sorry, 10,000 divided by 2.5 you do. Huh? Department X 4,000 hours. 12,000 divided by 2.5. Department Z 8,000 divided by 2.5. 3,000. Try to understand, these are the labor hours. How did we find out, sir? We know the cost per, labor cost per hour. Using that we found out hours. Now apportionment or not apportionment, calculation of the absorption rate. Try to understand. Department X, overhead is 5,000. Number of hours of direct labor is 4,000. How much it is? Per hour. Department Y, cost is 9,000. Hours are 4,800. Next, 2,000 divided by 3,200. Correct? These are our departmental overhead recovery rates. Calculate the entire revised cost using 2022 actual figure as a basis. Add 20% to total cost to determine the selling price. Very simple. Direct material and all will remain same. It will remain 70 only. It will remain 45 only. This will remain 5 only. Prime cost will come to. To this, we are going to add factory overhead. We know that factory overhead of A, per hour it is 1.25. A we used it for 8 hours. 8 into 1.25. 10. Y 6 into 1.875. 4 into 0.625. 2 point. That will give us prime cost. How much is prime cost? 143 point. Okay. So factory overhead is done. Next we have selling expense. As I already told you, we can apportion it as a part of your works cost. Try to understand works cost. Factory cost was 2 lakh. Selling expense was 20,000. Can I tell it is around 10% of works cost? Okay. Now here, how much is the works cost? Where I was writing, by the way? Here only, no? 10% only, no? 10% of this. 14.38. 37538. Correct? 158. Add 20% to the total cost to determine the selling price. 20% of this. Total. Here it is. 189.76. 189.756. This type of question they might ask. Hope it is clear. No doubts? With that, we have completed job cost. Next, we'll see batch cost also. Yeah. Listen. Batch costing. Basically, this is also one of the method of costing which we are going to apply when anything we are going to do in terms of batches. Rather than unit and all, we'll be doing similar kind of products together in the batches. For example, bakery and all, bread, cake, all those things will take place in the batches. Paint, similar colors. Got it? All these things will happen in batches. So there we are going to apply the method called as batch costing. Actually, in batch costing, the major thing is relating to, sir, batch costing is fine, sir. But let's say in a year, there is a demand for my product, 50,000 units. In each and every batch, how much I should produce? 50,000 is there. Demand. How much I should produce from each and every batch? To reduce the cost, we are going to produce in EBQ. Economic batch quantity. What is the formula, sir? Square root of 2A. A is annual demand for our final product, because we are producing final product, not the raw material. 2A. Yes, sir. Yes means what, sir? Setup cost per setup, which means, try to understand. Once we complete each and every batch, before we go to the next batch, we have to, ready, like prepare this particular machine for the next batch. No, we have to set it up right. So that cost we call it as setup cost. That cost we call it as setup cost. So 2AS divided by C. C is carrying cost per unit per annum. Got it? So in this, together setup cost and carrying cost will be low as well as same. Just like your EOQ only. There instead of annual requirement, here instead of annual requirement, annual demand. There instead of ordering cost, here it is setup cost. Got it? And always remember, there, if you remember, in our, which one? EOQ. Carrying cost, how we used to calculate? Purchase price into percentage. Here it is manufacturing cost into percentage. Not carrying cost, it is manufacturing cost. Manufacturing cost includes DM, DL, D, factory overhead. Factory overhead both variable as well as fixed element. Together, how much we incur to produce? Everything should be considered as the cost per unit. On that cost per unit, you have to apply the percentage to arrive at a carrying cost. Hope it is clear. Sir, but why, sir? If we produce in single batch only, then setup cost could be reduced. No. Yeah, but you have to carry more products. No. Just because 1 year's requirement you produced on day one, that doesn't mean that your customers will buy everything on day one. That will be there throughout the year, which means your money getting blocked for many days. Got it? That is it. Not much things are there if I'm not wrong. Quickly tell me. We'll jump to that only directly. Batch costing. If any descriptives are not there, we'll see few questions. First paper, 5A now. This is some Jatre they have done, no? That similar question from ICI material I will show. Okay? Proper question. Here something and all they have done. No? Some nonsense stuffs. Leave that. That similar I will show it in ICI material. Remind me. Next stuff. SNCO, which uses the batch costing, provides the following data. You are required to calculate EBQ square root of 2 into annual demand for component is 4,800 into setup cost per setup is 50 divided by carrying cost is manufacturing cost is 100, carrying cost is 12%, which is 12. 2 into 4,800 into 50 whole divided by 12 square root of that. Huh? B. 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 Next up. Now they might ask how many batches to be run now. Very simple. 4,800 units divided by 200. 24 batches. What is the gap between one batch to one batch? Very simple. 12 months may if you want to make 24 batches, that means 0.5 months once you have to produce one batch. Next up. June. June 24? Then why you told June 24? Fourth MCQ, na? Again, they are asking you to calculate what will be the minimum inventory holding cost. Minimum inventory holding cost, of course, it will be, yeah, EBQ. Always it's like that only. Even EOQ also assumes the same thing, no? Practically, if at all yours is not seasonal business, then it will be uniform only. So they're asking minimum inventory holding cost, which means of course at a EBQ it is. So shall find out EBQ. Square root of 2 into annual demand 45,000 bearings. Setup cost. Oh, they only have given 3,000. Then half of 3,000 into 0.2. 300. Oh, 0.2 per month it is. 2.4 per annum. Yeah. Batch costing is applied effectively in the following situation: paper manufacturing, drug manufacturing, designer cloth manufacturing, oil refining. Drug manufacturing, oil refining, process, designer clothes, job, paper manufacturing, process, drug manufacturing, different drugs in a batches. You can see their batch number will be written in the whatever the product you take. Next up. Okay. June 25. Which of the following statement is true? First one, batch costing is a variant of job costing. Job cost sheet may be used for estimating profit of a job. Job costing cannot be used in conjunction with marginal costing in cost plus contract. So earlier they told B, right? B only you select. No worries. I mean 1 and 2 both are correct. A and B both are correct. Next. I mean one batch will be considered as one job there. That is the thing. That's it. Sure? 4A. Component diamond is made entirely in machine number XYZ2. Material cost is rupees 10 per component. Each component takes 6 minutes to produce. Awesome. The machine operator is paid 12 per hour and machine hour rate is rupees 72 per hour. Setting up of the machine to produce the component takes 3 hours for the operator. Prepare a cost sheet showing the setup cost and the production cost both in total and per component, assuming batch size to be 100, 150, 200. Okay. Batch size 100, 150, 200. Correct? Total per unit. Total per unit. Total per unit. First material 10 rupees for component. Correct? 10, 10, 10. That is not going to change. 100 means it will be 1000. 150 means 1500. 200 means 2000. Next up, labor 12 rupees is paid per hour. 6 minutes for 1 unit. So 12 divided by 60 into 6. 100 into 1.2. 150 into 1.2. 200 into 1.2. Got it? Next, machine operation. Machine hour rate is 72 rupees per hour. So 6 minutes into 6 divided by 60 into 72 divided by 60 into 6. 72 for 60 minutes, for 6 minutes, question mark. Huh? 7.2, 7.2, 7.2. 100 into 7.2. 150 into 7.2. 200 into 7.2. Oh. Also, machine setup cost will come now. Machine setup cost, try to understand. It takes 3 hours. Right? It takes 3 hours. So, our labor's 3 hours will be blocked. 30 rupees. Plus, machine hours of 3 hours. 260 na? Per batch it is 246. Irrespective of batch size. How much it's per unit? 246 divided by 100. 246 divided by 150. 246 divided by 200. 1 point. Total please. 1000, 1020, 1840, 1840, 2086. 20.86. 1500, 1000. 3006 divided by 150. Next one. 3 divided by 200. 90. 63. You can see there per unit it's reducing as and when batch size is increasing. Reason being carrying cost is not there. Only thing what is there is setup cost. So as the setup cost is there, it is fixed in nature. So per unit, the more and more you produce in the batch, that will be getting less and less per unit because it's fixed cost. No, that is the thing. Hope it's clear. Which question it is? How much you got? 19.66. They got 19.63. 18.4. 18.4. 20.08. We got 20.04. 20.92. 20.86. That's fine. Total 2092, 2086. Where we are getting different. I think machine expense they are rounding off now. 720, 1080, 4440. We are also getting that only. 120,000. Setting up cost 252. We got 246. There it is. Okay. How we got setup cost of this one? 246. 3 hours of labor, right? 3 into rupees 12 labor cost. 12 36 and machine are also 3 into 72, right? How much? 216, no? Total? Here you took 246. I think calculation mistake, that's it. Okay, you take 252, you will get the answer. Hope you guys understood. Next, MTP. In that, MCQ 12. Batch costing is suitable for sugar industry, chemical industry, pharma industry, oil industry. Pharma industry. Next, no descriptive. Set to no MCQ, no descriptive. Next set, June 24. Nothing. Next, not there. That's it, then.
December 25 Sigma.
December 25, set 1, question number. Find the most economic production run. EBQ they are asking. Square root of. A customer has been ordering 90,000 special design metals at the rate of rupees 18,000 per order. Production cost comprises of 120 material, 60 labor, 20 fixed overhead. 1,500 for setup. For one run of 18,000 column and inventory carrying cost is 15% since the customer may buy at least 5,000 columns at the year. Company would like to avoid making 5 different production runs. Find the most economic production run. Very simple. 2 into annual demand. Customer is demanding 90,000 into setup cost 1,500 divided by carrying cost. Please be careful. Material is 120. Labor is 60. Overhead is 20, total will come to 200. So on this 200 you have to compute 15%. 30. How much it is? 3. Option B. If they ask by going to EBQ, how much cost could be saved? What you should do? EBQ existing. EBQ existing units. In EBQ we are getting 3,000, right? Existing 5,000. Let's say 5,000. Okay. Now, first one, setup cost. Because manufacturing cost and all won't change. Setup cost. Setup cost per setup it is 1,500. In case we go for EBQ, how many setups to be done? 90,000 divided by 3,000, 30 setup. 30 into 1,500. 45,000 will be setup cost. In case we go for existing, then 90,000 divided by 5,000, 18 setups, 18 into 1,500, which will come to 27. That is setup cost. Got it? Carrying cost, half of 3,000, 1,500 into 30. 25. 45,000. Next, half of 5,000, 2,500 into 30. EBQ 90,000, existing 1 lakh 2,000. So just by going to EBQ, you can save around 12,000. Hope it's clear. Next, nothing. There was nice a question is there. No, shall I show that? We have already discussed that in regular class when I was doing that extra questions. I think in class hours only we have discussed this extra question, no? Listen. Look at this question. ICA material question. Rio Limited undertakes to supply 1,000 units of a component per month for the month of January, February, March. 1,000 components for 3 months. Every month a batch order is opened against which material and labor costs are booked at actual. Overheads are levied at the rate per labor hour. Okay. The selling price is contracted at rupees 15 per unit. From the data, calculate the profit per unit of each batch order and overall position of the order for the 3,000 units. Listen. January month, material cost, labor cost, so direct it is. No doubt in that. February also, March also. But coming to your overheads, recovery rate, calculate on the basis of labor hours. 12,000 divided by 4,000, rupees 3 per hour. 9,000 divided by 4,500, 2 per hour. 15,000 divided by 5,000, 3 per hour. Got it? Now listen. January month. Jan, Feb, March. Correct? January month, you are producing 1,250 units. 1,250 units. February month, 1,500 units. March month, 1,000 units. As they are asking overall figure also, total is also required. Okay. Total. I think this I have given it as homework, right? Have you guys done it? Done it? Good. Now listen. Direct material. How much it is? 6250, 9,000, 5,000. 6250 total. Direct labor 2500, 3,000, 2,000. 7,500. Overhead. Listen. In the month of January, we are recovering 3 per hour. But the thing is, how many labor hours has been used in this particular batch, we don't know. How to compute, sir? Very simple. We know the labor hour rate. 2 rupees we are paying. Per hour, if we are paying 2 rupees and it's coming to 2500, then labor hour should be 1250 hours. It should be 1500 hours. It should be 1000 hours. Yes or no? Per hour you are paying 2 rupees and if it is coming 2000 rupees, that means 1000 hours are the labor hours. Got it? Now, overheads 1250 into 3. 1500 into 3. Oh, not 3, wait. 2. 1000 into 3. Total. Cost per unit. 12,500 divided by 1,250. 15,000 divided by 1,500. 10,000 divided by 1,000. 37,500 divided by 3,000. Oh, everything is 10 only. Great. Now, selling price in each and every scenarios. Selling price in each and every scenarios 15 only. We agreed for 15 only, no? Profit of each and every month will be 5 rupees per unit. Overall also they are asking. Try to understand. 37,500 we incurred to produce in total 3750 units. But we are supplying only 3000 units. How much will be our cost? 30,000. By selling that 3000 units, how much we will be able to make? 45. So because of that, we are going to get a profit of, hope it's clear. This kind of question, mark it as LMR, and also which one we already discussed in the class, this question, not this, wait. All this we have discussed, right? This one. Remember discussing this one? Illustration for that day. Monthly 200, 6 months. Instead of 3 months, it was 6 months. This question also you go through once. With that, we have completed our discussion on batch costing. Service costing, or also known as operating costing. So basically, so far whatever we discussed is relating to units. But whenever you are in the service industry, then also for you also costing is applicable. Correct? Because you have to ascertain cost now before finding out finalized rate and all. That's why the method of costing which we apply to ascertain the cost in case of services, that method we call it as service costing, also known as operating costing. Service could be different like transportation, hotels, hospitals, education, software development, insurance, bank, electricity, toll roads, insurance, many will be there. However, your syllabus is restricted to transportation, hotels, hospitals. Transportation, hotel, hospital. Transportation could be further divided into passenger as well as goods. Passenger as well as goods. Okay. First, we'll discuss about transportation service. Passenger means your bus and all. Goods means your truck. Okay. Passenger means bus, goods means truck. Sir, what could be the cost unit in the passenger? It could be per passenger. It could be per passenger. How this will work, sir? For example, your sleeper bus. Okay. Point A to point B it will go. Point A to point B. Now, that cost, let's say, it will come to around 35,000. Now 35 people they are going to charge. Each and every seat they are going to collect 1000 rupees. Here kilometer won't be considered. This we call it as cost unit as per passenger. Sometimes per kilometer it will be. What is that, sir? Let's say you book a cab. Okay. Let's say you are going alone. One person. You are traveling to, let's say, 5 kilometers. They will show you around 200 rupees. Okay. Let's say you are going 3 people. Still they will show 200 only. Correct? So whether it is one passenger, whether it is 3 passengers, the amount shown will be, because they are charging on per kilometer basis. But coming to your bus and all, normal bus, red bus, assuming Kemp bus, assuming in Karnataka Congress government Aadhaar thing is not there. In Tamil Nadu again there also that Aadhaar stuff is not there. Wherever in India they are giving free, that thing is not there. Tamil Nadu it's there from long time, but not like these people. They use the brains. No. Women, any women it is, for them it will be free. However, the buses which are free, not your express and all. What is the concept of this? Women empowerment. Women empowerment means hardly 10 to 20 kilometers they will travel for their work. So for their work, which kind of bus is applicable? For that they have given 0 work. For example, here you can take BMTC. No. They are like, here it is like, except the bus for which you can't put more people than number of seats available. Free. For you also free, for me also free, for everyone free. I mean, not bus, sir. That was our DCM's dialogue. Leave. So now everyone, like, forget about people who are going to work. People are going to trip. Correct, no? And because of that, people who was supposed to get used, like get a like benefit of that, they are not getting it. Working women, papa, morning to evening they will work. They go to bus, where they will find seat. At least they will go free of cost. Imagine guy who worked going and standing in that rush plus paying for ticket. People are going on trip because government bus tripping on CAS 19. Correct. Full. When? Asa number time. Is it? But yeah, students who are tired, they are not getting seat. Because people are going for rounds. God only knows. Is it? Who? Is it? Just to drink coffee. And nicely they have released now that Ashwamedha stuff also. I mean, seat and all is same only, but non-stop it is. I didn't like both, to be frank. Which one? It's comfortable now. No, Rajamsa is also not comfortable. Other buses of KSRTC are too good. Airavata is good. Ambari Utsava is top notch. That is top notch. No leg space in Rajamsa. Na. In Rajamsa is basically red bus with seat adjustment. What? What she told? Natural ice cream? Yeah.
Sir, mine ice cream
Okay. Nandini. No, like because of Shashi sir, now I stopped eating ice cream in majority of the places. Some random videos and all he had put how ice creams are made and all. And yeah, you can see there majority of the ice creams it will be written as frozen dessert because they use palm oil, not milk. So I reduced. But no, now you are students. No, you guys can manage. ಏನ್ ಮಾಡ ಸರ್ ವಯಸ್ಸಾದ್ರೆ ಮದ್ವೆ ಆಗ್ಬೇಕಂತ ಏನಾದ್ರು ಇದೆಯಾ? Nothing, no. Yeah. Ask Dilip sir about marriage. Stay. He will tell everyone's marriage story as his marriage story. CA journey. Mine. ನಮಗೆಲ್ಲ ಯಾರು ಬೀಳ್ತಾರೆ? Yeah, Dilip sir, he was waiting for that age to get over. I think. He married immediately after he turned 21. Dilip sir home, yeah. They were scared, I think. Yeah. Just kidding. Huh? Yeah, my home and all. They are least concerned. Leave that. I will tell you guys when I plan to get married. That time you search. Now concentrate here. Is it you search the who? Where? I don't have time for that. Now listen. Listen. Shut up and listen. Sir is busy making money. Then sir is busy searching for ice creams. Then naturals is in that side. No? Permission from whose girlfriend? I don't have. Someone's girlfriend's parents' permission might be waiting. I'm not sure. You told no. Reception night they will be there. Next day morning they won't be there. They will run away. You never know. And that too she has cursed also. Sir, be careful. But yeah, with so much expenditures and all, how they feel like going? Ishq, love, mohabbat, whatever it is. We don't know, madam. Is it? Cross verify what? What if they tell yes and then they run away? Sue them. We will get to know. No. She will tell she is fine with that marriage. Sir, be like monetary facts over qualitative. Correct? No doubt. Leave. Whoever spoke about my earnings, money and all, he will like. Huh. Now listen. Saku isto. Now listen. Per passenger kilometer, if at all it's a bus, then they should charge kilometer basis plus for each and every passenger who are sitting in the bus. So they should consider both passengers as well as kilometers. That will come as passenger kilometer. Whereas if it's a goods, it could be per load. Generally we will hire no. Whether you put 1 bag in it, 10 bags in it, 20 bags in it, doesn't matter. From that point to that point, they are going to charge so much. Space occupied. That will be like your VRL, these things. Based on the space occupied, they will charge you. Sometimes everything will be considered. Space occupied as well as kilometers traveled, which is called as ton kilometers. Got it? Now, how to arrive at a passenger kilometer, sir? First, you should find out how many kilometers a vehicle is running in that given period. For example, in a year means how many days in a year, how many trips it is doing. Point A to point B to point A, like that. Number of trips into each and every trip will be of how many kilometers. That will give you total kilometers traveled. Into on an average each and every kilometer, how many passengers used to be there. That is passenger capacity into occupancy percentage. Got it? If at all it is a ton basis, ton kilometers, same, we have two methods to calculate that. One is absolute ton kilometer, also known as weighted average basis. One more is commercial ton kilometer, also known as simple average. So this one is absolute ton kilometer or a weighted average is very simple. Kilometers traveled into tons plus kilometers traveled into tons plus kilometer traveled into tons. Tons will be weight, kilometers traveled will be observations. But if at all it is commercial, what you should do, sir? Total distance traveled, total kilometers. For that, you should multiply average tons carried. For example, let's say point A is there, point B is there, point C is there, point D is there. Point A to point B, let's say 200 kilometers. And we are traveling with 16 tons. Point B to point D, let's say 150 kilometers. We are traveling with 12 tons. Point D to point C, let's say 250 kilometers. Let's say 10 tons. Point C to point A, again let's say 200 kilometers. Let's say we are carrying 20 tons. Now, if at all it is weighted average, very simple. 16 tons into 200 kilometer plus 12 tons into 150 kilometers plus 10 tons into 250 kilometers plus 20 tons into 200 kilometers. Like this we will do. That is your weighted average. Got it? Next, if at all it is simple average, or we call it as commercial ton kilometer, what you should do, sir? Total of kilometers traveled, 200 plus 150 plus 250 plus 200, 400 plus 400, 800 kilometers into average tons carried. Average tons carried will be how much, sir? 16 plus 12 plus 10 plus 20 whole divided by 4. Sorry? 11,600 ton ton kilometers. 11,600 ton kilometers. Got it? Now listen. One more thing. If at all in any trip there is no revenue, which means tons carried are 0. In that scenario, always remember, for kilometers, of course, you have to consider that because you are traveling that. But, for computation of average tons carried, you should ignore that observation. What do you mean by that, sir? In this scenario, 800 kilometers I will take as it is. But average ton computation, no. I will take 16 plus 12 plus 10. That 0 thing I will completely ignore. Divide by 3. Like this I will take. Got it? This is your computation of ton kilometer. Anyone any doubt in computation of ton kilometer and passenger kilometer? No doubt? While computing commercial ton kilometer, if any load is not having any income, such load should be ignored while computing average weight carried. Composite cost unit means what, sir? When 2 or more measurement of units are combined to make one cost unit. Such resultant unit is known as composite cost unit. Passenger kilometer, ton kilometer, room days, bed days. Total cost of transportation could be divided into 3. Standing charges or fixed charges, running cost or variable cost, maintenance cost or semi-variable cost. Standing or fixed, running or variable, maintenance or semi-variable. Generally, these two things are merged in your material. Running and maintenance are merged into one. Okay. Now listen. What do you mean by standing or fixed, sir? Whether you do trip, whether you don't do trip, whether you run bus, whether you don't run bus, it is fixed. That thing we call it as standing charges. Example, depreciation on time basis, rent, salaries, lease payments, interest, license fees, administration cost, all those things. Whereas your running cost or variable cost is incurred just to run the vehicle. Fuel cost, oil cost, power, your commission to driver and conductor, depreciation on usage basis, per kilometer basis, these things. Maintenance is your semi-variable. Time is also considered, as well as kilometer ran also will be considered. That is your maintenance, tires, spares, all these things. Spare parts. All these things are considered as maintenance cost. Got it? Generally, running and maintenance will be taken in the same head. Hope it's clear. Yes? Go through these ones. Again, start in a minute. Isn't it? Then she should be watching Facebook videos, not reels. Now listen, sure. Costing of hotels and lodges. In this scenario, basically it's for accommodation service. Composite cost unit will be room days. Okay. However, always remember, if at all different types of rooms are available, different charges are charged. In that scenario, you have to compute equivalent room days. You have to consider what? Equivalent room days. You can take one thing as a base. Of that, you have to keep adjusting it for the other rooms. Like single room, double room, it could be, or executive, deluxe, suite, like that. Different type of rooms, you are going to charge different rates. In that scenario, you have to compute equivalent room days. Got it? Okay. That when we see the question, you will understand. Next, costing of hospital. Basically, there will be two divisions of hospitals are there. Outpatient division is there. Inpatient division is there. Outpatient division means the people who will come, get treated, consultation, they will go back on the same day. Inpatient division. I don't know, patient and dividend from where. Now for my brain also you have done some black magic over. Here some words should flash, here some words should come. You're from which area you two? No, I mean hometown. Where? Where? Yeah. How far is Kollegala from there? No idea. How far Kerala from there? Far, huh? For Kerala? Kerala trip you went, huh? Okay, live. So, inpatient means the people who are going to get admitted. For them, of course, you are going to charge on the basis of bed days. How many days you are there? Of course, in only one bed patient will be there. So, how many days you are there? You are admitted, just like hotel. Okay, that is the thing. So, these three things are there. Now, we'll see the question. There we will understand. And listen, in the computation of hospital and all, variable cost will be there, fixed cost will be there, division. Even hotel also same thing, variable cost, fixed cost. From sales, when you reduce variable cost, something called as contribution you will get. From that, when you reduce fixed cost, you will get something called as profit. And always remember, break-even point means number of units at which profit won't be there, loss also won't be there. Zero. That is nothing but your revenue is equal to cost. Your revenue is equal to cost. Got it? That is your break-even point. Now, shall we see questions? Hello? Mark, no. Tired? Tired? Tired of what? From morning sitting nicely, afternoon when the labor employee cost was happening, nicely slept. Regular class also you are sleeping. Done. Don't skip anything. May I know the question number, please? Sorry? Correct. No MCQ, Searching, madam. Searching. Measures. Where? Yeah, Dilip sir told me. Where it is? Which is zero. Basaveshwara Kanavaliya. Frozen bottle. That will be same, no? All the groundnuts are same only, no? How many days it's there? What will do eating that? Listen. Measure Hotel Kings Highway has a capacity of 200 single rooms and 50 double room. 200 single room and 50 double room. The average occupancy of both single and double room is expected to be 80% throughout the year of 365 days. Rent of the double room is to be fixed at 150% of single room. Moral of the story. Here room days is not going to work. Here you need equivalent room days. Got it? Now listen. The costs are as under variable cost, fixed cost. Required to calculate the rent chargeable for single room and double room per day in such a way that hotel earns a margin of safety of 20% on rent of rooms. Listen. How much is the variable cost they are telling? For single room 440. Before that, how many rooms are occupied? Single room 200 rooms are there. Generally 80% will be occupied. 160 rooms will be occupied. Double rooms 50 are there. That will also be 80% occupied. That will also be 40 rooms are occupied. Got it? Now, variable cost. Variable cost. 160 into 440. That is per day. But in a year, 365 days are there. What?
56 lakh 96,000.
Next up, 740 rooms, 365. Now don't tell in 1000 crores. That is your variable cost. Next up, fixed cost. Single room 240. So 240 into 160 into 365. 500 into 40 into 365. Got it? Now what they are telling? Calculate the rent chargeable for a single room and double room per day in such a way that the hotel earns margin of safety of 20% on rent of rooms. So total cost is coming to how much, guys? 256. 2 crore 56 lakh 96,000. 1 crore 2 lakh 20,000. 1 crore 40 lakh 16,000. 73 lakhs. 5 crore 72 lakhs. On this, of course, 20% on room rent. Moral of the story, if you take takings as 100, takings means collections, collections means room rent, 100, then cost will be 80. Correct? Now 80 means 572 32,000 is 80. 100 is question mark. 7 crore 15 lakh 40,000. This you should recover from single room as well as double room, but you can't take two different divisions. That's why you should find out equivalent room days. Shall we find out equivalent room days? Single room, shall we take it as one room? If single room is one room, double room will be 1.5 room. Hey, what nonsense you talk, sir? If single room is one room, double room will be two room, no? Revenue wise, you think? Double room will be charged 150% of single room. Not that single room 1, double room 2. No. It is 1.5 times of single room. That is 160 rooms, 365 days into 1. 40 rooms, 365 days into 1.5. May know the equivalent room days. 58,400 do 21. Total 80. 80,300. How much per room day? 890.91. 91. Per room day it is 890.91. Got it? Per which room? Single room. For a single room, not double room. Because double room will be 890.91. For which equivalent you found out? That room it is. Into 1.5. Double room is so much. How it's clear? Next up. I'm feeling bad that you guys are sitting from morning 8 till 9:30 in the evening. Oh my god. Dinner? It will be nice, no? I have done that twice. For me, it's not a problem. No, not with students. I have done it for YouTube. Like previous day of exam, generally I used to go for like go marathon and all. Oh, so many people. Huh? Doing alone is boring, yeah. That's why in YouTube live I used to go. Next up. Sounds weird, but still, Question number, please. 4? Don't tell the same thing to Dilip sir in tax classes, I'm telling you. Tax marathon. 4A na? Now listen. Maxwell Hospital runs a diabetic care center in a Hyatt building. DCC consists of 50 beds where 10 more beds can be added if it is required. Further, information regarding DCC is as under. Rent per month is 1,50,000. Before that, check whether they have given information about a year or month, years. So basically, find out everything for year. Rent 1,50,000 into 12. And it is fixed. Correct? Supervisors 2 into 50,000, 1 lakh. 1 lakh into 12. Fixed. Nurses 4 into 30, 120,000 into 12, 14 lakh. Fixed. Ward boy 4 into 6,000, 24,000 into 1 lakh. Hey, 24,000 into 12. 2,88,000. That is also fixed. Doctor were paid 2,50,000 per month on the basis of patients attended time spent, which is variable in nature, which is 30 lakhs. Whichever hospital question, if for the next 10 years, if it comes also, same question it is. 7 marks, by heart and go. Repairs, it is fixed. Annual, okay. Variable, fixed. Admin expense allocated 12 lakh, fixed. It is estimated that 150 days in a year, 50 beds were occupied. Awesome. In 150 days, 50 beds were occupied. In 80 days, 40 beds were occupied. 150 into 50. Okay. 1,000. 3,200. Total 10,700. However, extra 750 beds were hired. Why they will hire? Because some point more than 50 beds it was occupied. Correct? Because the 10 space was there, no? Which means, and we will take beds on rent only if patients comes. Which means patients were there here. 11,000 450 patient days, or you can call it as bed days. Rupees 100 per bed day to accommodate the flow of patient. However, this does not exceed 10 beds over and above the normal capacity of 50, which means rent is not changing, they are trying to tell. Hospital recovers on an average 1500 per day from each patient. Profit for the year they are asking. Guys, quickly tell me variable cost. Patta. Calculate. Doctor cost 30 lakhs. Food to patient 880,000. Other service to patient 3 lakhs. Laundry 6 lakh. Medicine 7,50,000. That's it. Variable cost is 55 lakh. Fixed cost please 18 lakhs plus 12 lakhs plus 14 lakh 40,000 plus 2 lakh 88,000 plus 90,000 15 lakh 12 lakh 75 lakh. Total cost please 1 crore 30 lakh. Revenue will be 1,500. We are recovering from the total patient days of 11,450. 1 crore 71 lakh 75,000. Profit will be how much? 41 lakh. Next they are asking break-even point. The break-even point means, sir, bed hiring cost. Correct, smart you are. One expense you left, bed hiring cost. We are hiring 750 beds at the rate of 100, which is 75,000. So add it to the variable cost. It will become 56 lakh 5,000. Total will become 1 crore 31 lakh 23,000. Profit will be 40 lakh 52,000. Got it? They are asking contribution per patient day, that is nothing but sales minus variable cost. Selling price is 150. Variable cost per unit will be how much? 56,05,000 divided by 11,450. 489.52. Difference is the contribution. 1,500 minus 489.52. 1,010.48. Got it? Next, break even they are asking. Break even is nothing but when you get some number of patients, your revenue will be equal to cost. Correct? Which means no profit, no loss. So let's say break even patients be P. If P number of patients comes, we'll get total revenue of 1,500 P. Correct? Few curves won't even leave the tab also. 1,500 P will be revenue. That will be equal to cost. Cost will be nothing but variable cost plus fixed cost. Variable cost is how much? 489.52 per patient day. Correct? Plus fixed cost 75 lakh. 1,500 minus 489.52. So 75 lakh 18,000 divided by 1010.48. 7,440 patient days will be treated as break-even point. That is, if we get 7,440 patients, then no profit, no loss. Over and above, whomever you get, everything is wrong. Contribution from them is profit. Because variable cost you have to incur, no? MOS, very good. MOS. Margin of safety. Whoever watching for the first time, thinking, time is there now for December exam. You don't know what is MOS? Don't worry. We'll see in marginal costing. Anyhow, in examination, you won't be able to write if you haven't started preparing yet, but still. What? Negative you talk, sir. Arey, don't write, that's okay. Who is forcing you? Just make sure if any valid reason is there, then only skip. Invalid reason, don't skip. Next up. Hello. Hi. Hi. Hotel Dream House is having 250 rooms, of which 70% are normally occupied in the summer. 40% are occupied in the winter. Period of summer and winter are taken as 6 months and 6 months. What is the value of total occupied room? Try to understand. In 6 months, how many days will be there? 180 days will be there. In winter also 180 days will be there. In 180 days, first summer May, 250 into 70% will be occupied. 175. In winter, 250 into 40% will be occupied. 400. Hey, Jatre. I thought together you told. How much it is? 31,500 plus 18,000. 49,500. If at all you were charging different rates, then you could have found equivalent room days. Correct? No. A lorry starts with a load of 40 metric ton from station A. You can see that station A to B it's 40 kilometers, station B to C it is 60, station C to A 80 not 100, which means in the same road it's not going, it's going in a triangle. Correct? A, B, C. A to B it is going with 40 metric ton. I have to see that big lorry ones. 40 metric ton. Can you imagine? Normal lorries will be like 10, 12, 14 now. Institute is next level. It unloads 16 metric tons in B. Okay. Balance it takes to C. 24. On return trip, it takes 32 metric ton from C to A. Kilometer. A to B, 40 kilometers. B to C, 60 kilometers. C to A, 80 kilometers. Commercial metric ton kilometers they are asking. Awesome. Simple average, right? How many kilometers we are traveling? 40 plus 60 plus 80. 180 into average 40 plus 24 plus 32. Divide by 3. May I know how much? Sorry? B. Next. Oh, you got question now? 4A now. This is that same variable fixed cost question. How we did that same thing. Okay, but there it was only 2 rooms. Here it is. 3 types of rooms. Next. What happened to her all of the sudden? December 24? What you told? What she told? What she said? ದೇವರೇ. You are required to calculate the bus fare to be charged to Sweet Village and Rajpur from Newtown, and local trip per passenger. Okay, so listen here. Prano Services owns a bus and operates a tourist service on a daily basis. Awesome. Which means it is not from in between and all you can get down. The bus starts from Newtown to Sweet Village and return back to Newtown on the same day. Awesome. Distance between Newtown to Sweet Village is 250 kilometers. Here Newtown is there. Here Sweet Village is there. Distance is 250 kilometers, which means it travels Pranay services. Pranay. 500 kilometers is what it's going to travel. Got it? Oh, attendance I didn't show. Morning sessions attendance also I didn't show. Anyhow, first group is done. What we will do with that attendance, isn't it? This trip operates for 10 days in a month. So 10 days we are operating at this. The bus also plies for another 10 days between Newtown and Rajpur. 10 days we will do this drama. Okay. Next 10 days again from Newtown we are going to Rajpur. Listen, if at all while going different seating capacity, while coming back different seating capacity, you should take it as two different things. Don't merge the kilometers. For example, earlier they have told while going different, while coming back. So for 250 kilometers, find out the passenger kilometer. Other 250 kilometers, again find out the passenger kilometer, then merge it. Understood? Newtown and Rajpur. Distance between these two is 200 kilometers. And this we do for how many days? 10 days. Okay. Again for 5 days. Newtown local trip. Sightseeing it seems. 5 days. Covering 80 kilometers per day. Don't multiply. Here 400 kilometers per day. Got it? Following are the data given. Cost of the bus. Depreciation is 20% charged on SLM. May I know the depreciation please? Quick. 70 lakh 80,000 into 20%. 14 lakh? Depreciation. Per annum. Keep that thing in mind. But the data is given for a month. Per month how much? 1 lakh? By the way, are we going to treat it as standing charge, running charge? Depreciation, fixed, standing. Driver salary 20,000 per month. One bus, how many drivers are required? One month. I mean, that is also kilometer based. No, per driver, I think 350, 400 kilometers it is. Your driver has expired. Please install a new one. We'll meet him in hell. Anyway, I am also going there only. We'll meet you there. Meet in 2 days. Hey, I'm traveling by bus only, man. After 2 days. Even this guy is telling driver is expired. You are telling we'll meet him in L in 2 days. Driver salary is how much? 20,000. Conductor salary 12,000. Part-time clerk salary, insurance, that is per annum, per month. By the way, driver salary standing charges, conductor salary standing charges, part-time clerk standing, insurance standing, diesel consumption 10 kilometers per liter. Crazy mileage we are getting. How many kilometers we are traveling in total? 500 for 10 days, 5,000. 250 for 10 days, sorry, 400 for 10 days, 4,000. Total will come to 9,000. 80 for 5 days, 400, 9,400 kilometers. Correct? So 9,400 kilometers we are traveling in a month. 10 kilometers means how many liters of diesel we want. By the way, sometimes they will refer it as petrol. Just don't use your smartness, don't write and come. Petrol cost not considered because bus use only diesel. Huh? Yeah, petrol they will give. Don't write and come, Anna. Don't write and come. Not a bus should run. What you will put instead of that? Water you will put. A petrol is not there. Diesel information is also not there. So just calculate that petrol cost, put it and come. And yeah, electric bus they might give in examination. For that mileage they won't give. For that mileage they won't give. They will give you range. They will tell per charge. They will tell per charge range is 500 kilometers and it will cost, or let's say 100 kilowatt hours are required per charge. Now 100 kilowatt hours are required per charge. Per kilowatt hours 10 rupees, let's say. Then what you should do, you are traveling for 9,400 kilometers, divided by 500. You need to charge 18.8 times. Now don't use your brains and round it off to 19. Because that remaining range will be there in the bus only, no? So take 18.8 only into 100. So total we need 1,880 kilowatt hours. Multiply with 10. So power cost will come to 18,800. Like that. Hope you guys understood. Now leave that. Come back to diesel. 9,400 divided by 10 now. 940. 940 into 90. 84,600. 84,600. Token tax it seems. Of course, fixed. 36,000 divided by 12. 3,000, right? Permit fees 4,000 per month. Per month how much? Don't divide by 12. Per month only they have given. Sundry expense 5,389 per month. Sundry expense. Oil 800 for every 200 kilometers. 9,400 divided by 200 into 800. 37,600. Running cost. Repairs and maintenance 17,236. Take it under running cost only. Normal capacity 60 passengers. Okay. First tell me cost. First tell me total cost. Quick. 1,18,000 plus 20,000 plus 12,000 plus 8,000 plus 84,600 plus 3,000 plus 4,000 plus 5,389 plus 37,600 plus 17,236. 3 lakh. Huh? Correct, no? From where you got extra 70,000? Hope it's clear. Cost is clear. Done. While flying to and fro Sweet Village, the bus occupies 90% of the capacity. Awesome. Bus will come up with 54 passengers. How many passengers? So, how many passenger kilometer? 500 kilometer for 10 days with 54 passengers. 2 lakh 70. Now listen. If at all they had given while going 90%, while coming back 80%, actually in tourist bus it won't happen. I mean, that is altogether different thinking. Assuming you left them there, generally it won't happen. But generally, if at all they give, while going occupancy is 90%, while coming back 80%. That means while going, then what you should do, sir? 250 kilometers for 10 days with 54 passengers plus 250 kilometers for 10 days with 48 passengers. That will give you passenger kilometer. This is what I told earlier. You should divide. Got it? Oh. Next, 80% in the next trip. That is 400 kilometers, 10 days in a month with 48 passengers. 60 into 80%. 1 lakh 92. Local trip full capacity. 60. 80 kilometers into 10 days into 60. Correct. 5 days. 5 days break, no? 20. Awesome. Total passenger kilometers. 4 lakh. Passenger. Hope it's clear. 3,09,825 you should recover from 4,86,000 passenger kilometers. Wait. That is cost. Also 25% on takings you want. Which means if you take takings, collections as 100, then cost will be 75. Correct? No. Takings is 100. 25% on that profit means 25 is profit. Cost will be 75. 75 means 3,09,825. 100 means question mark. $4,13,100 should be recovered from 4,86,000 passenger kilometers. Correct? 72 per passenger kilometer. Now, first one, we are taking them for what they are asking? Bus fare to be charged to Sweet Village. To Sweet Village, how much you will charge, sir? 0.85 into 250 kilometers. 212.5. 0.85 into 200 for the next one. 170. 0.85 into 80 for the next one. Hope it's clear. $213, 170, 68. Actually, in examination also, they shouldn't have asked this. They should have asked for each and every trip how much you should collect from each passenger. If that's the case, always remember, you should do into 2. Why? You can't just take them and leave them there and come. You should bring them back also, no? So basically, you should charge for 500 kilometers, 400 kilometers, 80 kilometers respectively. Hope it's clear. Next one, please. June 25. MCQ 9. In this case, average cost per ton kilometer is how much? Total 25,000 kilometers we are traveling with 3 tons. Correct? Which will come to 75,000 ton kilometer. 2,25,000 is a cost. 75,000 is a ton kilometer. Rupees 3 per ton kilometer. Next. No? Great. Modern test papers. MCQ? This summer, winter we have done no. Some 49,800 on something we got answer. A hotel has 100 rooms, 80% occupied in summer, 25% in winter. So 80 rooms and 25 rooms. 180 days, 180 days. Fast. Total intent. B. No descriptive. Next. Set to no MCQ. 4A. A transport service company is running 5 buses A between two towns which are 50 kilometers apart. Seating capacity each bus is 50. The following particulars are obtained. Actually, passengers carried were 75% of seating capacity. 37.5. All buses run on all days. Awesome. Each bus made one round trip per day. So each and every bus will travel 100 kilometers per day with 37.5 passengers in it. Correct? Into, sir, should we take 30 or 31, sir? As the month is both 30 as 31, you can take anything. The answer is wrong. Why? They particularly mentioned a month as April. April month is 30. You know that crazy innovation now? Jan, Feb, March, April. And also after July again it will come. Whoever made it. Very smart fellow. Very good. So, whole 30 days we operate. How many passenger kilometers? 1 lakh? But that is per bus. Per bus, no. 5 bus we got. So, for a fleet, 5,60,500 passenger kilometers. Got it? Calculate out the cost per passenger kilometer. It seems. Oh, simple. Wages to driver, conductor, etc. 2,40,000. Salary to office staff. Guys, this one is standing, diesel, running, repairs and maintenance. Actually maintenance, but you take it under running. Taxation and insurance, standing. Depreciation, standing. Interest and other expense, standing. Total will come to 13,90,000. So 13,90,000 divided by 5,62,500. 2.471. Don't expect this to come in examination for 7 marks. It won't. I mean, bit of adjustments they will give, or this they will ask for 3 or 4 marks. Next. Next. Same question, by the way. December 4A na. That hotel related in study material 5-6 similar question they have given. In examination they didn't even ask that complicated ones also. Jatre people. Mr. Nikhil started transport business with a fleet of 10 taxis. Various expenses incurred by him. Cost of each taxi is 120,000. Awesome. Salary to office staff 6,500. Before that, Calculate the effective cost of running a taxi. Calculate the effective cost of running a taxi, one taxi per kilometer. If the higher charge is 15, determine the profit Mr. Nikhil may expect in the first year. I think this question we have solved. Now listen. Cost of each taxi they have given. Did they tell anywhere about depreciation by any chance? Life of taxi is 3 lakh. And at the end, which is estimated to sold for 30,000. Now listen, a taxi runs on an average 5,000 kilometers per month. So for 5,000, calculate the depreciation fast. 1,20,000 minus 30,000 divided by 3 lakh. You will get depreciation per kilometer. Multiply with 5,000. 1,000. See, I am calculating everything for per taxi now. And listen, you know what is the beauty of this calculation now? Don't know? Running charges, not standing charges. Depreciation is charged on the basis of vehicle is running, not time basis. Got it? Salary to office staff 6,500 per month. But these office staff guys will help all the 10 taxis. 6 50. Salary to garage staff same 350. Rent of garage 1 car 1,000. Driver salary per taxi. Don't divide by 10 now. Full 5,000 per taxi. Road tax and repair per taxi 30,000 per annum. 2,500 per. Correct, no? Insurance premium 5% of the cost per annum 120,000 into 5%, which will come to 6,000 divided by 12, because per month we want. Got it? Hello? A taxi runs on average 5,000 kilometers per month, of which 20% runs empty. So passenger kilometer will be 80% of 5,000, which is 4,000 kilometers. Because we can't charge more than 4,000 kilometers. Because 1,000 we are running simply. Petrol consumption is 10 kilometer per liter. Of petrol costing 70 per liter. Sir, 4,000 should we take in numerator or 5,000? 5,000. Because just because passengers are not there, that doesn't mean that petrol is not required. Petrol is required. How much will petrol cost? 35,000. That is 5,000 kilometers divided by 10. You need 500 liters. 500 liters of petrol, which will cost 70 rupees, 35,000. Got it? Oil and other sundry expenses 50 rupees per 100 kilometer. 5,000 divided by 100 into 50. 2,500. Got it? How much is the total cost? Come on. 2,500 plus 35,000 plus 1,500 plus 650 plus 350 plus 1,000 plus 5,000 plus 2,500 plus 500, 49,000. Cost is coming to how much? Cost is coming to 49,000 per month. Correct? How much will be the collection, sir? Out of 5,000 kilometer, only 80% is chargeable kilometers. And per kilometer, we are charging 15 rupees. 11,000. In Josh, don't write only so much and come. 11,000 is per taxi. We need 10 taxi. 1,10,000. In Josh, don't write and come 1,10,000. That is per month. They are asking per year. 13 lakh. You can write this. Got it? No doubts? Sorry, next one. December, nothing is there. Huh? June, 4A now. See, try to understand. You should revise once before you go to examination. So you are only seeing in one day we are not able to completely revise everything. So it is possible only if you keep revising again and again and again. So keep revising. Listen. 4A. Hotel Irevna Inn has a capacity of 200 single rooms and 40 double rooms. Awesome. The average occupancy of both single room and double room are 80% throughout the year for 365 days. Crazy. The rent of the double room has been fixed at 125% of the single room. Awesome. Variable cost, fixed cost. You know what to do. Next up. Set to June 25. MCQ 12th. Absolute ton kilometer is an example of composite unit for transport sector. Correct? No. For bus operation it is passenger kilometer. Or are they going to calculate on the basis of passengers, or they will weigh the passengers and they will charge them? You are 70 kg, you are 60 kg. No. Goods they will do like that. Passengers per passenger. Unit for oil and natural gas is basically liters or barrels, and composite unit for power sector is kilowatt hours. Next up, 4A. These two terms related things, nothing extra is there. Do it on your own. Next up. December 10th MCQ. Composite cost unit for hospital is per patient day. Next up. 4A now. This we have already done now. 13,90,000. Next up. Set to 10th MCQ. A hotel has 80 standard twin bedded rooms. Okay. What do you mean by twin bedded room? Double room, but separate bed, twin beds, like that. The hotel is fully occupied for each of the day, 350 days in each year, and it is open. Awesome. The total cost of running a hotel is 33,60,000. What would be the cost per unit per day? So 80 rooms are there, 350 days, fully occupied. So how many room days? 80 into 350, 28,000. 33,60,000 divided by 28,000 per day, it is 120 per room day. Next up. Same question. Hope it's done right. But we'll see that hotel question, hill station question once. You remember that question? Which is there in study material. Electricity for 30, correct. 120 in summer days, 30 in winter for 4 months. That question. In our material only 3-4 questions are there. It's very difficult. Coming to CMA batch and telling CMA material as our material. Next going to CA batch, they're telling CA material our material, CS our material. She's cursing. I don't know how much she's cursing. Let her curse. Let's see how much she will curse. Day after tomorrow, you might have to come. I don't think so. Tomorrow, one day, so. Here also, same thing, it seems. Might be, we'll see. Tomorrow, if it won't get over, let's not rush. Because anyhow, if you go home also, you'll be wasting time only. One month to go. So many days it took. What is it? Hey, this question also you see once, okay? Illustration 53. Classes, what we have done. Cursing? What? Correct. No doubt. Yeah. Okay, listen. Listen now. Angel Holiday Home runs in a small hill station with 100 single rooms. Now you might tell, sir, there is no necessity of equivalent room days. Equivalent room days won't come because of rooms, size of rooms. It comes because of charging different fare, room rent. The home offers concessional rates during the 6 off-season months. During this period, half of the full room rent is charged, 50% discount in the off-season compared to season. The management's profit margin is targeted at 20% of the room rent. The following are the cost estimates and other details for the year ended 31st March 2022. Assume a month as 30 days, which means in a year 360 days. Occupancy during the season is 80%, while off season it is 40%. Got it? Now listen. 6 month. Guys. 6 month. 30 days. 100 rooms were occupied for 80% season. 14,000. I'm computing room days, not equivalent room days, room days. For the next 6 months, 30 days, 100 rooms occupied to the extent of 40%. 7,000 room days. Correct? Shall I compute equivalent room days also? Shall I take my season as a 1, weight as 1, 14,400 into 1. That means off season it will be 7,200 into 0.5 because we are charging 50% of what we charge in season. How much it will be? 14,400 total. Got it? Hello. Total investment in the home is 200, of which 80% is for building, balance is for furniture and equipment. They have given relating to depreciation. Anything depreciation, see here. Building 5%, furniture and equipment 15%. 280% building cost was 160 lakhs. For that, we are going to charge the depreciation of 5%, which will come to 80,000. Furniture, 40 lakhs into 15%. Hey, wait. 160 lakhs into 5% is how much? 8 lakh, right? $40 lakh into 15%. Total depreciation 14 lakh. Leave that. Now listen. So 8 lakh, 6 lakh, 14 lakh, 5 lakh 50,000, 2 lakh 61, 80,000, interior 175, miscellaneous 190, 800. Total is coming to how much?
$26 lakh,
26 lakh 56,800. Correct? Now, room attendants are paid rupees 10 per room day on the basis of occupancy in a month. Try to understand. They don't care whether you are charging 50 or whether you are charging 100. For each and every day, for each and every room we clean, you have to give 10 rupees. So try to understand. Season time for 6 months, 30 days, 180 days, we are cleaning 80 rooms. Correct? No? For 6 months, 30 days each, 180 days, we are cleaning 80 rooms. Out of 100 rooms, we are cleaning 80 rooms. Because if it is not occupied, we are not going to clean 80 rooms. And for that rooms, you have to pay me 10 rupees. Which means season time, you have to pay me 1,44,000 M plus. Off season. Same 6 months. Same 30 days. But we are not cleaning 80 rooms, we are cleaning just 40 rooms. And for that you have to pay me 10 rupees. Total 2 lakh. Anyone, any doubt in the room attendant's salary? Okay. Monthly lighting charges are rupees 120 per room. Monthly lighting per room, guys. Hey! Except in 4 months in winter when 30 rupees per room, and this cost is on the basis of full occupancy in a month. Try to understand. For the first normal 6 month will compute. Normal 6 month, on an average, in every single month, 80 rooms used to be occupied. Sorry? Any doubt? See, every month 80 rooms will be occupied. We'll be charging 80 into 120 per month, 9,600. We'll do this for 6 months. 57,600. For the next 2 months, 40 rooms will be there. So for 40 rooms, we'll pay 120 rupees. 4,800 into 2 months, 9,600. Correct? Now, winter's 4 month. Try to understand. 40 rooms will be there. Per room per day, sorry, per room per month, it is 30. Which means in a month, 1,200. For 4 months, 4,800. So total lighting charges are 57,600, 9,600, 4,800. $72,000. Got it or no? Electricity alone. Total. This is cost. This means 75, 20% of room rent. This means 80. 100 means question mark. 29, 44, 800 divided by 0.8. 36 lakh divided by equivalent room days. 18,000. 204.5. Try to understand. This is season. I should charge per room day season time 204.5. But off season it will be 102.25. Got it? Hope it is clear. Here major calculation will be relating to that electricity as well as room attendant's salary. Any doubt in this? No doubt. With that we completed service costing. Now we will be proceeding to, fine, tomorrow we'll continue. Okay, no worries, because if it all won't get complete tomorrow also, we'll see day after tomorrow. In first half we'll try to finish it off. Okay, now we'll be discussing overheads. Okay, so basically guys, what do you mean by overheads? All the indirect expenses together we call it as overheads. That is indirect material, indirect labor, indirect expense. Sir, why do we want this chapter, sir? We know that prime cost, which is direct material, direct labor, direct expense, can be directly charged to the final product because it is directly traceable. However, coming to your indirect material, indirect labor, indirect expense, you can't directly charge it to final product because you can't trace it directly. Correct? That's the reason we have this particular chapter. But that doesn't mean that, okay sir, indirect material, indirect labor, indirect expense, we can't charge it directly, so we are not going to charge to customers at all. No. You have to recover all the expenses from customers. No doubt in that. Correct? No? So, how to recover that? How to charge that to customers? That's what we are going to discuss in our overheads chapter. So, all the indirect material, indirect labor, indirect expenses together we call it as overheads. Now, we will either allocate the overhead or apportion the overhead. How, sir? Try to understand, guys. Let's say there are 3 manufacturing department or production department XYZ. TV is not coming? Then what you guys are doing so much? No, you didn't tell. Yeah. Coming? XYZ. Let's say 2 service department are S1, S2. Now guys, we'll be having some indirect material, indirect labor, indirect expenses in this production department, as well as service department. Now these indirect material could be directly assignable to the particular production department, particular service department. Try to understand, directly assignable. I am not telling directly traceable in the final product. I am telling directly traceable or directly assignable to the particular department, cost center. If that is the scenario, directly we are going to charge it to the particular department. That thing we call it as assignment of overhead. That thing we call it as what? Assignment of overhead. For example, my service department, one is sales department, let's say. Now sales manager salary is there. Now, should I have to distribute it to all other departments, or can I tell that it is relating to sales department? It is related to sales department. Getting it or no? Now, this thing we call it as assignment. This thing we call it as what? Assignment. Directly charging it to the respective cost center. That is assignment. Okay. Whereas rent is there, let's say. Rent is there. Now rent is the only sales department located here? No. Production departments are there, other service departments are there. Everything is located in the same location. No. Now my question is, don't you think rent to be distributed to all the departments? Yes. Burden of rent to be distributed to all the departments. Yes. That process where directly you can't charge it to cost object, either on the basis of output or either on the basis of cost incurrence, you are going to charge it to different departments. That process of charging or distributing or segregating overhead to the different departments, that thing we call it as allocation, that is assignment, or apportionment. We call it as what? Apportionment. Allocation and assignment is direct. Apportionment means which are indirect and you can't trace it directly to any particular cost center. So you are going to segregate and charge it to respective cost center. Rent, lighting, electricity bill, like this. That we call it as what? Apportionment. Okay. After apportionment, we got to know this thing. Cost overhead for the respective production department, respective service department. But what is the best part here? Production is happening only in the production department. Outputs are happening only in the production department. So don't you think, now as per this one, now let's say labor hours are there, machine hours are there. Let's say production department X is labor intensive. Production department Y and Z are machine intensive. Now guys, hello. Don't you think that X departments will be charged on the basis of labor hours? Y and Z departments, it will be charged on the basis of machine hours to the final product. Absorbed, charged, recovered. Correct? No? What about these two? Are we charging this? No. But still our cost only, no. Don't you think we should charge it to the final product? But the thing is, these two departments don't have any final product. In that scenario, what we should do, sir? Very simple. As it's a supporting service, you should, whatever the overhead is there of the service departments, you should reapportion. You should what? Reapportion it to the production departments. You should reapportion it to the production departments. Then these two will become 0. And whatever the production department cost plus service department cost which is getting added, that will be finally charged to the output. That will be finally charged to what? Output. By the way, that process of charging overheads of the service department to the production department, the process of charging overheads of service department to the production department, that process or that thing we call it as reapportionment. What? Reapportionment. Got it? After charging this reapportionment, whatever the total overhead is there that we are charging or recovering from the final product, that thing we call it as absorption. What? Absorption. Hope it is clear. See there, direct assignment of the cost to cost object which can be traced directly, that we call it as allocation. Allotment of cost to cost object on some basis in proportion as cost cannot be traced directly to such cost object, that we call it as what? Allotment. And reapportionment of service department overhead to the production department, we call it as apportionment of service department to production department, we call it as reapportionment. And process of recovering overhead of the department from its output, we call it as absorption or recovery. Now, absorption or recovery will be done on what basis, sir? Absorption or recovery will be done on the basis of absorption rate. Absorption rate. Sir, what do you mean by absorption rate? Sir, absorption rate is nothing but, guys, recovery rate. We call it as recovery rate also. That is rate at which overheads are recovered from the outputs. Rate at which overheads are recovered from the output. Sir, generally how the absorption rate will be computed? Always remember, guys, always remember, generally overhead absorption rate will be computed on the basis of budgeted data, not on the basis of actual data. What? On the basis of budgeted data, not on the basis of actual data. What do you mean by that, sir? Now let's say ArivuPro overheads estimated was around 50 lakhs. How much was estimated? 50 lakhs budgeted. And budgeted number of students. Budgeted number of students was, let's say, around 5,000. 5,000 was the budgeted number of students. Now try to understand. We have to recover this overhead, no? From the students, yes or no? Or they should only recover the faculty cost from students. They should recover overheads also, no? Everything they should recover, no? Now, to recover, are they going to charge you a fees in the beginning of the year or end of the year? Beginning of the year. Is expenses already incurred in the beginning of the year, or we will get to know exactly how much is our actual overhead at the end of the year? We'll get to know at the end of the year. That doesn't mean that we can charge you at the end of the year. We'll charge in the beginning of the year. How much to be charged? We should determine in the beginning of the year only, no? To determine it in the beginning of the year, we should take the budgeted data or actual data? Budgeted data. Got it? Now what we will do? Let's say we got to know our budgeted overhead is 50 lakhs. Okay. Our budgeted number of students are 5,000, which means around we have to recover 1,000 per student. That is, for each and every student, as an overhead we are going to charge how much? 1,000. To the cost we are going to add 1,000. Got it? Now, but remember, this is absorption rate computed on budgeted data, but it will be absorbed only on actual data. What do you mean by that, sir? Let's say 5,500 students came actually. How many students came? 5,500 students came. Now we are going to recover 1,000 rupees from 5,500 students. So try to understand, while absorbing, we will take the actual data. We'll take what? Actual data. Hope it's clear. So we got to know it as rupees 55 lakhs. Let's say actually we incurred 52 lakhs. Actually we incurred how much? 52 lakhs. We recovered how much? 5 lakh. Now my question is it over recovery or under recovery? Over recovery. Because we actually incurred 52 lakhs, but we are recovering 55 lakhs. That means 3 lakh rupees we have over recovered. 3 lakh rupees we have over recovered. Now this 3 lakh we call it as over recovery, or we call it as over absorption. 3 lakh we call it as over recovery or over absorption. Sir, what if 5,100 students came? Okay, then how much we will be recovering? 1,000 from each and every student. So we'll recover 51 lakh. But actually we incurred 52 lakh. That 1 lakh what we are not able to recover from the students, that we call it as under recovery, or we call it as under absorption. Under recovery or under absorption. Hope this thing it's clear. So absorption rate, budgeted overhead divided by budgeted cost unit. So budgeted cost unit means what, sir? Number of units are need not be always. We have different things that I will tell when I am explaining different absorption rates. Now you have to understand the basic process how it works. Okay. and absorption or recovery will be done on the basis of actual data into absorption rate. Actual overhead minus absorbed overhead. If at all actual overhead is more than absorbed overhead, it is under recovery. If at all absorbed overhead is more than actual overhead, over recovery. Hope it's clear. So overheads to the production department and to the service department. Whatever is there service department, that will be reapportioned to the production department. First we will allocate a portion to both the department. Directly whatever is there, that we will allocate, we will assign. Whatever indirect is there, that we will apportion to the production and service, and service departments we will reapportion to the production. Service department will reapportion to the production. Got it? And after that, production department overhead will be absorbed or recovered from the final product. This is what we will be doing. However, listen guys, sometimes they might give, for allocation and apportionment, they might give direct material, direct labor, direct expense also. Always remember, direct material, direct labor, direct expense are the expenses which can be traced in the final product directly, which means that is not a overhead at all. So don't consider it for the production departments as a overhead. While computing how much is a overhead for the different departments, while computing overhead of the production department, don't consider direct material, direct labor, direct expense. What is given in the question? Why, sir? That is not overhead at all. Sir, what about to the service department? Sir, you have to consider. Sir, for service department also it's directly only, no sir. What do you mean by direct expenses? Which can be directly traced in the final product. Service department has final product. Then what you can trace? Getting. So for service department, everything is overhead only. For production department, these three are not overheads. These three are not overheads. Hope it is clear. Now, sir, how can we apportion, sir? Guys, always remember, if it is relating to rent, lighting, all those things, generally lighting and all, if they give light point, you can allocate or you can apportion on that basis. Allocation is simple, directly you can do. But apportionment, if it is a lighting, you can do it on a light point basis. Like your AC, your rent, all those things, you can do it on the basis of space occupied. If at all light points information is not given, for that also you can use space occupied. Whatever you will give to your employees which are not based on their salaries, like perquisite, labor welfare expense, timekeeping expense, personnel office, supervision, your canteen expenses, hospital, all these expenses will be there. No, that is not based on their wages. That will be apportioned on the basis of number of workers. Sir, what we give on the basis of their wages, compensation, ESI contribution, EPF contribution, holiday pay, leave pay, all those things will be there. No, that is on the basis of their earnings, that we are going to apportion on the basis of direct wages. Got it? Other general overhead, guys, always remember, prioritize it. If it is a machine intensive, then on the machine hours. Sir, machine hours it is not given, then on the basis of labor hours. Sir, labor hours is also not given, then on the basis of wages, direct wages. Okay, anything general is there, sundry, then you can apportion it this way. If it is machine intensive, machine hour basis, labor intensive, labor hour basis. Sir, both of that are not there, then direct wages. Got it? And depreciation of plant and machinery, repairs and maintenance, insurance and all these on the basis of values. Power, steam consumption, internal transport, technical estimate, guys, power and all, power, fuel and all, always remember, if they give it on the basis of machine hours, take machine hours. No sir, machine hours they haven't given. They have given number of machines. Okay, then take number of machines. Sir, machine hours also they haven't given, number of machines also they haven't given. HP of the machines they have given. Then consider HP of the machine. Sir. In the question they have given HP also, sir. Machine hours also. What we should do? HP into machine hour. Always remember this. HP into machine hours. If they have given machine hour per machine and they have given number of machines, then you should multiply that also. Why you have to multiply? With that bike example, mileage thing I told you in class, if you remember. Yes, that's the thing. I don't want to explain it again and again, but always remember, if at all 3-4 items they give relating to the same thing, then you are going to multiply everything and take that ratio. Got it? Material handling, stores overhead and all on the basis of weights, direct material, value of material, all those things. Got it? Sir, reapportionment, how can you do, sir? If it is a maintenance department, repair shop, planning progress, tool room on the basis of direct labor or machine hour, all these things. Canteen and all on the basis of number of workers, number of employees. Your timekeeping on the basis of number of employees. Computer section on the basis of computer hours and all. Powerhouse, floor area, cubic, content, all those things. Stores department on the basis of number of requisition, materials issued. Transport department on the basis of crane hours, truck hours, all those things. Fire protection on the basis of capital value, and inspection on the basis of inspection hours. Okay. Now, sir, how can you reapportion it? How can you reapportion it? Guys, we got three methods. One is direct redistribution method. One more is step method. One more is reciprocal method. What? Direct redistribution method, step method, or we also call it as non-reciprocal method. One more is reciprocal method. Try to understand. Let's say we have three production department. We have three service department. Situation is that service departments provide service to production department. Let's say as per the primary distribution. By the way, allocation and apportionment we call it as primary distribution. Reallocation or reapportionment we call it as secondary distribution. Now, as per the primary distribution, we got to know the overhead of the respective departments. Okay. And remember, XYZ is your, very good, production department now. XYZ is your P1, P2, P3 is your P1, P2, P3 is your production department, XYZ is your service department. Now, situation number 1. X is providing service to P1, P2, P3. Okay, on some ratio we are going to distribute overhead of X now. Okay, Y is providing service to only P1, P2. Y is providing service to P1, P2. Z is providing service to P2, P3. Now, what is this situation, sir? Situation is that service departments are providing service to production department. What? Service departments are providing service to production departments, but not to any other service department. Guys. Service departments providing service to production departments, not to any other service departments. By the way, that thing we call it as direct redistribution. Here you don't have to use any of your brains. Whatever is there, just distribute it in the ratio to our production departments. Simple. So direct redistribution could be applied when a service department provides service only to production department. No service departments are providing service to other service departments. No service departments are providing service to other service departments. That thing we call it as what? Or that method what we can apply, we call it as what? Direct redistribution method. Direct redistribution method. Hope it is clear. Sir, when can we apply step method or non-reciprocal method? When can we apply step method or non-reciprocal method? When can we apply this? Guys, non-reciprocal, one-sided love story. What do you mean by this, sir? One service department will provide service to other service department, but other service department won't reciprocate it. What? Come again. One service department will provide service to other service department. Other service won't reciprocate it to this service department. In that scenario, we call it as non-reciprocal. So the method applied for reapportionment in the case of non-reciprocal is step method or non-reciprocal method. Okay. Now listen. For example, service department X is there, no? That is providing service to P1, P2, P3, Y as well as Z. Now it has become nil. Y is providing service to P1, P2 and Z. P1, P2 and Z also. Okay. This has become nil. Now Y department providing service only to production departments. Only to production department. Now everything became nil. Correct? So whatever the service department was there, everything was reapportioned to P1, P2, P3. Now this method we call it as step method or non-reciprocal method. Because we call it a step method because see there, the formation of step will be there. Got it? Got it or no? So when it is applied, when one service department provides service to other service but other service won't reciprocate it. X providing service to Y and Z, but Y and Z are not reciprocating to it. Y is providing service to Z, but Z is not reciprocating it to Y. In that scenario, we are going to apply step method or non-reciprocal method. And always remember, this arrangement will be there. No? How to be done, sir? First priority should be given to that service department which is providing service to maximum number of other service departments. As X and Y both are providing service to other service departments. However, X is providing service to Y and Z, Y is providing only to Z. As X is providing more number of services, we are going to prioritize X first, then Y, then Z. Otherwise, if you write Y, what happens? First, you will distribute Y. Okay. For X also it will come. Then again, when you distribute X, again Y will be getting credited with that. Correct? Then it will become repeated redistribution. Not simultaneous, your step method. Got it? Got it or no? Now, sir, what if it is reciprocating? What do you mean by that, sir? What if each and every or service department will provide service to other service department and other service department will reciprocate it? What? One service department provides service to other service department reciprocate it. For example, now X service department is there, no? X, that will be providing service to P1, P2, P3, Y and Z. Now Y is providing service to P1, P2 and X. X was providing service to Y. Y is providing service to X. Reciprocal, non-reciprocal. Reciprocal, non-reciprocal. Two-sided love story, one-sided love story. Two-sided love story. Reciprocal in nature. That's why we are going to apply reciprocal method. What method? Reciprocal method. Okay. How this reciprocal method will work, sir? 3 different methods are there under reciprocal. One is a repeated redistribution method. 2, simultaneous equation method. 3, trial and error method. Repeated distribution method, simultaneous equation, trial and error. However, if the service departments are like more than 2, you can apply only repeated distribution method. However, if there are only 2 service departments, then you can apply either simultaneous or trial and error if the question is silent. Now listen. First I will show repeated distribution. Okay. Now listen. First X is providing service to P1, P2, P3, Y, Z. Now X became nil. Y and Z are there. Now Y provides service to X, P1, P2. Okay. Now see here again. X again got credited with some amount. Y became nil now. Z is having some amount. Now we'll distribute Z. Okay. Z will provide to Y. X. Everything. Even one department reciprocates also, you can't apply non-reciprocal. Even just the Y department is reciprocating. Still you can't apply non-reciprocal. You have to apply reciprocal. Even one service department reciprocates it, you should go for reciprocal only. Got it? Now again X got something, Y got something. Now again X we will distribute. Getting it? So again Y we will distribute. Again Z we will distribute. Until we get a negligible amount, we'll be distributing it again and again and again and again and again until we get a negligible amount in the service departments. This process we call it as repeated. As we are repeating the process, we call it as repeated redistribution method. What do we call it as? Repeated redistribution method. Repeated redistribution method. Hope it is clear. No doubts? Pakka? Oh. Fine. Give me a second. Now, simultaneous equation, one more method, simultaneous equation method for reciprocal in nature and trial and error method. See there. Let's say P1, P2, P3 are there. Service department X, Y, 2 are there. Okay. Overhead as per primary distribution. Overhead as per primary distribution, let's say, concentrate, overhead as per primary distribution, for P, let's say it is around 1 lakh, P2, let's say it's around 2 lakh, P3, let's say around it is 1,50,000, for X it is 60,000, for Y it is 80,000. Okay? Yes or no? Now, department X. Department Y. Department X provides service, right? Of that service, 50% will be to P1, 15% to P2, 10% to P3, 25% to Y. Try to understand what service provided by X in the 25% is going to Y. X departments 25 to Y, not that Y departments 25 to X. Keep that thing in mind. Whenever they give like this, majority of them will do mistake here only. Next, Y department 20, 20, 20, 40. That is Y departments 40% service will be given to which department? X department. Got it? Huh? Now first I will show the simultaneous equation method. What method? Simultaneous equation method. Sir, how it's going to work, sir? And listen here, so far whatever we have discussed, everything should be distributed in terms of ratios, not percentage, ratio. If you divide it in percentage, then there might be a high possibility that total overhead will not get reallocated, reapportioned. So always ratios, except these two. For simultaneous and trial and error, you should take percentages. I will show that. Wait. Now listen. Overhead of X, overhead of Y. Guys, overhead of X, shall I take it as X and Y? Yes? Sir, take 60 and 80. No, the answer is no. Why? 60,000 is only overhead of X. But we also know that 40% of Y will come to X. Not 25% of Y. Keep that thing in mind. 40% of the overhead of Y will come to X. Sir, take it directly. No, sir. 20,000 or sorry, 16,000. Not 16, 32,000, right? Take 32,000 and take it as 92,000. No, the answer is no. Why? Because Y's overhead is there. No. That is also not 80,000. Why? X department's 25% is going to Y. X department's 25% is going to Y. Sir, take 15,000 and add it. No. But we know that X department, it's not just 60,000. No. That's why, can I write it like this? Overhead of X is X. Overhead of Y is Y. Okay. Also, can I write overhead of X, that is X, is equal to 60,000. What is as per the allocation and apportionment? Plus 40% of overhead of Y, 0.4Y. Yes or no? Y. 80,000 as per the allocation, assignment, apportionment, plus 0.25 of X as per secondary distribution or reallocation, reapportionment, what we call it as. Got it? Writing this equation is very important in simultaneous equation method. Hope it is clear. Pakka. Now, we can solve this. This I will take it as 1. This I will take it as 2. You tell me, shall we do 1 in 2 or 2 in 1? 1 in 2, na? Okay. So, Y is equal to 80,000 plus 0.25. Instead of X, I am replacing it with 60,000 plus 0.4Y. y is equal to 80,000 plus 15,000 plus 0.1 y. Correct, no? Y minus 0.1 y is equal to 95,000. Y is equal to rupees 9 lakh? How come? 95,000 divided by 0.9 is how much? 1,05,000? 555. Correct? Now, using y, find out x. That is 60,000 plus 0.4 into 1,05,555. How much is 1,05,555 into 0.4? Using equation number 1. Plus 60,000. 1 lakh? May I know the total of this? But we know one thing. Our total overhead is just 2,40,000. Service department, our total overhead is just 2,40,000, not 2,07,000. Sorry, 1,40,000, not 2,07,777. So what are you trying to say, sir? Nothing. This is not a total overhead. So you can't divide 100% of this. But if you take ratio, then 100% of this will get divided among all the production departments. That's why I am telling, in simultaneous and trial and error, you should take percentages. What do you mean by that, sir? Now listen. P1, P2, P3. As per the primary distribution, how much it is? 1 lakh, 2 lakh, 1 lakh 50, right? 1 lakh, 2 lakhs, 1 lakh 50,000. Now, X department, we are going to reapportion to production department. That is 1,02,222, not in the ratio, but in the percentage of 50%, 15%, 10%. How much is 1,02,222 into 50%? 51,101 and 111. 1,02,222 into 15%. 15,333 into 10%. Don't take the balancing figure. Don't take. Y department. 1,05,555 into 20%. 21,111. 1,05,555 into 20%. Everywhere it's same only. Tell me the total. Next up. Hope it's clear. Yes. Now can you just tell me the total of only this? $72,222 plus 36,444 plus 31,333. 1,39,999, 1,40,000. That is nothing but your 60 plus 80. That is the reason why we should take percentages while distributing service departments overhead to the production department using either simultaneous or trial and error. Got it? Hope it's clear. Don't use ratios, use percentages. Now trial and error also shall I show? Same question. Trial and error is nothing but your repeated distribution from Meesho. That's it. Shall we? We'll take first only service departments. X, Y. Overhead as per primary distribution. 60,000s, 80,000s. Correct? First we'll distribute X related to Y. First we'll distribute X related to Y. So try to understand. X 60,000 was there. Of that 25% will go to Y, which is 15,000. Now Y became 95,000. Next, Y 40% will be distributed to X. 95,000 into 40%. 38,000. Now X again became 38,000. That we are going to distribute to Y. 38,000 into 25%. 9,500. Of that 9,500, Y again became 9,500 balance. So we are going to distribute 40% to X. 3,800. X again became balance of 3,800. Of that again 25%. 950. Of that 950, Y we are going to transfer 40% to X. 380. Of that X 380, 25% we are going to transfer to Y. Y again the balance is 95. Basically try to understand. Sir, why you are taking only balance but total you should take? No, try to understand. That is getting distributed to production department in the back end. I am showing you only service departments here. 38. The next 25% to Y. Y X 0.951. Here we are going to stop. Negligible amount. Now take the total of this. Try to understand. 60,000 plus 38,000 plus 3,800 plus 380 plus 38 plus 38. Oh, sorry, 3.8. 221.8. 222 shall I take? Okay. Next one. 95,000. Don't take 18, 15, 95. 95,000 plus 9,500 plus 950 plus 95 plus 9.5 plus 1. 1,05,000. 555. This is nothing but the answer of your simultaneous equation. See there. Y 1,05,555, X 1,02,222. That we have distributed to production department in percentages now. Same drama you should do. So basically trial and error is mixture of your repeated distribution and simultaneous equation. Hope these two things are clear. Simple, no? Clear? Oh. Now, methods for absorption of overhead. Guys. Methods for absorption of overhead. We have different methods here. Listen. For a whole factory, direct material ayyo. Huh. For a whole factory now, direct material estimated to be 10 lakhs. Direct material estimated to be how much? Direct labor 5,000 hours at the rate of rupees 100, 5 lakhs. Correct? That will give us prime cost 15 lakhs. Add factory overhead. Factory overhead, let's say it's around 5 lakhs. Factory overhead is around. So your cost of production is, or your factory cost is coming to 20. This much is clear. Budgeted data for the whole organization. Now we have received one job order, okay, which takes, let's say, 5,000 rupees material. Okay, 5,000 rupees material, and that takes, let's say, 30 hours of labor at the rate of rupees 120, which will come to, prime cost will come to, how much factory overhead I should charge now? How much factory overhead I should charge? For that, we have different methods. Now we are going to see one by one. First one, I can take it as a percentage of direct material. What do you mean by that, sir? Guys, how much was the overall budgeted factory overhead? 5 lakh. Budgeted direct material? 10 lakh. If that is the case, can I tell factory overhead is 50% of direct material? If that is the case, if this particular job is taking 5,000 of material, then overhead to be absorbed is 2,500. So production cost relating to this will be 11,100. Hope it's clear. No, sir. It's a labor intensive. Okay. Then take it as a percentage of direct wages. No. Take it as percentage of direct wages. How much is a factory overhead? 5 lakh. How much is a wages? 5 lakhs only. %. It is. How many percentage? 100%. Got it? Now, if that is the case, factory overhead will be 3,600. 12,200. Hope it is clear. Okay. Percentage of prime cost also we can see. If it's percentage of prime cost, how much is factory overhead? 5 lakh. How much was prime cost planned? $8,600 into 33.33. $2,860. 11,000. This as a percentage of prime cost. Sir, no sir. Can you do it on a hourly basis? Yes. How? We incurred 5 lakh rupees overhead. I mean budgeted. When we were planning to have direct labors of 5,000 hours. Correct? So per hour recovery rate will be around 100. Correct? Now here you are using 30 hours. So recover around 3,000. Got it? Also you can recover it on the basis of units produced. Also you can recover it on the basis of machine hours. Like this. Hope it is clear. So percentage of direct material cost, that is total overhead divided by budgeted material cost. Percentage of direct labor cost, total overhead divided by budgeted labor cost. Percentage of prime cost, total overhead divided by budgeted prime cost. Labor hour rate, total hour divided by budgeted labor hours. And machine hour rate, total overhead divided by budgeted machine hours. Rate per unit of output, total overhead divided by budgeted output. Like this you can plan. Got it? That is your different methods of absorption rates. Methods, different methods. Now, different types of overhead rate. Guys, generally something called as normal rate or actual rate. What do you mean by that, sir? Here we don't take the budgeted data. Here we take the actual numbers. Okay. Actual overhead divided by actual base. Sir, actual base means what, sir? If it's a material, then budgeted material, actual material cost, actual labor cost, actual labor hours, actual machine hours, actual output, like that. If it's a predetermined rate, then you are going to take budgeted overhead divided by budgeted base. Departmental rate means different overhead rate for our different departments. For department X, department Y, department Z. For department X, for example, it is mainly depending upon materials. Then there I will find out overhead to be absorbed as a percentage of material cost. Department Y, labor hour basis. Then I will calculate overhead for a labor hour. Department Z, let's say machine hour based. Overhead for a machine hours. Now to the final product, how much material it is incurring. On that I will multiply percentage of material cost relating to department X overhead. How many labor hours it is taking. Relating to department Y, I will charge on that basis. How much machine hours it's taking. Department Z's overhead, I am going to charge to final product like that. So for final product now, department X is also charged, department Y is also charged, department Z's overhead is also charged. Got it? However, no sir, we don't have so much time and all. Whole factory thing, only one rate we will find out. That rate we call it as blanket rate. Whole departments under one blanket, single rate. But practically speaking, that is not the right way to do. Why? One department might be depending upon labor hours, one department might be depending upon machine hours. Now, you are absorbing it either on the labor hours or either on the machine hours. Both can you absorb on both the basis? No, because one single rate. No, denominator should be one, either machine hour or either labor hours. Got it? So that is the demerit of blanket rate. So related to that questions we have seen, if you remember, one ICA question also I showed you. They have done it on blanket rate. They asked you to select the right rate There, how can you select, sir, which is labor oriented, which is machine oriented? Very simple. Check how many machine hours has consumed, how many labor hours has been consumed by that particular department. If labor hours are more, then labor hours basis. Machine hours are more, machine hours basis. Got it? Now, sir, how to treat the under absorption, over absorption? If the actual overhead is greater than the recovered overhead, we call it as over absorption. If it is, sorry, under absorption, if the actual overhead is lesser than the absorbed overhead, we call it as over absorption. Sir, how we should deal with it, sir? See, in one examination question, your institute dealt in different manner. But after that, in one more examination question, they dealt it in a normal manner. So I am going to tell a normal manner. What you should do is, first, what is the reason for under absorption or over absorption? You should see. Abnormal reasons are wrong estimation, fault in the planning, management's fault, etc. Whatever relating to that percentage over its under absorption, over absorption will be there. That will be taken to costing P&L. For example, if it's a over absorption, benefit credited to costing P&L. Under absorption, loss debited to costing P&L. No, sir, any other reasons like increase in the prices of material, increase in the prices of labor, which is not in your control. Which is not in your control. In that scenario, over absorption means you should reduce it from the cost. Under absorption means you should increase it to the or add it to the cost. By what, sir? By calculating supplementary rate. By calculating supplementary rate. Got it? Under absorption, over absorption due to blanket rate. Nothing like that. Not only blanket rate, any rate it is. On what basis you calculate doesn't matter. At the end, under absorption, over absorption will be there. No. How to deal with that is the thing. Hope it's clear. Yes. So that will be taken on the basis of supplementary rate. Okay. And remember one more thing. While calculating under absorption and over absorption, you take actual overhead. No, you should be very careful, because sometimes what happens, actual overhead will be consisting of last year expenses booked this year, reduce it. Whatever the expenses incurred to the strike period, reduce it, directly charge it to costing P&L. Don't bring it to this assessment at all. Obsolete stores, reduce it. Whatever the abnormal things are already added in the AOH, no, actual overhead, that you should reduce and take the remaining figure as actual overhead. I think one question I showed you guys, right? That way. And next, something called machine hour is there. Machine hour rate. What is that machine hour rate, sir? Try to understand this. So far I told you whole department single rate, right? But now again, if at all you want to, or let's say in one department there are more than one machines are there. In one department more than one machines are there. Machine A is there, machine B is there, machine C is there. One output is going through this department. Through machine A, it will go for 8 hours. Through machine B, it will go for 6 hours. Through machine C, it will go for 2 hours. Now try to understand. Can I charge whole department overhead to this particular output directly? No. Why? If I want to charge on machine hour basis, which one I will take? 8 hours or 6 hours or 2 hours? That's why what we will do is, instead of departmental rate here, we'll calculate machine hour rate. How to calculate that, sir? Very simple. There are two types of machine hour rate. Ordinary machine hour rate or normal machine hour rate. One more is composite machine hour rate. Ordinary machine hour rate or normal machine hour rate means you will take only machine related expenses. Power and fuel, depreciation on machine, insurance on machine, all these things, repairs and maintenance. Whatever you incur to the particular machine directly, machine expenses, that we will take, and that we will divide by respective machine hours. That is one. But majorly what we will use is composite machine hours. What? Composite machine hours. In composite machine hours, what we will do, sir? We don't only take machine related expenses, we also take the department expenses and charge it to those machines, like departmental rent, standing charges, departmental rent, departmental lighting, machine operator, supervisor salary, all these things will come now. Those things also will consider while calculating machine hour rate as a machine expense. That we call it as composite machine hour rate. Hope it's clear. Difference you got to know. In normal or ordinary machine hour rate, we will take only and only overhead relating to that particular machine. In the composite machine hour rate, we will take whatever is incurred by that particular department. Hope it's clear. Pakka. And how to arrive at effective machine hours, sir? Very simple. Total machine hours minus setup time. Normal setup time. Normal loss. Just like your labor only. Effective machine hours. Okay. Sir, machine hour rate we computed. Then what we should do? We should charge it to the final product on the basis of machine hours utilized by those products. Got it? And always remember, power expenses, unless and until they clearly tell in the question, power is consumed during setup also. Always remember, during setting up, power is not consumed. While setting up, power is not consumed. Hope it is clear. These are the concepts of the overheads chapter. Hope it is clear. Okay, no? So shall we see few questions now? Tell me now. Director's remuneration and expense form part of what kind of overhead, sir? It is admin overhead. Right? Director's remuneration, administration purpose. Next. Two A na. Oh, this capacity thing I didn't explain. Listen, there are different type of capacities are there. One is called as installed capacity. We also call it as maximum capacity. We also call it as theoretical capacity. What do you mean by this, sir? This is the maximum how much we will be able to work. Practically not possible. Theoretically, technical estimation. For example, in 365 days, we can work for 2 shifts of 8 hours each. How many hours it is? 5. Now, this is your maximum capacity. But can you really work for 365 days? So now let's say 365 days we can't. Theoretically we can't. Practically how many days we can do, sir? Let's say in that 365, 52 Sundays we can't work. Other 13 holidays we can't work. Practically speaking. Now around 300 days we can work, no? So practically how many hours we can do, sir? 300 days into 2 shifts. Guys, each and every shift, do you think 8 hours we can work? In between break is required, no? So let's say in each and every shift we can work for 7 hours. 4,000. Guys. This we call it as practical capacity. What we can actually achieve, whether achieved or no, that doesn't matter. What we can actually achieve, that we call it as what? Practical capacity. Okay. Now listen. 5840 was maximum what we could have achieved. 4200 is practically what we can achieve. Now, this 640, 1640 difference is coming now. Because of what? Because of 52 days, Sunday, 13 days normal holidays, 1 hour normal lunch break, etc. Can I tell all these as a normal idle time? 52 Sundays, normal idle time. Yes or no? So remember, from the maximum capacity, theoretical capacity, if you reduce practical capacity, you will arrive at a normal idle time. But actually worked only for 4000 hours, sir. Then this is actual capacity. The 200 extra hours what we didn't work over and above the normal loss. This is your abnormal idle time. This is your abnormal idle time. Hope it is clear. And also there is something called as normal capacity. What is normal capacity, sir? Here we took this particular years. Only 1 year's data we have taken. If we take the trend, then 4-5 years data we take to determine the capacity what we can achieve. That we call it as what? Normal capacity. If we take the trend for 4-5 years, average of that we call it as normal capacity. If at all practical capacity is not there, your installed capacity minus normal capacity will give you normal idle time. If the practical capacity is there, then installed capacity minus practical capacity will give you normal idle time. Hope it's clear. Pakka? Or normal idle time, normal loss. This thing. Determine the installed capacity and normal capacity of production department. How to determine? Very simple. Next. Hope that is clear. Measures Lotus Inc. manufactures the fountain pen called Pluto. In the manufacturing of Pluto, the overhead were recovered at a predetermined rate of 25 per man day. So predetermined rate means absorption rate. Other information for the month of April. Total factory overhead incurred. This is your actual overhead. Man days actually worked 2,97,200. We are going to recover overhead on actual hours basis. Our actual days into 25. How much we are going to absorb? $74 lakh? Huh? 74 lakh 30,000. Got it? Your actual overhead is 83 lakh. Absorbed overhead is 74 lakh 30,000. Moral of the story, it is under absorption. Under absorption. How much? 8 lakh 70,000. Total units manufactured is 80,000. In that, units sold are 60,000. Moral of the story, out of produced units, 20,000 units are still with us only. Closing stock of finished goods. Also, 60,000 WIP is there, which is 60% complete. Guys, you can't take that is equal to produced units, right? So you have to convert it into how much it will be equal to produced unit kind of thing. That is 60,000 into 60%. 36,000. So try to understand. Total units you manufactured during the period is 80,000 finished goods plus 36,000 equivalent WIPs. Total you are producing 1,16,000 equivalent units during the period. Hope it is clear. Yes, on the analysis of the reason, it was found that 40% of the unabsorbed overhead were due to defective planning and rest were attributable to increased overhead cost. You, as a required qualified cost accountant, are asked to suggest how would you unabsorbed overhead be treated? How would unabsorbed overhead be treated in the cost accounts? Very simple. How much is the underabsorbed overhead? 83 lakh minus 74 lakh 30,000. 8 lakh. 8 lakh 70,000. This we are going to divide between 2. Normal reason, abnormal reason. Abnormal reason because of fault in the management and all. We are around 40% is attributable to that defective planning. So 40% of 8 lakh 70,000. Qualified cost accountant in Inter exam. How much? 3 lakh 48,000. 60%. Now listen, this 3 lakh 48,000 will go to costing P&L. As it's a loss, of course, we are going to debit it there. Okay. Now, this 5 lakh 22,000, we have to find out a supplementary rate. How to find out supplementary rate, sir? How much is the extra overhead we have to charge? How much is the extra overhead we have to charge? Divide it with equivalent units. Equivalent units we compute it as 36,000. Right? Sorry, 1,16,000. 4.5? 4.5 per unit. Got it? Now try to understand. Already sold units we have debited to COS. Sir, when did you debit and all, sir? I will tell in the next chapter. When debit, when credit. COS basically cost of sales we transferred. Sold units. How many units are sold units? 60,000. So to the cost of sales we are going to charge 4.5 rupees extra. How much? 2,70,000. And 20,000 is there in the finished goods account as a closing. So finished goods account I am going to debit 20,000 into rupees 4.5. 90,000. And to closing stock of WIP, we have almost equivalent 36,000 units because 4.5 is for the finished goods, not per unit of WIP. So don't take 60,000 into 4.5. Take 36,000 into 4.5. 1 lakh. Hope it's clear. This is how you are going to account for under absorption. Just check total is coming to 870,000. Hope it is clear. But in the answer key it won't match. And the same thing they have added to study mat also. Same answer key they have taken, which is wrong. Sir, but in the examination we should write what they expect us to write. No, because I'm telling it's wrong. Because in the next examination they have rectified it. In one more PYP they have rectified it. That we will see. Okay. Hope this is clear. Hello? Is that clear or no? Next question. Turn on the fan, no? Here you can see that whole, thank you, whole 8,70,000 they are charging to cost of goods sold, that is cost of sales, closing stock of finished goods, closing stock of WIP. Okay. Next question, please. MCQ. Thirteenth one. Following information is available. You are supposed to calculate supplementary recovery rate. Guys, overhead incurred is 3 lakh, recovered is 2 lakh. Rupees 1 lakh is under absorption. Correct? That should be distributed in this ratio. So per rupee, how much we should charge is the question here. So 1 lakh divided by 12 lakh 50,000. Rupees 0. We should charge 5 lakh into 0.08, 4 lakh into 0.08, 3 lakh 50,000 into 0.08. Next up. ACB manufactures a product A at the rate of 80 pieces per hour. The company has been producing and selling 1,60,000 units annually since last 5 years. However, during the current year, the company was able to produce only 1,46,000 units. The company's annual fixed overhead for the current year amounted to rupees 5,84,000. Company works on a single shift only 8 hours per day, 6 days a week. The company has declared 13 holidays. The quarterly preventive maintenance repairs work involves 77 hours. Calculate the maximum practical, normal, actual capacities for the current year in terms of hours. Very simple. First we'll compute maximum. Try to understand. 365 days. We are expecting them to work for 8 hours. How much is maximum? 2,000? But practically, can we able to do that? The answer is no. Why, sir? In that 1 year, in a week, how many days we are working actually? 6 days we are working. Only 6 days we are working. Which means 52 days is gone in Sundays. Okay. 13 holidays. 65 days is gone. Which means we are working. We can work 300 days of 8 hours. However, whatever in this, in that again 77 will go as a maintenance and repairs. 2,300 and this is your practical. Normal, try to understand. They have told that 1,60,000 units annually we used to produce for last 5 years. Which means 1,60,000 where each and every hour we were able to produce 80 units. So 1 hour we used to take to produce 80 units. How many hours we used to produce? We used to take to produce 1,60,000 hours. So normal hours are 2,000 hours. Normal hours were how much? 2,000. Actual capacities. Actual capacity is how much? They are telling during the year only 146,000 units are produced. In 1 hour 80 units, 146,000 how much? 1,825. Got it? Calculate the ideal capacity hours. Here you can compare maximum with practical, maximum with actual, maximum with normal. Compute the hourly rate for recovery of overhead for each capacity computed in 1. That is, we are going to divide 5,84,000 with 2920, 5,84,000 with 2323, 5,84,000 with 1825, 5,84,000 with 2000 hours. And one more thing, guys. If at all overhead they are going to give it as a fixed and variable, always remember fixed will be absorbed on the basis of normal capacity. Fixed will be absorbed on the basis of normal capacity. Variable will be absorbed on the basis of actual capacity. Always remember that. If at all they give fixed overhead and a variable overhead separately, then always remember while absorbing recovery rate computation, for computation of fixed overhead recovery rate, compute normal hours basis recovery rate. If it is variable, compute recovery rate on the basis of actual capacity. Got it? This one is 3A na? Anything else is there? One second. I think we got 2920 for maximum, 2092 for practical. We got 23 something, no? Normal 2000, actual 1825. Practical we didn't get 2092, right? We got 2092? Quarterly preventive, which means 77 is for 3 months. For 1 year, how much it will be? 77 into 4. 308. How much it will come? 2. Huh? 2009. Got it? I think actually we got 1825 only, right? So second one and third one, they have computed idle capacity and hope it's clear. Fine. Next, MCQ first one. Dash is the method dealing with overheads which involves spreading common cost over cost center on the basis of the benefit received. Apportionment, no. Next. Three, no. Moon Limited has 3 production department and 2 service department. The overheads of the following is so much. Working hours of production department A is so much, B is so much, C is so much. Given the 2 service departments cater to need of the 3 production department, in this one, calculate the total overhead production department distribution cost service department by simultaneous equation. Calculate the overhead rate per production department. Very simple. So I will take overhead of service department X as X, that is equal to 46,250 plus 46,250 plus for X, Y department's 10% is coming. Here the mistake won't happen if you take it in ulta also. But yeah, 46,250 plus 10% of Y department, 0.1 Y. Y it will be 15,750 plus 10% of X. 1 in 2 or 2 in 1? 2 in 1 na. So X is equal to 46,250 plus 0.1 into 15,750 plus 0.1 X. X is equal to 46,250 plus 1,575 plus 0.01x guys, remember. So x minus 0.01x is equal to 47,825 na? Correct? 0.99x is equal to 47,825. X is equal to 48,308. So y will be how much? 48,308 into 0.1 plus 15,750. 20,000? 580 now. 580. 581 now. Okay. Now, primary distribution for ABC is 3,02,000, 2,88,000, 3,86,000. Now we'll distribute first department X to A, B and C as 20%, 30%, 40%. X 48,308 into 20%. Sorry? $48,308 into 30%. 14,000. 48,308 into 40%. 8. 343. Department Y. There is 20,581 as 40, 20, 30 percentage. 20,581 into 40 percentage. 8,232. 4,116. 30% please. 6,170. Okay. Total overhead of production department A, can you tell? After reapportionment. 17. 894. Next one. Every time I can't tell that. What I have written there? How can you leave the primary distribution overhead? There is not overhead. Next. Last time also you did the same mistake. $4 lakh? 4? Got it? Now, recovery rate for A, 3,19,894 divided by 12,452. $3,19,894 divided by 12,452. Sorry? $3,06,608 divided by 8056. 38.06. 4,11,497 divided by 8132. Got it? No doubts? Any other questions? $25.69, 38.06, 50.60. We got that much only. Oh. Next. December 24, 3 na? No MCQ. Dozen Limited manufactures a single product. It recovers factory overhead at a predetermined rate. They're asking you to analyze the unabsorbed overhead. Same type of question. Listen here. 20 rupees per man day we are recovering. During the year, total factory overhead incurred is 35,50,000. That is your actual overhead. Correct? 1,50,000 RC is actually man days worked, it seems. So 1,50,000 into 20, 30 lakhs. So actual overhead is 35,50,000. Absorbed overhead is 30 lakhs. Moral of the story: under absorption of rupees 5,50,000. Under absorption of rupees 5,50,000. Correct? Out of the amount 35,50,000, ayyo. Try to understand. Out of the amount 35,50,000 actual overhead, 2 lakh was due to strike period. I told you, you should exclude all these things while you are arriving at the actual overhead. So 2 lakh should be reduced because of strike period. 1 lakh was previous year's expense booked during the period. So moral of the story, actual overhead is 32,50,000. So under absorption is 2,50,000. Remember, I told you this, what and all, absolute, strike period, all these things. During the period, 50,000 units were sold. Awesome. At the end of the period, 12,000 completed units were held in stock. There was no opening stock. Moral of the story, we produced 62,000 finished goods in total. Correct? No? 60,000 we sold, 50,000 we sold, 12,000 we held in stock where there was no opening stock at all. Moral of the story, we produced 62,000 units. Similarly, there was no stock of uncompleted units at the beginning, but at the end, there is 20,000 units, which is 65% complete. So, equivalent units, please. 20,000 into 65%. Total equivalent produced during the year is 75,000. Got it? On investigation, it was found that 40% of the unabsorbed overhead due to factory inefficiency. Awesome. Out of 2,50,000, I am going to take 40% to the costing P&L straight away. 1 lakh. Remaining 1,50,000 is there, no? That we are going to calculate supplementary rate rupees 2 per unit. Calculate the amount of unabsorbed overhead rupees 2,50,000. Analyze the accounting treatment. Very simple. This one I am debiting to costing P&L. Okay. Here to cost of sales I am going to debit relating to sold units. 50,000 into 2 rupees. 1 lakh to the cost of sales. Cost of finished goods, closing stock. 12,000 into 2. Cost of WIP. 13,000 into 2. Hope it is clear. All these will be debited because it's under absorption. Any other question? Sorry? In this nothing is there. This was 3A, right? See here. Only 1,50,000 they are taking to this one. Here for costing P&L they are taking and going 1 lakh. Here they have done correctly. Okay. So stick to this one. Next up. Sorry. June 25 no MCQ. Okay. (3A). Following details are taken from the books of ABC Limited for the month of October. Indirect material, indirect wages, other expenses they have given. Indirect material, indirect labor they have given directly. Try to understand. This is allocation, not apportionment. Allocation, because for each and every department how much we know. Other expenses they have given. What they are asking? Prepare a departmental distribution summary showing apportionment of cost to production department and total overhead of production department. They are asking apportionment. Okay. Now listen. Other expense, power and light is there. On what basis we can absorb? Sorry, apportion. Can I tell area of area? No, I mean this thing, power and lighting. Can I take it on the area basis? Yes. Also, yeah, power, if you treat it as a relating to machinery, then you can take kilowatt hours also. Rent and rates, area. Insurance of the asset, capital value. Meal charges, number of employees. Depreciation, 6% of capital value of asset. After that, see there, service rendered by maintenance department to production department, XYZ. Stores to production. Try to understand. So they are telling it's a direct redistribution. Because no other service department providing service to other service department. Easy one. Can you do it on your own? Oh. Any other question? What? MTP which one? December 23, set 1. Huh? MCQ 8th. Selling and distribution are absorbed on the basis of rate per unit, percentage on works cost, percentage on selling price, any of the above. Percentage on selling price. Rate per unit, that also could be done. Sold units basically. You can take it either A or C. 3A. Company has 3 production cost center and service departments are X and Y. Cost allocated to service centers are required to be apportioned to the production center to find out the cost of production to a different product. It is found that benefit of service cost center is also received by each along with the production cost center, which means they are telling it reciprocal in nature. Overheads are allocated to the 5 cost center and estimate of the benefit is as follows. So primary distribution they only have given here. Estimate of benefit received from service department in percentages. X department providing 10% service to Y, Y department providing 5% service to X. Compute the final overhead cost for each production department including reapportion under continuous simultaneous equation. Continuous distribution means repeated redistribution. Okay, can you do it on your own? Yes, always remember, but repeated redistribution percentage. Sorry, repeated redistribution ratio, because otherwise it won't get segregated. Simultaneous as well as trial and error, it is percentages. Next. Set to MCQ 3. Charging to cost center those overhead that result solely for the existence of that cost center is known as allocation, direct. Next up. The following is not treated as a manufacturing overhead. Lubricants, cotton waste, apportioned administration overhead, apportioned administration overhead, night shift allowance, all this will be taken. Next up. 3A na. Summary as per the primary distribution they have given. Expenses of service department to be show under repeated redistribution. Can keep doing until it becomes negligible. You will get ABC total there. Absorption means Charging of overhead to cost center, charging of overhead to cost unit, charging of overhead to cost center or cost unit, none of the above. Charging of overheads to cost unit. Charging of overhead to cost center, we call it as allocation and apportionment. Next up. No descriptive. December 24, set 1. Sorry. 6th one. Which of the following is a scientific and accurate method for calculating factory overhead? Percentage of prime cost, machine hour rate, percentage of direct material, percentage of direct labor cost. Machine hour rate is more appropriate. I told you to prioritize certain things now there. Next up. Normal capacity of the plant refers to the difference between maximum capacity and practical capacity, maximum capacity and actual capacity, practical capacity and estimated idle time as revealed by the long-term trend. Option C. Next. 11th. Is budget. Administration overheads are usually absorbed as a percentage of cost of production or works cost also possible. That depends on COGS is also there. Basically depends on what admin overhead it is. Generally, if it is COP is the more accurate, you can tell. Okay. According to what they have taken, works cost they have taken. They have treated it as related to production. Next. In a manufacturing unit, overheads were recovered at a predetermined rate of 25 per man day. Total actually incurred is 41,50,000, where actually we have worked is 1,50,000. So 1,50,000 into 25. 37. Overhead actually incurred is 41.5. 4 lakh is under or over absorption, under absorption. Okay. Out of the 40,000 units produced, 30,000 units were sold. So total 40,000 units we produced. There were also 30,000 incomplete units which are 66.67% complete, which means around 20,000 are the equivalent WIP. Next up, on analysis the reasons, it was found that 40% of the unabsorbed overhead were due to defective planning and the rest were attributable to increase overhead cost. So 40% they have fixed it, right? So how much it is? Now under absorption is how much? 4 lakh. In that 4 lakh, we are going to divide between 40% and 60%. 1.6, 2.4. 2.4 to be calculated supplementary rate. 2,40,000 divided by 40 plus 20, 60,000 rupees per unit. Correct? So to COS we are going to transfer 30,000 into 4, 1,20,000. Finished goods 10,000 into 4, 40,000. WIP 20,000 into 4, 80,000. Simple. Hope it is clear. No doubts. Next. Set B in that 8B na. Set 2. Distinguish between selling overhead and distribution overhead. Selling overhead primarily focuses on the sales and promotional activities, whereas distribution overhead primarily focus on logistic and physical distribution of product. Selling overhead includes expense of sales team, advertisement, promotional, whereas distribution associated with warehousing, packing, transportation. Selling is often incurred before the sale, whereas distribution incurred after during the physical movement or delivery of the goods. Like selling overhead has direct impact on the sales, whereas distribution has impact on product delivery and customer satisfaction. Next. Dash is the method of dealing with the overhead, spreading common cost to apportionment. Next. Sixth one now. Done. Next. Done. Next. Sorry. This we have done already. What second one? Next one. Absorption costing is also treated as traditional costing. Modern costing is activity based costing that we are going to learn in your management accounting. Next up. Which method of absorption of factory overhead do you suggest in concern which produce only uniform type of product? Only one type of product is produced. Percentage of direct wages, direct labor rate, machinery rate, rate per units of output. When you are producing same kind of product, you can go for rate per unit. Okay. Oh wait, that is final. They are talking about selling price of the finished goods. You can take it as a direct percentage of direct wages. Percentage of direct wages. All these are the rates that. Next. Normal capacity refers to difference between practical capacity and estimated idle time. Blah blah blah. Correct? Next. Sorry. If at all in that question, if at all they are given based on the number of units produced, then you should take that, because each and everything are same now. So per unit you are going to charge. 3A machinery rate. In a machining department of a factory, there are 5 identical machines. This is, I think, study mate question. 5 identical machines are there. Total department space is 10,000. In that each and every machine is occupying 2,000 square meters actually. Cost of machine is 20,000. Scrap value is 300, which means depreciable value is 19,700. Estimated life is 13 years. Depreciation charged at. Now all these information is useless. Directly you can apply 20,000 into 7.5% to arrive at a depreciation. 1,000 depreciation per annum is 1,500. Normal running of machine is in a year it is 2,000 hours. Power consumed by the machine as shown by the meter is 3,000. Estimated repairs and maintenance throughout the working life of the machine is 5,200, which means throughout the life, that is for 13 years. For 1 year question mark. Sundry supplies including oil, waste, etc. charged directly to the machine amounting to rupees 600. Other expenses, rent and rates, that is for the department. per machine you can calculate by taking 2000 by 10,000. Lighting to be apportioned on the basis of workers employed. Okay. Supervision, that also should be on the basis of number of workers. Other charges, that is miscellaneous in nature. It is ascertained that degree of supervision required by the machine is 2/5 and 3/5 to the other machines. So for our current machine it is 2/5, which is basically 1250 into 2 by 5 will be for this particular machine. There are 16 workers in the department whom 4 will attend the particular machine and remaining is that one. Prepare a machine hour rate for the thing. Simple one it is, nothing special is there. See there, standing charges, rent and rates 9,000, 1,800. Lighting, they have told on the basis of employees. So 400 into 4 employees for this particular machine divided by 16, 100. Supervision, they told 2/5 they have dedicated to this machine. So 1250 into 2 by 5, 500. Other expense, 5000 is there. They haven't given a basis. So I am going to charge equally to all the machines, which is 1000. Machine expense coming to depreciation, I showed you 1500. Repairs and maintenance, 400. Sundries, they only have given 600. Power, they only have given 3000. Total machine expense is 4500. Total cost per annum is 8900. That should be divided by machine hours, 2000 on an average. So machine hour rate will come to 4.45 per. Hope it is clear. Just go through that once, okay? After going home. Machine hour rates. Next up. MCQ. Maximum possible productivity capacity of a plant when no operating time is lost is. No operating time is lost. Practical capacity. Only normal idle time is lost. Correct? Next. 3. The following particular relating to a processing machine treating a typical material, you are required to calculate the machine hour rate. Total cost of the machine 10,000. Estimated life 10 years. Scrap value 1000. So 9000 divided by 10. 900 is the depreciation per annum. Keep that thing in mind. Working time 50 weeks we will work at 44 hours each, which is 2200. Machine maintenance per annum is 200. Okay. Setting up time 5% of the total productive time. So how much productive time is there? Of that 5% is what? Setting up time. Electricity is 16 units per hour at 10 paise. So how many hours we are working? Of that, for each and every hour you are going to consume 16 units into 0.1. Chemical required weekly is 20. Maintenance cost per year is 1200. 2 attendants control the operations of the machine together with the 6 other machines. So they are operating 6 other machines together. Their combined wages is 140. Okay. Departmental overhead allocation to the machine per annum is 2000. That is standing charges. I just show it here only. Oh, this is not there. Textbook. It's there, no? Page number. Sorry, which one? See, their annual working hours available are 2200. Of that, maintenance will go is 2000. So production hours available is just 2000. So setup time is 5% of that. So effective hours available to work is 1900. Got it up. So see there, chemical solution 20 rupees per week. For 50 weeks it is 1000. Attendance wages we are paying them 140. Correct? 140 only, no? $140 we are paying. So 140 for week. So for 50 week it is something, but they are not providing service to only one machine. They are providing service to 7 including hours. So per machine how much it is? 1000. Departmental overhead they are only have given. Total standing cost will come to 4000. 4000 divided by, always remember, not the final hours. You should consider annual working hours available. 1.82. Next, coming to machine expenses, depreciation is there. I told you 900. Maintenance, they only given, no? No? $1,200. 1200. Power will be 16 units per hour, which is 1.6 per hour. Total cost will come to 4.52 per hour for machine running. Hope it is clear. MCQ. Director's remuneration is admin overhead. Next. Self-help limited generates and produces its own power data for the power cost. Production department is there, service department is there. Horsepower needed at capacity production used during the month of May. So make it as horsepower needed at capacity production. At capacity production, this is used in the month of May, which means, try to understand, first one they are talking is normal hours. First one they are talking is normal hours. Second one they are talking is actual hours. During the month of May, cost of generating a power came to 9,300. Of this, 2,500 to be considered as fixed. So 9,300 minus 2,500. So variable cost is 6,800. Fixed cost is 2,500. Department X renders service to other department in the ratio of 13:6:1, while Y renders service to A and B in the ratio of 31:3. Given that the direct labor are in department A and B are so much, calculate the power cost per labor in each of this department. As I already told you, if you remember, fixed overhead will be taken on the normal capacity. Variable overhead should be taken on the actual capacity or actual usage. Now, fixed 2,500 should be divided in the ratio of 10,000, 20,000, 12,000, 8,000. How much it will be? $2,500 ratio will be 4, 6, 10, 5, 25. 2,500 divided by 25. Per unit you are getting 100, right? 5 into 100, 500. 10 into 100, 1000. 6 into 100, 600. 4 into 100, 400. Remaining was variable, right? Variable was how much? 6,800. 6,800 in this ratio. That is 8, 13, 7, 6. 8, 13, 20, 28, 34. So 200 if I am not wrong per unit. 6,800 divided by 34. 200, right? 200 into 8, 1,600. 13 into 200, 2,600. 1,400. 1,000. Hope it is clear. Now we got a primary distribution. 2,100. 3,600. 2,000. Primary distribution. Correct? Now secondary. Department X render service to other department in the ratio of 13:6:1. So 2,000 in the ratio of 13:6:1. 13:6:20, right? So it is 1,300, 600, 100. Hope it's clear. Hello? Clear or no? Have you got? Sorry, 100. Next, why it is total is coming to 400, 1,200, 1,600, 3,200, 3,300, right? 3,300 or 400, just check. 300 only, no? That in the ratio of 31 and 3. Huh? 3,000? 8. Next one. Correct? Now, total overheads here. $2,100 plus 1,300 plus 3,008, 3,600 plus 600 plus 292. 8,508. Which one? Correct. Which question it is? This one, no? They have taken it as? How much we have taken? Because we added that again, total is not 3,300. 1,700. Ayyo jatre. What is this, Meghna? So total is 3,400, 4,200. This 2,000 is gone, right? So it is 1,700. Now 1,700 in the ratio of 31 and 3, that will come to 1,550 na, and total 4,950, 4,350. So 4,950 divided by 1,650. Sorry, 3 per hour. 4,350 divided by 2,175. What? 500. 2100. 1300 it is. Huh. How come 3300? Which one? Oh, that old one you are telling, correct. Old one, okay. Super. Hope it's clear. That's it? Nothing else? All questions also done, na? Done. So, fine. We'll take a break now. 10:20. We'll start at 10:45. Which chapter shall we start? 25 minutes. I don't care whether you drink coffee, whether you eat, whether you have lunch. Normally 30 minutes is the class time break. But this is revision. Oh, okay, take 30 minutes. 10:30, 10:50. So, listen, now we'll revise contract costing. So basically, it is just like job costing only, but the thing is, whatever we take in the job costing, that will be for the shorter duration. Where when the thing starts in the, like, things will be there for the longer duration. The contract will be of the longer duration. Generally, we are going to apply or we are going to use method of costing that is called as contract costing. Okay, that is called as contract costing. So basically, this is nothing but a job costing, which is applied to relatively large cost unit that take a considerable amount of time to complete. Generally, your construction contracts and all. Okay. And guys, there are three different types of contracts. One is fixed price contract. One more, contracts with escalation clause. One more, cost plus contracts. Fixed price contract, contracts with escalation clause, cost plus contract. Fixed price contract means basically, let's say I am the constructor, you want me to build one house, then you will come and tell, I want to build one 2 BHK house. I will be like, okay, 80 lakh rupees you pay, I will build and give 2 BHK house. Now, whatever might be the cost, etc., if I build it as per the plan, you have to pay me 80 lakhs. Whether I might make profit or you guys might end up making profit. Okay. So this thing we call it as fixed price contract. Contract price will be fixed. Contracts with escalation clause. I will tell you guys, okay, pay me 60 lakh rupees for the contract. However, there is a possibility of prices increasing. Material price, labor price, all those things, possibility of increase is there. So do one thing. 60 lakhs you give, plus if at all any increase or decrease in the prices of the material, labor and all will come, you have to bear it. So that thing we call it as contract with escalation clause. Contract with escalation clause. That is provision for the increase in prices, etc. has been given. Cost plus contract is a risk-free kind of contract. I will tell you guys, see boss, I am not going to lie. To construct whatever you are asking, it will take 55 lakh rupees. However, that is expected cost. Whenever, whatever might be the cost, I don't care. You want quality, right? I will give you quality, best quality. But the thing is, after construction, whatever the cost will be, of that 20% you should give me as a profit. That kind of contract we call it as cost plus contract. I am damn sure I am not going to lose anything. Whatever the cost we incur, over and above the 20% you have to give. For you guys also quality will be taken care. Got it? So, few other important terminologies are there. That is WIP. That is contract not yet completed, but it's in the process. Okay. In that WIP, it could be work certified, work uncertified. What do you mean by that, sir? Guys, work certified means, let's say I have taken contract of 80 lakh for your house, right? Now let's say I have completed work. I have completed, let's say 60% of the work. I have completed 60% of the work. Now when I have completed 60% of the work, according to me, value of the work completed, value not cost, because 80 lakh is not cost, 80 lakh is contract price, contract value. According to me, the work completed is worth rupees 48 lakhs. But you sent to an engineer or some independent engineer. They came and they checked the work and they are like, boss, 50% work is completed. How many percentage work is completed? 50% work is completed. Now, out of 80 lakhs, 50% of the work is completed. That means work certified is 40 lakhs. Work certified is 40 lakhs. Hope it is clear. So value of the work certified is 40 lakhs. Sir, what was the total cost for this so far? Let's say we incurred a total cost of around 36 lakhs. We incurred total cost of how much? 36 lakhs to produce 48 lakhs values work, but which is certified only 40. Now in this 36, can I tell that out of 60, see, try to understand, 36 lakhs we have incurred, correct? For 60% of the work. That means 50% is only certified. So how much is the cost of work certified? 30 lakhs. Sir, what is wrong with you? Earlier you told 40 lakh, that is value of work certified, that includes profit element in it. I am telling cost of work certified is 30 lakhs. Sir, but you actually incurred 36. Work certified is only 30. Actually we incurred 36. Work certified is only 30. Cost of work certified is only 30. What about that 6 lakhs, sir? Remaining 6 lakh, that only we call it as, very good, cost of work uncertified. Profit. Cost comparison is profit. Got it? So out of total cost, if you reduce the cost of work certified, remaining whatever will be left, that is cost of work uncertified. Hope it is clear. Okay. Now work certified is to the extent of 40 lakhs. Correct? Will they give us full money? They are not idiots to give us full money. Correct? Let's say they give only 80% of the money. So cash received will be around 32 lakhs. Cash received will be around 32 lakhs. Sir, remaining 8 lakh rupees of the work certified, which the cash is not yet received. What we call it, sir? We call it as retention money. We call it as retention money. Hope it is clear. Now, listen. Out of this 36 lakh, I divided it into 2. This 36 lakh, we divided it into 2. 30 lakh, 6 lakh. This is cost of work done, not work certified. Cost of work done, that I have divided into 2. Cost of work certified, cost of work uncertified. Cost of work uncertified, cost is matching. Forget about it. Guys, this is cost of work certified. Value of work certified is 40 lakhs. Hello. Cost of work certified is 30 lakhs. Cost of value of work certified is 40 lakhs. 10 lakh is profit. Correct? But I can't book it as profit. Why, sir? Because it is not yet realized. Not yet realized. Conservatism. It is not yet realized. That's why this thing I call it as notional profit. What we will call it as? Sir, what if it was loss? Immediately I would have realized it as a loss. Immediately I would have pushed into loss, P&L. But here, this 10 lakh directly I can't push into the profit because it's a notional profit. Contract is still going on. Till contract gets over, we don't get actual profit. Correct? Now, okay, sir. So this 10 lakh, what we are going to do if you are not going to book it as profit? See, I agree conservatism, blah, blah, blah and all. But deep inside we know that profit is there. Correct? No? Deep inside we know that profit is there. But still conservatism to be kept in mind. So what we will do is, this notional profit will divide it into two parts. Notional profit will divide it into two parts. One, profit element in it. One more is provision. One is profit, one more is provision for contingencies. Now listen. So what you are going to do, sir? Guys, there is one rule. What is it? If at all your work certified is less than 1/4 of the work contract price. Your contract price was 80 lakhs. Let's say work certified was less than 20 lakhs. Work certified was less than 20 lakh. Whatever the notional profit is there, no? Everything you should treat it as a provision. Everything you should treat it as a provision. Sir, what if work certified is somewhere between 20 lakhs to half of the contract, that is 40 lakhs? What if it is somewhere between 20 lakhs to 40 lakhs? I mean, exact 40 lakhs, next less than 40 lakhs. Greater than or equal to 20 lakhs, greater than or equal to 20 lakhs, lesser than 40 lakhs. See, in my example I am telling, that is nothing but I am talking about greater than or equal to 1/4 of the contract, but lesser than half of the contract price. If work certified is this much, then 1/3 of the notional profit shall be transferred to profit. What about remaining 2/3, sir? 2/3 of the notional profit shall be kept as a provision. Kept as what? Hope it is clear. No doubts. Pakka. 200%. No doubts, no? Now listen. Sir, what if it is greater than or equal to 40 lakh? That is greater than or equal to half. Then 2/3 of the notional profit shall be transferred to profit. 1/3 shall be kept it as provision. 2/3 shall be transferred to 1/3 shall be kept it as. Any doubt? Pakka. 200%. Peace. But if at all question is talking about cash retention, hello, if at all question is talking about cash retention, then you should make sure while taking profit, relating to that retained amount, you are not going to take. Relating to that retained amount, you are not going to take it as a profit. What do you mean by that, sir? Let's say in our example only. Notional profit is 10 lakh. Correct? Work certified is 50% of the contract. 40 lakhs. That means I can transfer 2/3 to the P&L. However, we know that 20% of the cash is retained. So you can transfer only 80% here. Hope now you understood what I'm trying to say. This will be transferred to P and L. This will be transferred to P and L. How much it is? 5 lakh 333. That will be your profit transfer to P and L. Sir, remaining 4,66,667 where it will go, sir? WIP, but debit side as a provision for contingencies. As a provision for contingencies. Hope it is clear. Sir, where it will get adjusted? Very simple. There I took it as 40 lakh, no value. From that again 466, 667 will get reduced. Simple. Because of that your WIP will be showed less. Because value of WIP is as good as your sales, no? Hope it is clear. Sir, what if contract is almost complete, sir? If that is the case, profit generally will transfer not on the basis of notional profit but on the basis of estimated profit. What do you mean by estimated profit, sir? Let's say now 95% of the contract is, how much is done? 95% contract is done. How much was the contract price? 80 lakhs. Correct? Now we already incurred a cost of 57 lakhs. We have already incurred a cost of 57 lakhs. How much is done? 95% is done. Almost done. Now what we will do, sir? See, but in question, unless and until they ask you to take the estimated profit, always take notional profit and finish it off. If at all separately they ask, then you should do. 57 lakhs is there, no? Now what I will try to do is, boss, see 57 lakh I have already incurred for 95%. Extra cost 5% is to be incurred. How much it will be? 3 lakh. Correct? So total expected cost to finish the contract is 60 lakhs. 80 lakhs is the value of contract. That means 20 lakhs is the expected profit. So we are going to book this 20 lakhs profit. We are going to book this 20 lakhs profit. So 20 lakh into work certified by contract price. If at all retention is there, then multiply with the retention price. No, sir, I don't want to do it on a contract price. They are asking us to do it on a cost price. Then whatever cost incurred till this date, 57 divided by total cost expected, 60. Sir, along with the cost, I want to take cash retained also, 80. Try to understand. I will tell. Now, how much is our expected profit? 20 lakhs. Correct? Now, one way to book it is 20 lakhs into, let's say work certified is 90%. Work certified is 90%. So 90% means it will come to 72 lakhs, right? 72 divided by 80. How much it will be? 18. One way of booking profit is 18 lakh. Sir, but retention is there, no, sir? Oh, retention of money is there into 80%. 14 lakh. Sir, we don't want to do it on a contract price basis. Let's say we want to do it on a cost basis. Okay. How much is the profit we got? 20 lakh expected profit. Correct? Cost incurred till this date is 57. Total expected cost is 60. 18 lakhs. 90%. Sorry, 95%. No, sir. Retention also you consider, no, sir. 20 lakhs into 57 by 60 into 80%. This was 19 lakh. 15 lakh Hope all the four you understood here. Yes, but remember here, if at all your contract is complete for less than 1/4, everything you are going to transfer to provision. No sir, somewhere between 1/4 to half of the contract, then 1/3 of the notional profit after adjustment to the cash retention should be transferred to profit. Balancing figure should go to provision. And if at all contract is complete for greater than or equal to half, 2/3 will go to P&L, remaining will remain in provision. Hope it's clear. That's it. And of course, few things like how the contract account will look, that I will show. Okay. So contract account, basically any other expenditure account kind of stuff, you can call it as. So debit all the expenses, credit all the incomes. Expenses, before expenses, there might be opening balance also. So you can write it as 2 WIP because work in progress only, no? Yes? Okay. And when you introduce material directly or whatever it is, 2 material. When you introduce labor, 2 labor. When you introduce overhead, 2 overhead, like that. Expenses will come. Got it? And listen, they might give plant and machinery used for the contract. Try to understand. You have to take the depreciation of that. No sir, they have given full value only. I have to take full value or no? No. Take debit side full value. Credit side balancing figure of that asset. Balance will be debit side you took 10 lakh. Credit side you took 9 lakh. What does that mean? 1 lakh debit? No. There is nothing but your depreciation. Understanding? And also, if at all we return any material, by material return we will write. If at all we transfer to other contract, we'll write it as by material transfer to other contract. Abnormal loss and all are there. Costing P&L straight away. Shortage, theft, fire, etc. Credit. Because it is not an expense anymore. It won't be treated as a contract cost. It should be treated as a loss. Transfer to costing P&L. In costing P&L, after recovery of insurance and all, balancing figure will be treated as loss. That you will leave. And any balance in the material and all are there, that you should take it in the credit side. Now debit side we get to know how much is the total cost incurred in that particular period. Credit side we get to know how much is remaining in that expense what we incurred. Debit side, how much is the total expense we incurred. Credit side, boss, what is remaining, still remaining in that expense. That means not yet utilized. So credit side balancing figure will be treated as, or debit balance we will treat it as, by cost of construction. By cost of construction. Then we will take cost of construction carried down, brought down. Okay. Now listen. Credit side, we have to compare it with the work we have done. We have to compare it with the work we have done to determine the profit, notional profit. Correct? So we'll take by WIP. WIP consists of what, sir? 1. Sure, boss, I have made some profit. That is nothing but your value of, not cost of work certified. You can't compare cost. Then where notional profit will go? Here it is fixed, no, like kind of already arrived, no. So it is value of work certified and cost of work uncertified, because that is not yet received or not yet certified. That's why we will take cost. So that's what I told. If you remember earlier, out of that 36 lakh, I divided 36, correct? That 6 will get adjusted here. That 30 is here, no? But the thing is, we have taken it as 40 value. Because of that only 10 will come here. That is nothing but your 2 notional profit. Hope it is clear. In WIP, you should take value of work certified, cost of work uncertified. Because value of work certified is as good as sales. In your normal trading account, sales you used to take at cost or sales you used to take at selling price? Selling price to determine profit, no? Same thing, value of work certified, take it at value, selling price, contract price, not a cost. Hope it is clear. Sir, what if cost itself is more, sir? Then it is by P&L straight away. Guys, don't do it as notional loss, sir. There is nothing called notional loss. If it's a loss, book everything. Finish it off. Got it. But if it's profit, it will be notional profit. Now, notional profit you are going to carry down. Bought down. By notional profit bought down. Here, I told you certain amount will go to P&L. Certain amount will be again reversed back in WIP. WIP means not from the anything, but as a provision for contingencies. That's it. Simple. Sir, once the contract gets over, no, sir, what you are going to do? Contract you should transfer, no. So far, contract was my asset. Contract was my asset. Now I am going to transfer my contract to you people. That is by contractee. You will become my debtor. Till now you are sitting in my creditor whenever you paid me money. Advance. But now you are my debtor. So contract account we will credit, contract account we will debit. In the contract account, whatever the balance will be there, of course it will be there as by balance brought down, because creditor kind of stuff, advance received. Now we transferred a contract to this. Now we'll find out how much we should receive in cash. Let's say already you paid me 48 lakhs. Now contract transferred is 80 lakhs. Now by cash 32 lakhs. This is how we are going to do in contractee account. By the way, contractee means the one who gives the contract. Contractor means the one who takes up the contract. We are thinking from the point of view of contractor. Why the hell contractee will do the books? Got it up? Hope it's clear. No doubts. Paka. And listen, this is one of the, actually in costing, I'm telling you, your whole group will be taken care by this particular paper. Because you know what are the other subjects are there in this. Law, tax, accounts. So accounts and costing are the papers which you can kind of rely on. Okay boss, these questions I know, these answers I know. If it's come like this, I know what to do. I know the concept. But tax and law, if at all they really want to trick the paper, easily they can trick it. Here, if you know the concept, they can't do much. Max to max, line here and there they might give. If you know the concept, easily you can solve. But in tax and law, it won't happen like that. So always remember, if you need the 200, these two are the papers which is going to help, which are going to help. And in that costing, I'm telling you, you are only seeing the PYPs, right? If you see the 4 PYPs, June PYP will get confidence. Try to understand. When you see that paper, you should be able to get that confidence. Okay, I can manage. In examination, nothing special they will ask and all. What is there, that only will come. So, that is the thing. So, you should work hard. And if at all you are able to get good marks in this particular paper, then whole group is sorted kind of stuff. Provided all other will get 40, 40, 40. Got it up. Because easily you can score 70 to 80 marks in this. Easily, if you practice well. That means whole group is taken care. All you have to get is 40 each in other papers. That's the thing. So, shall we see a few questions here? First one. June 23. 5. There is no MCQ. 5 A na.